Hello students, how are you? Hope so your preparation for the upcoming examinations are going very well. And to make your examination journey more fruitful, we are here with the rapid revision route. Yes, from the name itself, you may have recognized that these batches are a type of revision batches. Yes, rapid revision routes. First of all, I will tell you some features of this rapid revision route. Yes, in this rapid revision route, you are going to get the revision video clips of each chapter separately. Yes. So whichever chapter you want to study or you want to revise, you may directly see the video of that chapter. No need of seeing another videos. If you want to see the video of supply chapter, you may directly go to the supply chapter. If you want to see the video of time of supply, value of supply, you can directly go to that video clips instead of seeing other videos. If you require this video, you can also watch this video. Yes. And one disclaimer for this rapid revision route. Please, the students who have completely studied GST one time in detail. Yes, who have completely studied the GST subject one time in detail should watch these videos. The students who have not even yet seen the subject in detail are requested to keep their eyes away from these video clips. Studied the GST in detail one time in your examination journey can see this rapid revision route. So let us start with this rapid revision route. GST in India, an introduction. When we are studying this, the common word, the first word we have in our eyes is tax. Yes, the first word tax. So, what do you mean by the word tax? For the tax, earlier, when there used to be a kingdom of a king, a regime of a king, at that time, king used to charge the public living in the society, in the kingdom, a tax by the name Hindi word kar. Yes, there was a Hindi word kar. King used to charge kar from the public in the kingdom, and in return he used to provide them proper facilities, infrastructure, etc., etc. Yes, to the people living in the kingdom. Just like that, in the today, in the today time, government charge taxes as a source of revenue they collect from the public in the territory, and in return of this revenue government provide facilities, say for example defense, provision of education, healthcare facilities like road, dam, infrastructure, etc., which are a type of expenses for the government. Yes, in short, this revenue is being made as an expenses by the government for providing facilities to the common public living inside the territory. Yes, this is all about the word tax. Now, coming towards one thing, any act need a legal validity under India. Any act needs a legal validity, and the legal validity is given by the Constitution of India. So we are going towards one article of the Constitution of India, that is article number 265. Article number 265 says that no tax shall be levied or collected except by authority of law. So we will analyze this article first. No tax. The word tax itself has tax, surcharge, cess, everything in it. Yes, everything in the one word. Shall be levied or collected. Levy means to levy tax on a particular person and collect tax from that person. And this levy and collection should be done only by the authority of law. Only by the authority of law. Now, first of all, we'll see the word law. The word law has five things in it. The word law has five things in it. Number one, acts. Number two, rules. Three, notification. Four, circulars. And five, case laws. Now, act. When we are studying the GST, we have to study it in five acts: CGST Act, IGST Act, SGST Act, UTGST Act, and GST Compensation Cess Act. Again, with this act, there are some rules that we have to make an understanding of for a proper study of the act. Again, CGST rule, IGST rule, HGST rule, and UTGST rules. After that comes then important word notifications. From this word notifications, you may having a image of mobile having notifications on it. See the mobile. On your mobile, there is written one new message as a notification. It means notification is a type of a process in which new things come in front of you. We can say it as changes, amendments in law. So the changes and amendments in law are given through notifications in the official gazette. Yes. Next term comes the circulars. Circular means the clarification issued by the government in the official gazette on any provisions which are say a type of confusing provisions which are having a multiple meanings. The taxpayer is not knowing on which product or taxpayer this provision applies. Such things are being clarified by way of circulars in the official gazette. Now the last one, case laws. Case laws are the judgment made by the Supreme Court and the High Court in any disputes or any cases code for in which the provisions of tax are involved. Sometimes it may happen that the judgment of the Supreme Court and the High Court may overrule the provisions of the act. Yes. So in that things, in such type of situation, case laws will prevail. So all things together makes the law. The five things together make the law. Now, under the law, the authority should be there to levy and collect the taxes. Now see how the authority is being distributed. It is distributed under Article 246 of the Constitution of India, 7th schedule. Article 246 of the Constitution of India, 7th schedule. What this schedule says? An authority being union list, state list, and concurrent list. Union list is the list of the things in which the responsibility to make central government. State list is the list in which the responsibilities to make law is given to the state government. And concurrent list is the list in which the responsibility to make laws is given both to the state government and the central government. So this is how the authority is being given for levy and collection of tax in India by the Constitution, Article number 265 of the Constitution of India. Now, this is all about the authority. Now, coming towards the description of the word tax, it is being distributed in two parts, direct tax and indirect tax. In case of indirect tax, there is an example of income tax. In case of indirect tax, there is an example of GST and customs. Direct tax, like income tax, the burden wholly is being borne by the person earning the income. There is no shift of burden. The person earning the income is liable to pay tax on his income. It means there is a directly bears the incidence of tax. The person directly bears the incidence of tax. Now, after there is the term indirect tax. In this, the incidence of tax is being shifted from producer to the consumer. See here how the producer is being shifting the burden of tax to the final consumer. So there is a shift of burden of tax, but in direct tax there is no shift of burden of tax. Again, one more thing of differentiation between these two terms: progressive in nature and regressive in nature. Progressive means as your income will increase, your tax amount will also increase. Your income decreases, tax amount also decreases. And in indirect tax, in the case of indirect taxes, no matter whether you are rich or poor, everybody is going to pay the same amount of tax. There is an example of indirect tax also. So when you go to a store and purchase any type of goods, there is written in the MRP itself inclusive of all taxes. So, for example, the tax amount, the MRP is rupees 10. In this 10 rupees, there will be the tax amount inclusive of all taxes. So, when you are going to purchase this 10 rupees packet, either rich, either poor, both have to pay the amount of tax which is involved in this amount. Yes. This is all about the two terms, direct tax, indirect tax. Now coming towards the features of indirect taxes. What are the features of indirect taxes? Number one, it is an important source of revenue to the government. It is an important source of revenue government. Again, I will repeat the example. When anybody is going to a store to purchase any goods or any type of services, either rich or poor, everybody has to pay the tax. Yes, everybody has to pay the tax. It means there is no bifurcation. Whether you are having a low income, whether you are having a high income, everybody is going to bear the tax. That's why it is an important source of revenue to the government as compared with the direct tax. Here, point number two, tax is levied on commodities and services. Tax is levied on commodities and services. Yes. Shifting of burden. Yes, we have seen it is the basic nature of an indirect tax, that the burden of tax is being shifted from producer to the final consumer. Inflationary in nature. Inflationary, how it can be inflationary? See, the indirect tax is directly linked with the price. Is directly linked with the price. When you increase the indirect tax rates, ultimately the price of the product is going to increase. That's why it is an inflationary in nature. It has a wider tax base. Wider tax base. See, indirect taxes comprises of tax on commodities and services. And when you see the commodities and services, there are number of commodities and services prevailing in the society. Yes. So it has a wider tax base. No perception of direct pinch. Can you trace the amount of tax involved in that MRP of rupees 10? In this MRP of rupees 10, can you directly pinch the amount of tax involved? Can you calculate how much tax you are paying? No, you cannot calculate it. That is called as no perception of direct pinch. No perception of direct pinch. Regressive nature, this term we have already discussed. Now, genesis of GST in India. It is a history how GST came in India. See, this history start in the year 2000. In the year 2000, the then Prime Minister Mr. Atal Bihari Vajpayee introduced the concept of GST and set up a committee to design a GST model for India. In the year 2000. Yes, in the year 2000, they set up a committee to design a GST model on India, and the committee in the budget 2006-7 announced that GST will be in effect in India from 1st of April 2010. In 2006 this was happened, but 2010 also GST was not active in India. After that, in 2014, the Constitution Amendment Bill was introduced in the Lok Sabha, and that was passed in August 2016. The bill was introduced, and once the bill passed, it becomes an act. So the Constitution 101 Amendment Act was enacted in August 2016. After that, GST Council was formed, and the first meeting of GST Council was held in September 2016. Yes, remember it. The first meeting of GST Council September 2016, and after that in March 2016, a bill was introduced by the way of CGST, SGST, IGST, UTGST and compensation cess. This bill was introduced in the parliament, and after assent of the president, the bill, when passed in the parliament, Lok Sabha, it becomes an act. So in April 2016, when this bill passed, it become an act. CGST, IGST, UTGST Act, SGST Act with compensation cess Act. In June 2017, in June 2017, all the states except Jammu and Kashmir passed the SGST Act. All the states except Jammu and Kashmir passed the SGST Act, and that's how on 1st July 2017 GST was launched in India except Jammu and Kashmir. After that, on 8th July 2017, Jammu and Kashmir also passed the SGST Act, and it was termed as GST was launched in India including Jammu and Kashmir. So this was all about the history of GST in India from the year 2000 to the year 2017. This was all about GST. Now, why there was a need for GST in India? Why? The earlier taxes, indirect tax laws were not sufficient to earn proper revenue to the government, or there were any problem. This were the problem in the earlier indirect tax structures that gave a need for GST in India. Now we can see the things. Several local taxes were levied in the state, such as luxury tax, entertainment tax, etc., which were not subsum, not equal. It means once you have paid the tax, you have to pay it. Unnecessary taxes would make the price of a product or service more and more. So this was the thing. Local taxes were levied. No SENVAT after manufacturing stage. If there was no SENVAT after manufacturing stage, the manufacturer will not the credit of the tax paid. Yes, he will not get the credit of the tax paid. So the credit was lapsed. Once you pay the tax, you cannot shift the burden. How it will be an indirect tax? Non-integration of VAT and service tax. Service tax was different, VAT was different, and differently you have to pay service. Any things of any sale of any goods which involves service also, you have to pay different tax on the service and different tax on the goods. So double taxation on a one particular part of supply, that was a problem. Cascading of tax means tax on tax, tax on tax. Once you pay the tax, again you have to calculate tax on the value also and the tax portion also. So no issue when you are calculating tax on the value, but there was a problem when you calculate tax on the tax portion. So it was tax on tax. Double taxation. Once a product is taxed in a particular state, again that product when transported to the another state, again other tax levies were on put on that product. Yes. So a single commodity or service was passing through many taxes. Double taxation. Unnecessary taxation will increase the price of a commodity or service and will make it a inflationary product. Yes. So this all were the problems we are facing in the earlier tax structures, indirect tax structures, that gave a need to form one tax, that is GST. And to form this, we subsumed many central and state taxes. You can see central sales tax, service tax, luxury tax, surcharges, central excise duty, additional excise duty, CVD, special CVD, entry tax, VAT, sales tax, entertainment tax, etc. etc. This all taxes were subsum to form only one tax, that is GST. That's why it is one nation, one tax. That is it is a one nation and one tax. Though we subsum this much of taxes to form one tax GST, some taxes were not subsumed under GST. It means today also with GST, these taxes are prevailing. With the GST, these taxes are prevailing. See, what are these taxes? Property tax, stamp duty, electricity duty, excise on alcohol, basic custom duty, excise on petrol. These are some of the taxes which are also prevailing today along with GST. Yes. So remember these things. Now, features of GST in India. Features of GST India. GST is a value added tax levied on supply of goods and services. Yes, again I will tell you, GST is a value added tax. It means it is levied on the value addition at each and every stage of the supply chain. Say from manufacturer, the product is going to the wholesaler. The wholesaler is going to add his margin. It means what value addition is being given on that product by the another value supply chain or facility provider, that will be the taxable value. Yes, so GST is levied on the value addition done at each and every stage of the supply chain. Since only the value added at each stage is under tax under GST, there is no cascading of tax. Again in GST there will be no tax on tax, no tax on tax. Burden borne by the final consumer. Yes, producer shift the burden to the final consumer. Continuous chain of tax credits. At in each and every chain of the supply chain, you are going to have tax credits, which tax credit. When you have a credit, the tax is being shifted from one place to another in the supply chain. Uniform tax structure all over India. Wherever you go, wherever in whichever state you want to deal, you will find a uniform tax structure. No need of now studying different tax structure with the different states. Everywhere you are going to get a uniform tax structure in India. Next, now see the structure of GST in India. What is the structure of GST in India? GST in India comprises of CGST, SGST, UTGST, IGST. Single legislation for each stage and every acts with uniform future. Though there are different acts, but all the acts have a single legislation and all the acts have a uniform feature. Every supplier of goods and services obtain is required to obtain registration in the state unitary. There is also provision of registration under the Act Common GST Electronic Portal. Now, what happened in the earlier indirect taxes acts? There used to be different tax structures in every states and accordingly different website for every tax structure. Yes. Now, as we are levying a single tax structure all over India, so there is a single website, there is a single portal on which you can visit and pay the tax there, file the return there, you can have the information there, and also there is a common shared IT infrastructure between central and state government. So there should be a proper transparency between these two. They should know how much tax is being collected and how much tax is being distributed. Also under this GST Act, you are going to get some composition levy exemption portion, which will give more beneficial areas to the small taxpayers. Compensation cess is also there. See, in the earlier tax structures of indirect taxes, states were having a good revenue generation. Because of GST, their revenue generation became a somewhat portion of loss. So, to compensate that loss in GST, compensation cess is levied to the supplies, which will compensate the loss of revenue of the states. Now in India there is dual GST model, that is central and state. Classification of services and classification of goods is being done by HSN code. This is a unique feature of GST in which there are HSN code for every type of goods and every types of services being classified. So in GST through HSN code, the classification is properly done of services and goods by a coding system. So this is all about GST. Now we'll see some articles of Constitution of India. First of all, article number 245. Article number 245 gives the authority or the power to the parliament to make laws, highlighting the word make laws, gives parliament the power to make laws for whole of India or any part of India, and gives the power to the legislature, means the state government, to make laws subject to any part of the state or whole of that state. Yes. So central government has been given the power to make laws for the whole of India or any part of India, or state government for the whole of state or any part of state under article 245. Now article 246A. Article 246A1, A2. A1 gives the power to the legislature, means the state government, to make laws regarding GST with respect to GST. Yes, to make laws with respect to GST. And 246A2 gives the power to the parliament to make exclusive power to make laws with respect to GST in the course of interstate trade or commerce. There are two words, interstate and intrastate. In case of interstate, to make laws regarding with respect to GST, power is given to the parliament, and in case of intrastate, to make laws with respect to GST, power is given to the state government legislature. Now again, 269A, article 269A gives the power to the central government to levy and collect tax on interstate trade or commerce. On interstate trade or commerce, including the imports, central government has the power to levy and collect the taxes. Yes. Next, 279A. Article 279A gives the power to the president to constitute a joint form by the name GST Council. Yes. So, using this power, president constituted the GST Council. Next, Article 366.12a. Article 366.12a is the important core area in GST, which gives the way on which the proper way, the taxable event under GST. GST can be levied on supply. GST can be levied on supply of all goods or services except alcoholic liquor for human consumption. Except alcoholic liquor for human consumption, GST is levied on the word supply of what? All goods and services. Next, 366.26a, service means anything other than goods, and 366.26b, state includes union territory with legislature. Where the word state will come, state means state also and union territory also. Now coming towards GST Council. Now first of all, see the constitution of GST Council. In Finance Minister of India is the chairman of this council, along with minister in charge of finance as the members nominated by each state. This will be the representative member of each state from the side of the state. Yes, with union territories with legislature are its member. Beside, union minister of state in charge of revenue are also its minister, and also sorry members are also its member. So first of all, the union finance minister is the chairman. Again, we are going to have some members from the representative of the state. Again, we are going to have some members, we are representing the union government in each and every states. So this is how the GST council is being formed. Now, how the decisions are made in GST Council is taken by a majority of not less than 3/4 of the weighted votes of the members present in the meeting. Now, see here, for a particular decision in GST Council, the majority is 3/4 of the total votes present in the meeting. 3/4, and among this 3/4, 1/3 should be of central and 2/3 of the state. Then any decision will be passed in the meeting. Otherwise, no. Now, what are the functions of GST Council? To make recommendation to union and the state on important issues, like make a recommendation. See the word recommendation. So the council is going to only recommend the central and the state about the issues like tax rates, about the issues like tax rates, exemption, threshold limit, dispute resolution, etc. And also recommend the future date on which GST levied on petroleum, high speed, diesel, motor spirit, natural gas, aviation turbine, fuel. It means GST Council is going to only recommend the issues, important issues like what should be the tax rates, on what product exemption should be there, what should be the threshold limits, etc. etc. And also recommend a further date on which GST will be levied on petroleum and petroleum products. So these are the functions of GST Council. Also, GST Council will recommend a special category of states. As of now, special category of states recommended by GST Council are this in front of you. You can read it. Sir, we have to learn this state? Yes. How can we learn it? Any short story created on this? Yes. Munna. See the word Munna, M-U-N-A, Munna, has booked his ticket on MMT for Jammu and Kashmir. Munna has, two words, Munna has. Third word, MNT for fourth word, Jammu and Kashmir. So through this you can learn the all special category of state. Now talking about something, union territory without state legislature or union territory with state legislature. Means when we are talking about any union territory, what should be levied, which act should be prevailing on that union territory, UTGST Act or SGST Act? Of course sir, UTGST Act. But there are some union territories, though they are union territory, but SGST Act will prevail. These are this three union territories: Delhi, Puducherry, and Jammu and Kashmir. Although these are union territory, but on this three, SGST Act will prevail. Yes, not UTGST, and on the remaining one, UTGST Act will prevail. So these are the things. Now, next term, seamless flow of credit. See how credit structure is going to seamlessly flow under the GST. For example, this is a person, Mr. A. Now what is doing? He is doing a type of intrastate supply. Intrastate within the same state. Intrastate within the same state. Now under this intrastate supply, he is supplying, say, a goods of value 1 lakh rupees to Mr. B, on which tax is as 9% CGST, 9% SGST. Yes. So it means calculate 9% on 1 lakh, it is 9,000, 9,000. Mr. A will sell the goods to Mr. B, collect tax from him, and will pay to the government tax collected tax collected. This 9,000 and 9,000 CGST and SGST collected from Mr. B will be paid to the government by Mr. A. One transaction is complete. Now, Mr. B is going to further supply to Mr. C. He is supplying the goods, say, for rupees 1,50,000. Say for rupees 1,50,000. As we have seen that in GST, tax is levied on value addition. Now, what is being value added here? This was 1 lakh, 1,50,000. 50,000 is the value addition. So, indirectly, tax should be levied on 50,000. Now, see how this been structured. Now, calculate the tax on 1,50,000 at the rate 9%, 9%. It will be 13,500. It will be 13,000. Going to do? Now Mr. B has to collect 13,500 from Mr. C as tax amount. He will collect 13,500 from Mr. C. And how much he is going to pay the government? 13,500. But how? Already from this 13,500, Mr. B has paid 9,000 to the Mr. A, and Mr. A has submitted this to the government. So what Mr. B is going to tell to the government? From 13,500, I have already submitted 9,000. So what you are going to do? You are going to minus this 9,000, and the remaining balance 4,500 you are going to pay to the government. This is how there is a process of seamless flow of credit under the GST. Again, when Mr. C is going to further supply to Mr. D, in that case also Mr. C can take the credit of the tax paid to Mr. P. Got the point? Yes, this is called as seamless flow of credit. Again, in the case of interstate supply, IGST will be there. So, in case of interstate supply, Mr. A supplied goods to Mr. B for rupees 1 lakh. 18% IGST. It means 18,000 collected from Mr. B and paid to the government. Now, when Mr. B is going to further supply, what Mr. B is going to do? Mr. B is going to collect tax from Mr. C and going to subtract the amount already paid to Mr. A and which is being submitted to the government and take the credit. This is how a person can take a credit under GST. While taking credit, this point should be remembered. This point should be remembered. Yes. How can you utilize a credit? For example, inward supply, if you have paid CGST, so when you will collect the tax on outward supply, you can utilize this CGST credit against CGST and IGST. You cannot utilize again SGST. If you have collected CGST or IGST from the outward supply, then you can adjust this CGST on inward supply only against CGST and IGST, not against SGST. The same way, SGST credit can be utilized only against IGST and SGST, not CGST. And when you are talking about the credit of IGST, this can be utilized with CGST, IGST and SGST. This is the manner of utilization of ITC under the GST. Now, a short summary on which GST is leviable or not. We'll see this thing. Now, when we are talking about petroleum crude, high-speed diesel, motor spirit, natural gas, and aviation turbine fuel, petroleum and petroleum goods. When we are talking about these things, on these things, VAT and excise duty is being levied, but no GST is levied. There is no GST on this goods, only VAT and excise duty is being levied. Again, the same alcoholic liquor for human consumption, VAT and excise duty is levied, but no GST. Yes. When we are talking about tobacco and tobacco products at the manufacturing stage, both excise duty and GST is levied. Excise duty and GST is being levied. Here is an example also of this thing. Say for example, the value is of rupees 1 lakh. The value is of rupees 1 lakh and excise duty is levied is 10,000. Excise duty is levied is 10,000. Then GST is going to be calculated on the whole amount of 1 lakh 10,000. at the manufacturing stage. So this is all about tobacco and tobacco products. Next, narcotic drugs, opium, Indian hemp and other narcotics, excise duty and GST, and other goods and services only GST. Only GST. This is a summary of levy of different goods under the GST. So this is how we completed the introduction chapter of GST. Now further videos will be there of other topics. For that, to be updated and notified, you may subscribe our channel so that we can notify you for the more videos of another topics, revision videos, some theory chapter videos, etc, etc, practical questions, etc. And also like the video, subscribe the channel, and we are going to revise all the definitions in the GST. Yes, all the definition in the GST at one place. So let us start. Starting the definition from the first, that is the definition of goods. Definition of goods. What do you mean by goods? Under goods means all kind of movable property. Goods means all kind of movable property. Yes, includes actionable claims, growing crops, grass, things forming part of land, agreed to be sold before supplier or under a contract of supply, but excludes money and securities. It means any kind of movable property will be there, but it does not cover any type of immovable property. That's why immovable property will not be considered as a goods under GST, only movable property. And it includes actionable claims. Any type of actionable claims, that too will be considered as a goods. Next, growing crops, grass. The growing crops are still not ready. They are just growing on the land. They are not a ready finished goods or a product, but that too is covered under the definition of goods. Any things forming part of land, say any trees, forestry, any product of forest, etc, minor forest produce, etc, but it exclude money and securities. It means when you give any person loan, you will hand over the bunch of money to that person, so it will not be considered as a supply of goods. First of all, there should be a supply. Under GST, taxable event is supply. But what if the supply is not of goods or services, or there is a supply but the product itself is not covered in the definition of goods or services? Then no GST will be levied on such a goods, such a product. So it is very crucial for a product to pass the definition of goods or services. So this is all about the definition of goods. Now coming towards the definition of service. Yes, we are revising it. Service means what? So service means anything other than goods. Anything other than goods, it is called as a service, and it includes any activities relating to use of money or its conversion, etc, etc, for which a separate consideration is charged, but it exclude money and securities. See, money and securities are neither goods nor services, but anything done, any consideration charged for the use of money will be termed as a service. Sir, an example? Yes, we had an example right now only of a person giving loan. When giving loan, you are supplying money, but it is not a supply of goods. It's not a goods, neither it is a service. But for this loan, if you are charging any separate consideration by the name of interest, yes, separate consideration, it is interest, then it will be covered under the definition of service. Now, the interest charge will be a service, yes, and accordingly tax will be charged on that. Also, securities, supply of securities is neither goods nor service, but any consideration charge for facilitating or arranging transaction in securities. Say any brokerage charge by the broker of stockbroker for transacting in securities, then that brokerage amount is a service and hence taxable. So this is all about the definition of service. Now coming toward the definition of business. Under GST, what do you mean by business? Business means these 9 activities: 1, 2, 3, 4, 5, 6, 7, 8 and 9. This 9 activities. Business means this 9 activities. One word business, but it covers 9 activities under the GST. So activity number first, any trade, commerce, manufacture, profession, vocation, adventure, wager, any other similar activities. See, all these activities, whether or not for pecuniary benefit, means profit. You are doing these activities whether or not for profit, then it will be termed as business. Either you are doing this for profit or not, it will be a business. Activity number 2, any activity transaction in connection with or incidental or ancillary to subclause A above. The activities right now that we have seen, any trade, commerce, manufacture, profession, vocation, adventure, wager, etc., etc. So any such type of activities, any connected activities with these activities, or any activity incidental or ancillary to these above activities will also be termed as business. Third activity, any activity transaction in the nature of A above, whether or not there is a volume, frequency, continuity, regularity of such transaction. Say any trade, commerce, manufacture, wager. For example, you are doing manufacturing and you have done manufacturing only for a month in the whole life, for only 1 month. So whatever be your frequency, continuity, regularity, volume, that doesn't matter. If you have done any type of activities that are defined in clause A for a single minute also, that will be termed as a business. Fourth activity, supply or acquisition of goods including capital asset services in connection with commencement or closure of business. At the time of commencement of business or at the time of closure of such business, if you have done any type of activity of supply of goods or service, then it will be termed as business. Yes. Next, fifth activity, provision of any services by say club, association, society, any other body where separate consideration is charged in form of subscription to its members, etc., etc. Say for example, membership of a club, you paid the membership, consideration is charged. Yes, now you are going to access the facilities of that club, so it is a business. Admission of a for a consideration of person to any premises, for example cinema hall. To enter that cinema hall you have to buy a ticket. So admission for consideration of a person to any premises, it is also business. Service supplied by a person as a holder of an office. Yes, as a holder of an office. You are not doing that business, but you are a holder of the office in that business. Say director of a company. You are not the owner, but you are holding the office of that company for a particular profession, vocation or trade. It will be a business. Any activities related with the horse racing by way of totalizator, license to bookmaker or activities of a licensed bookmaker will be termed as business. And any activity transaction undertaken by central government, state government, local authority in which they are engaged as a public authority, that will also be termed as a business. So all these 9 activities are defined by a single word, that is business. Now the definition of person. What is the definition of person in GST? Person means any individual, company, HUF, firm, LLP, or any artificial jurisdictional person or cooperative society or society registered under their respective acts, a trust, association of person, body of individual, any provincial corporation established by central or state or provincial act, means any public sector undertaking or public units, public companies like this, any body corporate, central government, state government, local authority, all are termed by a single word person under the GST. So person means all this. Person means all this. Now coming towards the word consideration. What do you mean by consideration under GST? Under GST, consideration may be say in money or otherwise, say in kind. Any payment made to be made whether in money or kind. In money or otherwise. Money or otherwise means money or kind. Either it also includes either any other mode is there, money or kind. Yes, other mode is also there. So that's why they are saying including any monetary value of act or forbearance. For example, you have done any act or forbearance not to do an act, any act to do an act or not to do an act. Why are you doing this? Why are you paying these things? In respect of, in response to, for the inducement of supply of goods or service, or both. To make the supply of goods or service, in return either you will pay money, or you will pay in kind, or you are going to perform an act, or not to do an act. What the thing? So this, all the four things are consideration in GST. Yes, but consideration does not include any subsidy by the government or any deposit made. Yes, any deposit made unless and until the depositing is being adjusted in the consideration, as a consideration. Now, supplier, from whom the supplies are made, the person supplying the goods or services or any agent on behalf of that is a supplier. Now, recipient, coming towards the word recipient. Recipient means two cases. There are two cases of recipient. One, consideration is payable, consideration is not payable. Either goods or service, if consideration is payable, then who will be the recipient? The person who is liable to pay the consideration. The person who is liable to pay the consideration. And when there is no consideration payable, what in case of goods and what in case of service? If there is no consideration payable, in case of goods, recipient will be the person who is receiving the goods, and in case of service, recipient will the person who is receiving these services. So this is all about. And any agent receiving on behalf of such person will also be termed as a recipient. Now, the definition of India. What is India under GST? India means territory of India as per article number 1 of the Constitution of the Act. India. Again, territorial waters. How many nautical miles are the territorial waters? 12 nautical miles. The seaside and the subsoil underlying such territorial waters. Continental shelf, exclusive economic zone or other maritime zone, and any airspace above this territory and territorial waters. Now, what are the territorial waters here? Seabed, 12 nautical miles, subsoil, continental shelf, see in the diagram, 12 nautical miles, territorial water. After that, again 12 nautical miles, contiguous zone, and below that there is continental shelf. Yes, exclusive economic zone. After 12 nautical miles from the land, again 200 nautical miles is the exclusive economic zone, and below that it will be maritime zone. Yes, so this is only the territory of water, and any airspace above this territory and territorial water, this will be covered as definition of India under GST. Now, further, reverse charge. Reverse charge. Before that, I will tell you forward charge. In case of forward charge means what? Forward charge. In case of forward charge, the supplier recovers the tax amount from the recipient and pays to the government. And in case of reverse charge, opposite. Now the recipient is going to pay the tax himself to the government. This is the only difference. Again, this term we are going to discuss in short detail in the charge chapter. Yes, non-taxable supplies in which on which GST is not taxable. Yes, which are not taxable under GST. Which are what are the examples of these products? Non-taxable supplies: alcoholic liquor for human consumption. Yes, and petrol and petroleum products. Electronic commerce, the platform on which you are selling, you are supplying your goods or service using that platform, and the person operating that platform is the electronic commerce operator. Now the definition of family. What do you mean by family under GST? Spouse, children of that person, and parents, grandparents, brother, sister of the person if they are wholly and mainly dependent. So if the brother is dependent, he will be termed as a family under GST, yes. But if that brother is independent, then he will not be termed as a family under GST. Now, agent means any person who is doing any type of supply in behalf of principal and receiving separate consideration for the same. And again, principal means who is giving agent the authority to supply the goods or services. Conveyance. Anywhere this word comes under the GST, conveyance include vessel, aircraft, and a vehicle. Associated enterprise. Its associated enterprise are those enterprise which somewhere or anyhow will control the management of other enterprises. Yes, say holding and subsidiary company, both are associated enterprise, because somewhere the control and management of that subsidiary company is being affected by the holding company. Common portal, GST common portal, council, GST council. Yes, coming in front. Now, this is all about place of supply. Yes, place of the chapter, place of supply. Now here there are different terms: location of supplier of goods, location of supplier of goods, services, and location of recipient of services. Now, what are these location? First, talking about location of supplier of goods. In case of goods, this location of supplier is not defined under the GST, but applying the logics on this part, location of supplier will be the location where the goods are kept, or from where the goods are being supplied, or the place of business. Now, coming towards the next term, location of supplier in case of service and location of recipient in case of service. Location of supplier in case of service and location of recipient in case of service. Both are having similar meanings. So, let's see. Supply made from or supply received at. Supply made from or supply received at. Now, made from or received at a place of business which for which registration is obtained, for which registration is obtained. Such a place of business where registration is obtained means registered place of business. If a supplier is making any supplies from a registered place of business, or the recipient is receiving any supply at the registered place of business, so in that case the location of supplier and the location of recipient will be such place of business, registered place of business. In case the supply is made from or received at a fixed establishment elsewhere, then the location of such fixed establishment. What if there are more than one fixed establishment? So for every fixed establishment, the location will be different, and different. So what if we are not knowing these places? We are not having the registered place of business. We are not having the place of that fixed establishment. Then you may consider the usual place of resident of that supplier or recipient as a location of supplier or location of recipient, the place of residence. Now here, fixed establishment means any such establishment of that person through which is not doing any business, but other than business he is supplying some additional services from that establishment. Say service center of any cell phone company. Yes, smartphone company. Yes, service center. What they are doing? They are not doing the business of selling the smartphone. They are providing additional services in support of that company who is manufacturing and selling the smartphone. So, fixed establishment. Now, place of business will be different in different conditions. Say, in case your goods are stored in a warehouse or a godown, that will be a place of business. In your store, that will be a place of business, or registered place if you are not having any godown or warehouse, that registered place of business from there where you are doing the business, etc., etc. So this is all about the definition involved in the place of supply chapter. Now, continuous journey, very simple term. Continuous journey means what? Continuous journey means continuous journey, not a break journey. Once you have boarded on that conveyance, you will left that conveyance at the destination only. For the reaching the destination, you are not using any other more conveyance than one conveyance. That is a continuous journey. Now, coming towards the definition involved in the ITC chapter, inward supply. Inward supply means any supply you are taking as an inward, not outward. You are not supplying the supply outward, but you are taking the supply inward to make this outward supplies. For example, raw materials. Raw materials are the inputs. Yes, inputs. Labor services means input services, or you have purchased any plant and machinery, capital goods. This all are the inward supplies. And any tax paid on this inward supply is called as input tax, is called as input tax. And any tax recovering while making the outward supply from the recipient, it is termed as output tax. Means tax on outward supply, and input tax means tax on inward supply. And while paying this output tax to the government, we utilize the input tax credit. Everybody know the meaning of input tax credit. Again, this term we are going to discuss in the chapter input tax credit itself. So, looking forward, another definition. electronic cash ledger, credit ledger. Again, these things we'll discuss in the respective chapter, payment of tax. Now, zero rated supply. Zero rated supply means what? Any supply of goods or services for export of goods or services, or supply of goods or services to a SEZ, special economic zone. These are called as zero rated supply in the GST. Yes, in this GST, zero rated supply means these two supplies. Now, works contract. Works contract is being given in case of any immovable property. Say you are asking a builder to complete a building. You have paid the money to the builder and you have given a contract to a builder that you have to build a proper building, either commercial, residential, etc., etc., within a year. That is a works contract given on immovable property. Now, continuous supply of goods, continuous supply of service. Best example, milkman. Early morning he comes to your house, he give you the milk daily, 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 but paid, the payment made is on the end of the month when he generate a statement of the whole month. That is a continuous supply of goods. And again, continuous supply of service, the postpaid card services, these are continuous supply of service. Continuously the cycle will go on, go on, go on. The month will completed, your bill will be generated, month will complete, bill will be generated, like this. Continuous supply of service, continuous supply of goods. Now, coming toward the definition of aggregate turnover. What do you mean by aggregate turnover under GST? Aggregate turnover means all taxable supply. First of all, it will include all taxable supply either made by your own or on behalf of others. Any supply made by the person, if it is a taxable supply either for own purpose or making on behalf of other, that will be considered under the aggregate turnover. Yes. Again, what is included? Exempt supply. All types of exempt supply. What do you mean by exempt supply? It includes nil rate supply, wholly exempt supply, and non-taxable supply. The word exempt supply includes these three supplies. Again, what is included in the definition of aggregate turnover? All kinds of exports, interstate supplies. Every interstate supply export is included, but what is excluded from the definition of aggregate turnover? Inward supplies in RCM and taxes in GST. Inward supplies in RCM. See, when you are paying tax under reverse charge, means the supply is not yours. The turnover is not yours. It is the turnover of that supplier on whose behalf you are paying the tax. It's their turnover, not your turnover. So that's why it's not included in your aggregate turnover. Yes. And the taxes under GST, these are also not included in the definition of aggregate turnover. The last definition, business correspondent and business facilitator. Business correspondent and business facilitator. See, you have seen somewhere in your practical in your life that in a village, say where there is a population is very less population, and there the bank cannot establish a branch because establishing a branch there will not be profitable for that bank. But somehow they have to provide a proper network there also, so that the villagers living in that village can access the facilities and the services of the bank. So for that, the bank appoint a business facilitator or correspondent. Now, what is the work of that correspondent? Now, the correspondent will help the bank to establish the network of banking there in the village by say establishing all the stuffs of that bank in a particular one single room in the house itself. Yes, in a single room, he will establish the internet, the network, everything of that branch, bank, and say system of that bank. He can access the system of that bank, and he can provide the banking facilities to the people living in the village. In short, the business facilitator and the business correspondent act as an intermediary between the villagers and the bank, and helps the bank to spread the network of bank in the village where they cannot open the branch. So this is what about business correspondent, business facilitator, and this is how we completed all the definitions which is there in the GST. are going to revise the topic supply. Yes, the topic supply. So, when we are talking about the word supply, what do you mean that? What do you mean by supply? So, when we talk about supply, I remember one point. Article number 36612 that says that under GST, tax will be levied on supply. Yes, the word supply of goods and services. So we can tell that supply is the taxable event in the GST. In the GST, supply is the taxable event, and that is defined under section 7, properly defined under section 7. So we are going to study right now the taxable event of GST supply section number 7. So let's begin. When we are talking about section number 7, it is distributed in 4 parts: 7.1, 7.1a, 7.2, 7.3. 7.1. First of all, we'll study 7.1. 7.1 says that supply includes, means it is the definition of supply. It will tell you what supply means. So, supply includes what? Supply includes 7.1a, 7.1AA, 7.1b, and 7.1c. All the activities coming under this subsections 7.1a, double A, B, and C, this all will be termed as supply. Yes, we are going to call it as a supply. So right now we are going to analyze the first one, 7.1 small a. Yes, 7.1 small a. What this section tells? It tells all forms of supply of goods or services or both, all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, disposal. All forms of supply of goods or services or both, such as sale, exchange, barter, transfer, lease, rental, disposal, license, etc., made or agreed to be made for consideration by a person in the course or furtherance of business. This is the very basic definition of supply. Supply means all forms of supply of goods or services, which are sale, exchange, barter, transfer, lease, rental, etc., anything it may be. What they are done, made or agreed to be made. Either made, it means done, or you are going to do it. Agreed to be made. Why you are doing this sale, exchange, barter, transfer? Why you are agreeing to do this sale, exchange, barter, transfer? For consideration. And who is doing this all things sale, exchange, barter, transfer? For consideration by a person. Who is doing this? By a person. And why the person for consideration doing these things? In the course or furtherance of business. So these are the most important elements of the definition of supply. 1, 2, 3, 4, 5. If these 5 things are present in the definition of supply, if these 5 things are present, then only we are going to term the activity or transaction as a supply. Otherwise not. If any one element is absent, then it will not be termed as a supply. Remember this thing first. Yes. Now, let's talk about the thing consideration. Sir, you told us that all the element with consideration are present, then it will be termed as supply. But if all the element are present, but consideration is absent, then if consideration is absent, now check that whether the activity is covered under 7.1c. If the activity is covered under 7.1c, though it is not a supply, but we will be deeming it as a supply. It will be deemed a supply. Yes. And if it is not covered in 7.1c, then it will not be termed as a supply. It will not be termed as a supply. Same thing for the last element in the course of furtherance of business. This thing should be done in the course of furtherance of business. Yes, if done in the course of furtherance of business, it will be supply. If not done in the course or furtherance of business, then check whether the activity is covered under 7.1b. If the activity is covered under 7.1b, it will be a supply. Otherwise, not a supply. Now, going towards 7.1b first. See, 7.1b. 7.1b says that import of services for consideration. Main element I told you, other elements will be present, only one thing is absent, not in the course or furtherance of business. Import of service for consideration, not in the course or furtherance of business, that will be termed as supply. Though one element is absent, but if it is covered under 7.1b, it will be termed as supply. Yes, so we are going to tell this activity as supply. Now, first confirm that it will be a supply. Confirm. Now, again, what will happen? If this is a supply and if it is imported by charitable trust, individual, government, it will be exempt. If other person are importing it, it will be taxable. It will be taxable. Now, this is a clarification. Yes, done. 7.1b. Now, going towards 7.1c. Now, 7.1c talks about Schedule 1. 7.1c talks about Schedule 1. It tells that if the activities are specified in Schedule 1, then it will be a deemed supply. It will be a deemed supply, otherwise it will not be a supply. Schedule 1 we are going to discuss after this chart. Only one subsection remaining, 7.1a. 7.1a. 7.1a done, 7.1b done, 7.1c done. One is remaining, 7.1a. What it tells? When we are deciding the meaning of supply on any activities transaction by a person other than individual. See, the person definition we have covered in the definition video itself. In that definition video, I told you person means any person, individual, HUF, AOP, BOI, company, partnership firm, LLP, trust, government, etc. etc. If any person other than individual, except individual, any person is providing any type of services to its member or constituents, to its members or constituents, or any member or constituents providing any type of service to such person. Yes, with the consideration, where there is involvement of some consideration or say in kind, in cash, any form it may be, then this transaction will be termed as supply between the member or the constituents. For example, partnership firm and a partner. If a firm is giving something to the partner for the services, then it will be termed as supply. Or if a partner is giving something to the partnership firm, then this activity or transaction will also be termed as supply as per section 7.1a. Now, this first part is done. Supply includes all things covered in 7.1 is going to be supply under GST. Now, coming towards 7.1 capital A. 7.1 capital A gives you schedule number 2. The activities specified under schedule number 2 will give you a clarification on the thing whether this transaction should be termed as supply of goods or supply of service. It will bifurcate whether we should term this transaction as a supply of goods or as a supply of service, like this. Next, coming towards 7.2. Now, 7.2 talks about what supply excludes. Means by default, 7.1, applying 7.1 by default, this is a supply. This activity is a supply, but we are excluding it from the definition of supply. We are excluding it from the definition of supply. Let's see what are excluded. 7.2a, 7.2b. 7.2a talks about schedule 3. So how many schedules we have seen up till now? Schedule 1, schedule 2 and schedule 3. Now schedule 3 tells that any activities that are specified in schedule 3 will be excluded from the definition of supply. Though it is a supply, but we are not going to consider it under the definition of supply for the purpose of this act. Now, what else are excluded? 7.2b. Any such activities which are being notified by the government. Which are being notified by the government. So what the things are being notified by the government? One notification, number 2 notification. Number 1, any activities by panchayat or municipalities. Any activities by panchayats or municipalities which are being enshrined to this municipalities or panchayats given or enforced by the constitution, article number 243g and 243w, being given by these articles to municipality or panchayat any official duty by the constitution, that will be excluded from the definition of supply. Another notification: services by way of grant of alcoholic liquor license by the state government will be excluded from the definition of supply. Any type of alcoholic liquor license given by the state government, this service of giving license of the state government will be exempt from the definition of supply. Yes, it will not be included from the definition of supply. Now, one clarification on this, sir. Other than alcoholic liquor for human license, yes, alcoholic liquor for human consumption license, there are other license also given by the government, like driving license, etc., etc., factory license, etc., etc. So, what about this license? This license giving by the state government, the service given by the state government providing other license will be taxable under GST, and that too under reverse charge. That too under reverse charge. So remember this thing. Yes. And lastly, 7.3 gives the powers to the government, that government may at any time notify more services or exclude more services or more supply of goods from this definition. Yes. So now coming towards different schedules. Schedule number 1. Let's start with schedule number 1. Now, schedule number 1 talks about activities without consideration. Schedule number 1 talks about activities without consideration but deemed supply. But deemed supply. Though there is no consideration, though there is no presence of the important element in the definition of supply, then also we are going to deem it as a supply. So we are going to check this. 4 activities are there: para 1, para 2, para 3, para 4. Now, coming towards para 1. Coming towards para 1. Permanent transfer or disposal of business asset where ITC has been availed. For example, what I have done, I am a manufacturer of laptop. See this example. I am a manufacturer of laptop. What I have done, I have purchased raw material, I have paid to the laborers, I purchased capital goods, and on all these three things I have paid input tax. While making the payment of all these three things, I have paid input tax. It means input tax credit I have. What I can do, now I have the credit balance. I can use this credit balance while making payment of tax. While making payment of tax. Now, using these things, I have manufactured 100 laptops. I have manufactured 100 laptops. Now, out of these 100 laptops, I have given 10 laptops to my relatives. To my relatives, and 90 to the customer. 90 to the customer. When I am giving this 90 laptops as a sale to the customer, I have received consideration from them. I have received consideration from them. So this is a supply because consideration is present. What we are talking about? We are talking about this 10 laptops that I have given to the relatives without consideration. When I am given this 10 laptops to any relatives, friends, or say any other person without consideration, check whether ITC has been availed for this 10 also. Because while purchasing the raw materials, capital goods, the labors, we have paid for 100 laptops. And among them, 90 we are selling and 10 we are giving without consideration. Now analyze whether the ITC involved for this 10 laptops has been utilized. If you have taken credit of the ITC which is being assigned to this 10 laptops, then this 10 laptops supply will be considered as deemed supply. This activity will be considered as deemed supply, and accordingly you have to calculate the tax on that and you have to pay the tax on that. Though you have not recovered any amount from that person to whom you are making the supply. But for the purpose of the taxation GST provisions, we have to calculate the tax and pay the tax to the government. This is what para number 1. Permanent transfer or disposal of business asset where ITC has been availed. This is the main term. ITC has been availed. What if ITC is not availed? Then this will not be termed as a supply because it will not be covered under para number 1. Now, para number 2. Supply of goods or services or both between related person or between distinct person as specified in section 25 when made in the course or furtherance of business. When made in the course or furtherance of business. So, supply of goods or services being made by a person to their related person or to any distinct person where this are done in the course or furtherance of business. So first of all, there are two terms: related person, distinct person. Will have a proper understanding of this two terms. Related person. Who are the related person under the GST? Related person means such person or are officer directors of one another's business. Say a director of a same company, the two directors, these are related person. Or say one director here and another director there, but a company are related, so the director will be related. Yes. Employer and employee, these are also related person. But in case of employer and employee, there is a limit of 50,000. Up to 50,000, employer can give their employee any type of goods or services. Up to 50,000. But above 50,000, if given by employer and employee, it will be covered under para 2 and it will be a deemed supply. They are giving a relaxation up to only 50,000. Such employees and employer, such person are legally recognized partners. Say partnership firms partner. Yes, in that partner number A, B, C, all are related person. Yes, such person are members of the same family. They are members of the same family. The definition of family we have seen in the definition video. Yes, or you have not seen, you can see the definition video for the proper meaning of the family under GST. Say one of a person is a holding company and one is a subsidiary and both are controlling a third company. So the third company will be related with this two. Yes. Or one holding company is a subsidiary company and that subsidiary company is again holding of a third company. So that third company will be a related person. Yes. All these are the related person under GST. All these are the related person under GST. Now, talking about the distinct person. Sir, what do you mean by distinct person? Say there are two examples of distinct person under section 25.4 and 25.5. Okay, number one. When you are doing the same nature of business, clarifying the thing, you are doing the same nature of business and you have different registration. Say your head office is registered in Delhi and branch is registered in West Bengal. You are having different registration but the same nature of business. Then either single pen or different pen, this will be termed as distinct person. Anything is being supplied from here to here, it will be assumed that two different persons are making a supply and the transaction will be considered as a supply. Yes, if it in the course or furtherance of business. Now another thing, 25.5. Say if your both things, one thing is registered and one thing is not registered. Yes, in the above example both the units were registered. Yes, both the establishment were registered, but here one is registered and one is unregistered. Now but there is a difference. Here the nature of business is different. Above the nature of business was same nature of business, different registration, or different nature of business, same registration. In this thing also you are going to consider both the establishment as distinct person of distinct person, and accordingly anything supplied from here to here will be deemed as a supply. Yes, it will be not like that one thing is going from here to here, then it is going within the same registered person. So no effect will be not given. This will be deemed as supply and accordingly tax will be calculated. Now talking about the third one, stock transfer. Stock transfer. See, when there is a stock transfer and the transfer is being made from one factory to a one showroom and both this are having a single registration. See in the example itself, the factory and the showroom both are registered under a single registration, then this stock transfer will not be a supply. But what if the factory and the showroom both are differently registered? If these two units are registered differently, then the stock transfer will also be termed as deemed supply. Yes, as per para 2. stock transfer will also be deemed as a supply if they are differently registered. Then, so this is all about para 2. Now coming towards para 3. This para, most of the students are getting confused while this para. They get confused. So let us try to irrigate say let us try to resolve your confusion. Yes, we'll try that you will not get confused after seeing this concept. Para 3, supply of goods by a principal to his agent or by agent to his principal. Yes, supply of goods by principal to his agent or by agent to his principal. Yes. Now let us see this example. See, this is principal, agent, and the customer. Principal, agent, and the customer. Now, see here what we are talking about. Yes, first of all, we'll have a analysis of what we are talking about in this para. We are not talking about this supply, this supply. We are talking about this supply. Sir, what do you mean? Say how the transaction will go on. When the customer orders something, the agent will tell to the principal, sir, send the goods to me. I will sell these goods to the customer. Now, when the agent will sell these goods to the customer, consideration will be received. Yes, consideration is there. So, this supply between the agent and the customer will be termed as supply. Yes. So, we are not talking about this. Also, for doing this supply, agent will charge commission and will provide agency services. So that will be a supply of service. And for this agency services, this agent is receiving the consideration. Yes. So this is a supply. We are also not talking about this under para 3. We are not talking about this. We are not talking about this. What we are talking about, when the goods will be sent from principal to the agent, is the principal charging any consideration to the agent? Is the agent is going to pay anything for this supply of goods unless and until these goods are sold to the customer? Think about it. So this is the only transaction where there is no consideration. Where there is no consideration, and we are talking about this under para 3. We are talking about only this part under para 3, not about this, not about this supply. Because under both the supply consideration is there, they are supply. But we are talking about whether this will be termed as supply or not. Yes, this transaction without consideration. Now let us check this. Now for making decision, what we should consider? We should consider the invoice. Now check on the invoice. The invoice which is being given to the customer, whose name is there on the invoice? Is there the principal's name or the agent's name? If there is the name of the principal on the invoice which is given to the customer, to the client, then this will not be termed as a supply. This will not be termed as a supply. But if on the invoice which are you giving to the customer, the name is of the agent. On the invoice, the name is of the agent, not the principal. The invoice is in the agent's name, not in the principal's name. Then this transaction will be deemed supply. Now we are going to consider this transaction also as a supply. Got the point? See, you can analyze the situation also. Invoice name, agent's name, then this will be a supply. Invoice in the principal's name, this will not be a supply. Now, if this invoice is being given in the name of the agent, then this agent will be termed as para 3 agent. This will be a para 3 agent, means agent covered under the para 3. This only this transaction is covered under para 3. So the agent, if doing this thing, he will be termed as para 3 agent. Now next concept, del credit agent. Del credit agent, del credit agent is that agent who guarantees the payment. Say for example, principal wants to make a supply, he want to sell the goods. Now he told to the agent, please sell the goods. Now the agent goes to the buyer and the buyer says that, the customer says that, I am not having money right now. I will purchase your goods, but I will pay you 2 months later. Now, when the agent tells this thing to the principal, what the principal says, no, I cannot wait for 2 months. I need my money today. Or Case number 2, the principal will say that what if after 2 months that customer not gives the payment? What will you do? Now that agent will answer. Two answers will be there. If the principal says that what is the guarantee of that person, then the agent will say that I will take the guarantee. If that person after 2 months is not making any payment, I will pay you the whole amount. Case number 1. Or what if the principal says that I need the money today itself? If like this the principal says, then what the agent will do? The agent will pay from his pockets to the principal, and then later on after 2 months he will recover from the customer. This is a type of service. Extra facility will say that credit services are given by the agent, and such type of agent is called as del credit agent, and it charges a higher commission as compared to the normal agent. Now we'll have a confirmation about what the provisions will be attracted in case of del credit agent. Say in case of del credit agent, a new service is being given by him, that is credit facility. That is credit facility. Now we are going to make decision on that. See, if it is not an para 3 agent, it means the invoice is in name of the principal. When the invoice is in the name of principal, there are supply of goods by principal to customer, that is this one. This will be termed as supply. Yes. Now second thing, supply of supply of agency services by the agent. This is this one. Yes, this is supply, sir. This is supply, this is supply. If this is not an agent of para 3, whether this will be a supply? No, sir. This will not be a supply. First of all. Now, what else service the agent is giving? He is giving the extension of credit services. I told you, in case of Dell Credit Agent, one more service is being added. That is credit facility. Now he is giving the credit facility. In that case also, this will be a supply of service by this agent to the customer. By this agent to the customer, and in return the customer will have to pay interest on such service. On such supply he is going to pay the interest. Now when this is not an agent under para 3, so this supply of service of credit facility will be independent supply of service. Will be independent supply of service. This will not be a composite supply. This will not be a mixed supply. Nothing. This will be an independent supply of service whose valuation will be treated or calculated separately. Now, what if the agent is a para 3 agent? If the agent is a para 3 agent, then, sir, first of all, supply of goods by principal to the agent. I am talking about this. This will be deemed as supply. If the agent is of the para 3 agent, then this supply will also be treated as a supply, and this were earlier also treated as supply. Now also there will be a supply. So there are 3 supply right now, and the 4th supply credit facility. Yes. So what will happen? So the goods by principal to agent, then agent to the customer to supply. Yes, we have seen in the diagram above. Also agency services supplied by the agent to the principal, that also we have seen. Yes. And credit facility given by the agent to the customer. Now the agent is giving customer the credit facilities. Now what will happen in this case when the para 3 agent is there? Now this supply of service of credit facility will not be treated as an independent supply. And its valuation also, valuation is not going to be independent, not going to be separate. Now you are going to do the valuation of this service along with the value of supply of goods. So this is the thing under section 15(2)(d). Yes, it's a type of incidental supply, or say extra interest, credit, penalty received, addition in value. So it will be calculated as a value of supply of goods, not independently. And the last entry of schedule 1 para 4, last entry of schedule 1 para 4, import of service by a person from related person or own establishment outside India in the course or furtherance of business. Now import of service without consideration, but in the course of furtherance of business, imported from related person or own establishment. So this is all about schedule 1. This is all about schedule 1. Now going toward schedule 2. Schedule 2 provides a clarification of what is supply of goods or what is supply of service. Yes. So let's start with this thing. Schedule 2. Para number 1. Transfer. What transferred, sir? What transferred? When you transfer the title, very simple. We are revising the thing. When you transfer the title, it will be supply of goods. But when you transfer the rights, it will be supply of service. For example, you sold your car to a person. You transferred the title. Now the RC of the car is under the name of that person. So that will be a supply of goods. But what if you rented your car? You given the car to a person for a day. Title is not transferred, but the rights are transferred. It is a supply of service. Yes. Para number 2, land and building. In the definition video itself, I told you then when we are talking about immovable property, it is covered as a service. In the definition of service, yes. In the definition of service, it is covered. So land and building, any supply you make using the immovable asset, it will be termed as supply of service. Now, para 3, treatment or process. That is job work. Say for example, you are giving raw materials to a person, and in return that person is giving you finished goods. In return that person is giving you finished goods. So what that person is doing, he is doing the job work. He is doing the job work. So treatment or process, it is a type of service. Now coming towards para 4. Para 4, supply of goods or supply of service. Para 4, transfer of business asset. Say for example, you are having a showroom of bike. Yes, you are having a showroom of bike, and the bikes are being sold on your direction in the same manner you prescribe. The goods forming part of business asset are transferred or disposed of under the direction of a person carrying on the business. As you are directing, there the person, the salesman is going to sell the product as per your directions. So that will be a supply of goods if it is done for the business asset. Point number 2, when the registration is going to be say for example cancelled, or say for example suspended, etc., or the taxable person is going to cease to exist, means death of a person, or you have transferred your business from one person to another as a going concern. So these are the cases where the taxable person will cease to exist. Now if the taxable person ceases to be a taxable person, then the stock of business asset present on the same day, on the date where the person has ceases to be a taxable person, will be deemed as a supply. We'll consider that the stock has been supplied, deemed supply, and accordingly calculate the tax and pay us. Whatever the stock will be there in your showroom, you have to calculate it. So as per our example, if the say for example out of 10 bikes, 4 bikes are there in the stock. So if I cease to be a taxable person, then what will happen? So you have to deem that these 4 bikes are also sold, and accordingly calculate the tax and pay to the government. But this provision number B will not be applicable if the business is transferred as a going concern, or is carried or the business is carried on by the personal representative. Yes. So in that case, this provision will not be effective. Now, when it will be a supply of service, say for example, one of the bike color was very good. So what I did, I used that bike for the personal use. Yes, I own purchase the bike. So if your showroom is there and you own or driving that bike, you are going to pay in that showroom? No, sir. So in that case, it will be a supply of service if the goods which are business asset, which are used for the business, are put to private use, personal use. So this is all about para 4. Now para 5. Para 5, supply of service. Renting of immovable property. In short, it will be a supply of service. Yes. Now, number B. This point I am going to explain you with the example. Say, you have seen many builders that are building the projects, flat scheme, commercial project, residential projects, row houses. What they do, they complete the project and then we start and go and leave or use that particular property. Now, there are two things. What can happen? Sir, you started living in that flat. There was a flat scheme in a building. You started living in that flat, and the builder gave you the completion certificate afterwards. Or what will happen? The builder gave you the completion certificate first, and after receiving the completion certificate, now you are going to live in that flat. Two cases. Now, why are you telling sir these things? Because you have to make a decision on these two things. confirm the date on which you are receiving the completion certificate or you are having the first occupancy. First time you went to the flat for living. First occupancy. Whichever will be first. Whichever will be earlier. Earlier of completion or first occupancy. Freeze that date. Say for example, today I received the completion certificate and day after tomorrow I took my first occupancy. Which date came first? Completion certificate. So I lock this date. Now analyze before this date. You lock the date. Today's any date you may consider when you receive the completion certificate. Yes. So today's date I have logged it. Now analyze that any amount you have received before this date. If you have received any amount before this date, then the whole amount will be taxable. Or if you receive the whole amount after this date, then nothing will be taxable. Got a point? If taxable, it will be a supply of service. Yes, this is the thing in the construction area. Now, now temporary transfer permitting the use or enjoyment of intellectual property rights. Say, for example, copyrights, patent, trademarks, you are permitted for the use, then it will be a supply of service. In case of IT software, say you are having a customized software, you are telling the IT company like this such type of this software you have to personally make for me. Customized software, it will be a supply of service. But if you are purchasing a pre-packed software, then it will be a supply of goods. If that prepaid software is having a license to use, then it will be a supply of service. Remember these things. Remember these things. Customized software, supply of service, prepacked software, supply of goods. If this prepaid software is a license key generated, then supply of service. Yes, remember these things. Now, next, agreeing to obligation to refrain from, to tolerate, to do an act. To refrain from an act, to tolerate an act, or to do an act. Under GST, making a person to do an act is also a type of supply. Or refraining the person not to do an act is also type of supply. Or tolerating, if you are paying some person for tolerating an act, that is also a type of supply. But this will be a supply or not. How to make the decision? What are the three terms? To refrain from an act, tolerate an act, or to do an act. These are the three terms. Check that any separate contract or agreement, either express or implied, any separate contract or agreement, either express or implied, is made for these three things. Any separate contract or agreement, either express or implied, is made for these three things. Any of these three things. And second point, consideration is flowing as per the contract. And the consideration is flowing as per the contract. If these conditions are satisfied, then any activity of this nature done will be termed as supply under GST, and thus it will be taxable. So taking an example here, say check dishonor fine. When say you are going to deposit a check and for the payments, and there is no balance in your account, so what will happen? The check will bounce, check dishonor, and a fine will be charged by the bank to the account holder. Now what happened in this? You are making a separate agreement with the bank that today I am going to dishonor the check and I will pay a penalty this much. You are going to make a contract? No, you are not going to make a contract. So if you are not making a contract, this consideration is not flowing as per the contract. Nobody will make such a type of contract. The clause of check dishonor fine is being made by the banks as a provision, so that the errors made by the account holder can be corrected by their own. So there will be having a knowledge, oh no 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 no, if I checked on dishonor will be happen, I will be charged a fine. So the account holder will himself be aware of these things. For that they are charging the fine. No separate contract is being made that we are going to dishonor, charge fine. No. So whether it will be a supply, it will not be a supply, and hence not taxable. Sir, can you give an example of some taxable? Yes, of course. Let fine. For example, you are filling the examination form, and that too after the dates has been closed. So what the institute will impose on you? Late fine, examination late fee. Yes. And when you are filling the form, and when you are paying that late fee, one box is there, check box is there, on which you tick it that I agree on the above terms and conditions. It means what? You have expressed or impliedly under an agreement or contract with the institute towards the late fee of the examination. Yes, and the consideration of the late fee of the examination is flowing as per that contract or agreement. So in that case, this late fee or penalty is a supply. Yes, it will be a supply and thus taxable because there is a contract or agreement established. Yes. So the main core thing is that there should be a contract or agreement, and consideration must flow in return of this contract or agreement. These are the things. These are the clarification, and this is all about Schedule 2. Now we are going towards Schedule 3. Schedule 3 activities. What do you mean by Schedule 3? Sir, Schedule 3, remember Section 7.2a, supply excludes. Means activities or transaction which shall neither be supply of goods nor supply of service. It means you are excluding these activities from the definition of the supply. This will be out of the definition of the supply. Now, what are the entries? Para number 1. Services by employee to employer. An employee giving services to the employer in the course or in relation to the employment. In the course or in relation to employment, any services by employee to employer, that will be excluded from the definition of supply. Hence, no GST or taxability on this portion. Para number 2, services by court or tribunal. Any services given by the court or tribunal, these are also excluded from the definition of supply. Para number 3, functions performed by the members of parliament, members of state legislature, members of panchayat, members of municipalities, members of local authorities, means all the ministers and the members like this, or any duties performed by the person who holds any post in pursuance of provisions of constitutional. For according to the constitutional provisions, he is holding the office. Yes, any person like this, any person for performing duties by way of chairperson, member, director of any body established in which the government is having a controlling power, means public sector company. For example, Indian Railways, the chairperson of Indian Railways, members of Indian Railways, director of Indian Railways, these all are these members. So any duties performed by these members, any function performed by these members will not be considered as a supply as per Schedule 3 para 3. Now para 4, services of, see, these are all death related services. Services of funeral, burial, crematorium, mortuary or transportation of the deceased. All the services are excluded from the definition of supply. Next, para 5, sale of land and building subject to Schedule 2 para 2, para 5b. Schedule 2 para 5b. Yes. Yes, we have seen this right now only. The completion certificate, first occupancy, whichever is earlier, any amount received before that will be taxable. The whole amount will be taxable. Any amount received after this event, then whole will be exempt because it will be excluded from the definition of supply. Yes. So sale of land and building excluded from the definition of supply. And lastly, this is an amendment. Para number 6, actionable claims are excluded from the definition of supply other than specified actionable claims. Other than specified actionable claims. So it means, sir, specified actionable claims are termed as supply. Yes, of course. But any other actionable claims other than specified actionable claims will be excluded from the definition of supply. Now see which are the specified one. Betting, casinos, gambling, horse racing, lottery, online mobile gaming. Yes, online money gaming. Now, this betting, gambling, and lottery were earlier. Now, amendment has introduced three new actionable claims: casinos, horse races, and online mobile gaming. Now this is all about schedule 3. Now coming towards some clarifications, free sample. Say whenever you purchase something, free samples are being distributed with that. Yeah, free gifts or free gifts are given with that. Say for example, on any square, they a particular company is distributing their products freely as a sample, as a small samples. So there will be a supply on that portion or not. Free sample or free gift are not attracted toward the definition of supply. So they will not be termed as a supply under GST because there is no consideration in return. And though there is no consideration, it is not covered under Schedule 1. Yes. So not a supply. Buy one get one free. It means, sir, buy one product, get the another product free. This one product you are paying the amount. It means, sir, it is a supply. And the another product, it will not be a supply. No, not like that. If it is a case of buy one get one free, then we are going to consider it as you are paying a single price for two products. For this point. So in that case, both the products will be covered under the definition of supply. Now, coming towards the clarification of, say, mode of conveyances or rigs, tools, and spares. Say, for example, from one branch to another branch, you are sending any person or any conveyance, say either a private jet or say bus or say truck, any conveyance. So the movement of this conveyance from one place to another will be considered as a supply of service? No, it will neither be supply of goods, neither supply of service, not covered under definition of supply. And when any rigs, tools or spare parts are being transported from one establishment to their own establishment. Say for example, I am having a branch at one another location and there some machinery is being demanding repair and maintenance. So I send a person with the tools, rigs and spare parts to go and repair that machinery. So now the transportation of this person and the rigs, tools and spares being transported will not be termed as a supply. This is the clarification. Now, this is all about section number 7. 7.1, 7.1 capital A, 7.2, 7.3. In 7.1, supply includes 7.1 small a, 7.1 small double a, 7.1 small b, 7.1 small c. Now, in 7.2, 7.2 small a and 7.2 small b. This is all about the section number 7 included with schedule number 1, 2 and 3. Now we are going towards section number 8. We are going towards section number 8. Now what this section tells about the definition of composite supply and mixed supply. Coming towards the definition of composite supply. Sir, what do you mean by composite supply? See, to learn this definition, we have distributed in different parts. Now, see, composite supply means a supply made. Who is making the supply? Taxable person. To whom the supply is being made? Recipient. Of what the supply is being made? Comprises of two or more taxable supplies. Of what? Goods, services, or both, or any combination thereof. How are they are supplied? Which are naturally bundled and supplied in conjunction with each another simultaneously in the ordinary course of business, and one of which is a principal supply. So this is how you can apart this definition. You can do the part of this definition and properly learn the definition. Let us try this once. Composite supply means a supply made by a taxable person to a recipient which comprises of two or more taxable supply of goods or services or both or any combination thereof, which are naturally bundled and supplied in conjunction with each another and in ordinary course of business, and one of which is a principal supply. One will be a principal supply and other will be the ancillary supplies. See the example. For example, you are ordering a mobile phone. So what are there in the box of mobile phone? You will have a handset, charger, charging cable and some other manuals or tools. Yes, these things you are going to get. Now this is another product. This is a different product. This is a different product. Yes, these are different product with different rates. So 18% rate, 20% rate, 10% rate. Yes. So these are different products, but we are supplying them all together. We are supplying them all together, which are naturally bundled. This is a composite supply. And among this, the supply of this handset of mobile phone is a principal supply, and the supply of charger and the cable along with this handset is an ancillary supply. And under composite supply, the tax rate will be considered is of the principal supply. Say for example, 18%, 20%, 10%. On the whole supply, which tax rate you are going to apply? You are going to apply the tax rate of the composite supply, principal supply. So principal supply is the supply of handset. So the 18% tax rate will be applicable on the whole supply. This is what about composite supply. Now, under the definition, there is an important word naturally bundled. Naturally bundled. Sir, what do you mean by naturally bundled? These are some cases where we are going to consider it as a naturally bundled. Perception of the consumer. The consumer is having an imagination that these things come together. Yes, so it is naturally bundled. Number two, majority of service provider in a particular area of business provide the similar service. Yes, say for example, you are having a three restaurant in your area. Restaurant number one and two provide mouth freshener while they are giving you the bill, but restaurant number 3 is not providing the mouth freshener while giving you the bill. So which restaurant will you like? 1 and 2. You will avoid going to restaurant number 3. So forcefully the restaurant number 3 is going to think that the majority of the service provider in my area is providing the same service, so it means naturally bundle. I too have to provide the same service. Yes. Now, third point, nature of various services, bundle of service. Say, for example, it is by default naturally bundled. Or next, there is a single price of the consumer pay the same amount. For example, event management, event managers. While the management of, say, while the function of wedding, if you are planning a function of wedding, what generally people are doing, they go to the event management and they give them a contract. Yes, though they can arrange the things separately by their own, but they are giving the contract. The customer is saying that give these things for a single price to me. The customer is saying that the give these things for a single price to me. I am ready to pay. The customer is demanding you to make this naturally bundled. So it is naturally bundled composite supply. Next, advertise as a package. Say when there is advertise of a say cooking pan, along with that cooking pan, a wooden stick is given. Dosa, tawa, uttapam tawa, a wooden stick is there. Yes. So in the advertisement, you are showing that with this pan, you are going to get a wooden stick also. So this is advertised as naturally bundled. Different elements are not separately available. So for example, you have purchased a product, any product coming with a simple spare part that is not available in the market, that is a naturally bundle. Okay, these are the examples of naturally bundle. So this is all about composite supply. Now coming towards the mixed supply. Mixed supply means two or more individual supply. There in composite supply definition it was taxable supply. Here it is individual supply of goods or services or any combination thereof made in conjunction with each another by a taxable person for a single price. This is an important term in the definition, for a single price, where such supply does not constitute a composite supply. For example, a Cadbury celebration pack. In this, you are going to get Cadbury Dairy Milk Crackle, Fruit and Nut, Roasted Almond, 5-star 3D, different. Yes, but it is like that. These things you can purchase separately. Yes, you can purchase separately. You can buy Crackle also separately, Fruit and Nut also separately, 5-star 3D also separately. But the seller is making a combination of this for a single price. When you buy the celebration pack, beside the pack there is not single price written of each and every product in the package. They will not show you that crackle this much, fruit and nut this much, 5-star 3D this much. There will be a single price, not a different price and the total calculation. There will be a single price. This is the price for this package. And the description you will get these things in the package. So there is a single price in the package and which are not naturally bundled, but the seller is forcefully making this at a bundle for say a presentation or occasion or like a gift pack that can be sold. So this is a mixed supply. In the mixed supply, the tax rate, say for example, crackle is having a tax rate of 18%, fruit and nut is having a tax rate of 20%, 5-star 3D is having a 10% rate. Which tax rate we should consider? In case of mixed supply, the highest tax rate will be applicable on the whole supply. So here 20% tax rate will be applicable on the whole supply under the mixed supply. Now, coming towards some clarification. First one, printing industry issue. Say, for example, when you are going, case number one, when you are going to say Xerox shop, printing shop, case number one, you provide your own format, you provide your own material, you will give the PDF to the printing person, and in return that printing person is going to give you the set of the notes. For example, you took the GST PDF, you went to the printing shop, and that PDF you gave to the person, he printed and given in return the notes. Now, sir, there are involvement of paper, ink, and the bunch is being given as a goods. But the person there is providing the printing services. So, involvement of both goods also, service also. So, in this composite supply, which is the principal supply? If you gave the printing person your own content, and in return he is giving the printing notes to you, he is giving the content in a printed format to you, though there is supply of goods also and service also, the composite supply will be termed as supply of service, and the principal supply will be the supply of service. Case number one done. Now case number two. What if you went to the printing person and he is supplying the printed notes having his own content? He is having the own content. His own content. You are not giving the content. In that case, it will be a composite supply, and the principal supply will be supply of goods. So remember, if any printing industry issues, you are providing the content, then supply of service. And if you are not providing the content, the person himself is generating the content and providing you the printed format notes. Then in that case, it will be supply of goods. Now, food supplied to the patient. This thing we are going to discuss in the exemption chapter, not discussing here. Activity of bus bodybuilding. Activity of bus bodybuilding, it means, say for example, you have outsourced the work. You are a Tata company, the bus of Tata company. What the Tata company had did, the metal frame of that bus is being outsourced by Tata company to say another company. Now the another company has two choices. Choice number one, Tata company is going to give the raw materials and they are going to make the metal frame of the bus and give it to Tata company. In this case, it will be a supply of service. Option number two, they will purchase raw material their own. The company is going to purchase raw material their own, and then they are going to create the metal frame of the bus and going to give it to the Tata company. Supply of goods depends on the case. Rethreading of tires. Rethreading means, yes, you are correcting the torn tire. The tire which is being defected or damaged, you are correcting that tire. So in case of rethreading the tires, say for example any say punctured tire is there, you are going to rethread the tire and properly again you are going to reuse it. If the person is having a business of selling the rethreaded tire, means he is rethreading the tire and selling it, then it will be a supply of goods. But the person is not having the business of rethreading the tire and selling it. He is going to give service only of rethreading the tire to the customer. If any customer came with the tire, he will rethread it, then it will be a supply of service. If the customer is demanding to the seller that you are also having rethreaded tires in your showroom, please give me that tire, then it will be a supply of goods. So this is the clarification. And the last one, supplier food or beverages in a cinema hall. This is an amendment. Yes, this is an amendment. The last thing. Now, in this supply, what is happening? When we visit the cinema hall, there, along with the presentation of that picture, cinema, entertainment, you are going to have some eatables. Yes, you are going to have some eatable. So, what is the scope of supply in this thing? Now, check whether this eatables you are going to have from the combo ticket. While purchasing the ticket of the cinema, you are getting a combo pack along with the price of that ticket. If in that ticket itself there is a combo of food or beverages, then it will be termed as composite supply. It will be termed as composite supply. And what will be the principal supply? The principal supply is the supply of cinema. Yes, is the supply of cinema tickets. That will be the principal supply. Though you are supplying cinema tickets also along with food and beverages, if you are supplying both in a combo pack, then it will be a composite supply, and the principal supply is the supply of cinema. Yes. But what if you purchase only ticket? You are supplying only ticket, and a particular person, a customer, while in the process of interval, will go at the restaurant or catering over there and then purchase inside, not along with the ticket, not a combo offer with the ticket. He is purchasing the ticket separately and he is purchasing the food and beverages separately. In that case, both supply will be independent supply, and the treatment of both supply will be different. This will be a say a cinema supply, a supply of cinema, and this will be a supply of food and beverages. So this is the clarification. So all things are done. So the supply chapter is done. We are going to revise the topic charge of GST. When we are talking about the charge, there comes the section number 9 of the CGST Act and section number 5 of the IGST Act. So let's start the revision of this topic. Charge. As I told you, section 9 of the CGST Act, section 5 of the IGST Act. Now this section is being distributed like this: 9.1, 9.2, 9.3, 9.4 and 9.5, or 5.1, 5.2, 5.3, 5.4 and 5.5 of the respective acts. Now what this section tells about, when we are seeing the section 9.1 and 5.1, both talks about the forward charge. In forward charge, when the supplier is supplying to the recipient, the responsibility of paying tax to the government is of that supplier. This is forward charge. So under 9.1, forward charge, intrastate supplies are covered, and 5.1, interstate supplies are covered, because 5.1 is the IGST Act, and IGST Act interstate supply, intrastate supply for CGST as GST Act. Yes. So 9.1 talks about intrastate supply, on which forward charge CGST will be applicable, and 5.1 talks about interstate supply, on which forward charge IGST will be applicable. Now coming towards 9.2.9.5.2. Before that, you all know, I think, the meaning of intrastate and interstate. Intrastate means within the states, and interstate means among the states, from one state to another. Now, coming towards 9.2.5.2, 9.2.5.2 tells about the date, that on a future date, petroleum products, on a future dates, on this supply, CGST or IGST, as the case may be, will be notified from a future date. So today there is no CGST or IGST on this product, but a future date will be there. On the recommendation of the council, the government is going to notify a future date when GST will be applicable on this goods also. Now, the core portion of this chapter, 9.3.5.3. 9353 and 9454 talks about the reverse charge. Yes, the reverse charge. Again, what is the reverse charge? Totally opposite of the forward charge. In the case of reverse charge, now the responsibility of paying tax to the government is with the recipient. Yes. So the taxable person in this is will be recipient. This is about reverse charge. This thing we are going to discuss in detail right now only. And 9555 talks about e-commerce operator. In cases notified under 95 and 55, the e-commerce operator is the taxable person who is going to pay tax on the notified supplies. So let's begin this. Yes, let's begin the revision. Now this is a list of all the goods under reverse charge. This list is applicable at the final level, but at the intermediate level, you are given as an example of this list. This list of goods is not applicable in the inter level. It is applicable at the final level. You can see these things. Yes, these things. So a supplier of BD wrapper leaves, cashew nuts, used vehicles, supply of lottery, waste scrap, silk yarn, seized or confiscated goods, raw cotton, tobacco. The supplier of all these goods can enjoy the reverse charge mechanism, and hence the tax will be borne by the recipient. Yes, the recipient will be the taxable person under the supply of all such goods. Now, going towards the main core area of this chapter, the list of all the supply of services. Yes, repeating the word services. Supply of services that are covered under the reverse charge. Section number 93 and 53. Now, in this section, we'll see the list. You can see the list of 3 pages. Now, this list is going to tell us in which type of category of supply who will be the taxable person under reverse charge. As we have seen that under the reverse charge, always the taxable person is the recipient of service. Always the taxable person will be the recipient of service. So here also in this we are going to figure out in each and every category of supply service who is that recipient which is taxable person under the reverse charge. Now, number one, service provided by way of sponsorship. Service provided by way of sponsorship. Now here, see who is the supplier? Any person. Any person. And the definition of person we have seen in the definition video itself. It includes AOP, BOI, AJP, uh, say for partnership firm, LLP, company, and HUF, individual, all. So that definition of person. So any person supplying the service, and it should be supplied to any body corporate or partnership firm located in the taxable territory. If any person supplies these services to a body corporate or partnership firm located in the taxable territory, then only reverse charge will be applicable. And under the reverse charge, this recipient is going to pay the tax. Now, number two, legal services. Legal services provided by whom? Individual advocate, senior advocate, or firm of advocate provided to whom? Business entity located in taxable territory. Now, sir, who is the business entity under GST? Any entity who is doing the 9 activities as defined under the business. Yes, we have seen the definition of business in the definitions video. So any entity who is doing business 9 activities, the 9 activities of business under the business definition will be termed as business entity. So here, if any advocate, individual advocate, firm of advocate, senior advocate is providing services to a business entity, then only reverse charge will be applicable and the recipient business entity is going to pay tax. Now, coming towards next one, arbitral tribunal. Any services provided by arbitral tribunal to a business entity, reverse charge will be applicable. Now the fourth one, any services provided by, we can see the supplier first, government. Either central government, state government, local authority, or union territory, anything it may be. So any services, I am repeating the word, any services provided by government to whom? To whom? To a business entity located in the taxable territory will be under reverse charge. But this entry excludes 4 types of services. Excluding these services, any services provided by the government will be under reverse charge. Yes, if provided to the business entity. Now, what are the services excluding? If these 4 services are excluded, it means what? It means reverse charge will not be applicable in these cases under this entry number 4. under this entry number 4, reverse charge will not be applicable in these cases. What are the things? Renting of immovable property, services specified below. Number 1, service by the Department of Post, Ministry of Indian Railways, services in relation to any aircraft vessel inside or outside the presence of a port or airport, transportation of goods or passengers. So this all services are excluded and hence not covered under the reverse charge. Yes, this all services you may read it. Any service by Department of Post, anything, Ministry of Indian Railways, this is an amendment. Yes, any services in relation to vessel, aircraft inside and outside a port or airport. Yes, transportation of goods or passengers. Say for example, the government buses, city buses in which you transport. Is there anything like this that the conductor while cutting the ticket will say to you, now you pay the tax under reverse charge? No, because reverse charge is not applicable on such cases. Now, now looking forward, next entry. Now this number 1 service which was excluded is covered here. Renting of immovable property by government, by central government, state government, local authority, union territory, but excluding the Ministry of Indian Railways. Excluding the Ministry of Indian Railways when these services are supplied to any person registered under the Act. Any person registered under the Act. In that case, reverse charge will be applicable. If any type of renting of immovable property by the government is provided to any person who is not registered under the Act, then forward charge, otherwise reverse charge. Yes. So coming forward to the next entry. Now, renting of residential dwellings. Renting of residential dwellings. In this case, any person giving on rent his residential dwelling for the purpose of residence to any registered person, then reverse charge will be applicable, and that registered person, the recipient, is going to pay tax. Now, coming forward to the next entry, now we are going to quickly revise the entries. Any services by a director to a company or body corporate located in the taxable territory, yes, it will be reverse charge. Now, on these services of the director, that company or body corporate is going to pay tax under reverse charge. Any service provided by an insurance agent to person carrying on insurance business. Person carrying on insurance business, that too also will be under reverse charge. Recovery agent. Yes, banks appoint recovery agents to recover the loan installments which are pending by the person who is going to pay the installment. So recovery agent providing the recovery services to the banking financial institution, non-banking financial institute located in the taxable territory, then it will be under reverse charge. Yes, then it will be under reverse charge. Say if I tell you recovery agent providing recovery agency services to any person other than a person doing banking business. Say he is providing recovery agent services to insurance business provider. So it will be reverse charge? No, it will be forward charge. Reverse charge only when it is provided to this three. Remember, individual direct selling agent. Yes, direct selling agent other than body corporate partnership form LLP providing the services to a banking company and NBFC, non-banking financial company, then it will be under reverse charge, otherwise forward charge. A business facilitator and a business correspondent. These two terms we have already discussed in the definition video. You may go to the last portion of the definition video to have the meaning of these two terms. Yes. So business facilitator providing the services to a banking company located in taxable territory and the agent business correspondent providing services to such business correspondent, then it will be under reverse charge. It will be under reverse charge. Now, members of overseeing committees providing services to RBI. Any services provided by member of overseeing committees to the RBI will be under reverse charge. Yes, very easy. Now, lending of securities. In that case, when the person supplier will be the lender and recipient will be the borrower. So in that case, borrower is going to pay the tax on such services. See, uh, lending the securities or borrowing the securities is not a goods, neither services. But any extra consideration charge for transacting the securities, then it will be termed as services. That's why this thing is covered here. Now, we are going to see the copyright things. Two activities related with copyrights. What are the activities related with copyrights? See, whenever any say, for example, any any author or any say artist, music composer has done any work and any copyright is being taken on that work. So nobody can copy it. Nobody can copy it unless and until you get the permission of that person, the owner. So giving that person to any other person, you will receive consideration. It means that person either buy your copyright or that person is going to temporarily buy your copyright for a certain period of time. In that case it will be reverse charge if the supplier is a music composer, photographer, artist or an author, and the recipient is the music company, producer or publisher located in the taxable territory. In that case, the person who is selling his copyright for a temporary time, that consideration received will be under the reverse charge and tax will be paid by the recipient. But in case of author, there is an option. Yes, there is an option given to the author. By default, the author, if selling the copyright to a publisher, reverse charge will be applicable by default. But the author has an option to pay the tax under forward charge. Yes, if so, the author, if want to apply for this provision or option to pay the tax under forward charge, in that case, he should make a declaration. He should file a declaration. He should file a declaration in the prescribed form to the department also, and also on the invoice generated by such author. Invoice generated by such author, he should mention that a declaration on the invoice also, that I on my voluntarily, on my choice, opting to pay the tax under forward charge and not opting to pay the tax under reverse charge. Such like declaration they have to file. Yes. Now, supply of security personnel. Supply of security personnel means supplying security services. Yes, see, supplying security guard to a particular person, like these things. So we are going to see it when the person other than body corporate, from the whole definition of person, body corporate should be excluded. Other than body corporate, if any person is supplying such service of supplying security personnel by way of security services to a registered person located in the taxable territory, then only there will be reverse charge. Yes, then only there will be reverse charge. Here's an example. Say a partnership firm ABC supplying security persons to Reliance, reverse charge. If that firm, that ABC is not a firm, it is body corporate, then in that case, here there will be forward charge, because here it is written other than body corporate, any person eligible. If any person other than body corporate is a supplier, then only the reverse charge will be in effect. Otherwise not. But this security services reverse charge is not applicable to these two people. These two-person. Who are these two-person? These two-person are the department of the government, establishment of the government, or local authority, or any government agency which has taken registration in the act under section 51 only for the purpose of deduction of tax, TDS. Only for the purpose of TDS they have taken the registration, and they are not making any further taxable supplies. They are not making any further taxable supplies. Only in that case, if this is the recipient, then reverse charge will not be applicable. Or the case number 2, composition scheme. Person registered under the composition scheme section 10. Section 10, that too is going to be a forward charge. Yes, here also reverse charge will not be applicable if these two people are the recipients. Now, the last two entries under section 12.3, GTA, Goods Transport Agency. Now, who is the supplier here? Goods Transport Agency, where the goods are transported by road. Yes. And who is the recipient? Notified person. Who is the recipient? Notified person. Sir, who are the notified person? See, factory registered under the Factory Registration Act, society registered under the Society Registration Act, cooperative society registered under the Cooperative Society Registration Act, person registered under the GST Act, any body corporate who is established by any law, like company established under the Companies Act, like this, any partnership firm, whether registered or not, we have to highlight this one. Because every person they are saying that this should be registered, factory registered, society registered, cooperative society registered, company registered, but for partnership firm, whether they have been registered or not, they will be notified person. Whether registered or not, it will be a notified person. Now, yes, and again last one, CTP, NRTP, all these are notified person. Now see here, if GTA opts for, there is also given an option to the GTA for forward charge or by default reverse charge. If the GTA is saying that I will opt to pay tax under forward charge, then the rate will be 12% and ITC will be given. Input tax rate will be given. If GTA opts for reverse charge, tax rate will be 5%, but ITC will not be allowed under reverse charge. Now, in both the situation, either forward charge or reverse charge, tax will be paid only if these services are supplied by GTA to a notified person. Only in that case, either forward charge or reverse charge will be applicable. Only in that case. But what if the GTA is providing the services to a not notified person, who is not notified person, other than notified person, then it will be exempt. So taxable only if it is provided to notified person. Now here also this provision, this whole provision of GTA will not be applicable to one person. Whom it will not be applicable to a department of government, establishment of government, or local authority or government agency who has taken registration under the GST only for the purpose of deducting tax at source under section 51 and not making any further taxable supplies. To this person, this provision will not be applicable, and if this is the recipient, then the services will fall under the forward charge. Now, again, if GTA wants to opt the forward charge, they have to make a declaration. Yes, they have to file the declaration to the department, and also they put their declaration on the invoice that is being going to be given to the recipient. Now, the last one, where services provided by way of renting of motor vehicle. Yes, motor vehicle on rent, where the cost of the fuel is included in the consideration. It means no separate cost is charged for fuel. In the consideration itself, the cost of the fuel is being recorded. In that case, reverse charge will be applicable only if, see the chart, if say there is also the option for the person to pay under forward charge directly, but under reverse charge, observe that the supplier should be other than body corporate. The supplier should be other than body corporate and the recipient should be body corporate. Then only reverse charge will be applicable. Otherwise, in all the cases, forward charge will be applicable. So, to be a reverse charge case, you have to keep in mind that the supplier should be other than body corporate, but the recipient should be the body corporate. Then only reverse charge will be applicable at the rate 5%, otherwise forward charge at the rate 12%. So this is all about the section 9.3 and 5.3 of the act. Now heading towards the section 9.4, only 3 entries are there. Yes. Now, when we are talking about 9.4, 9.4 is also a reverse charge, but in this case, supplier will be unregistered person. Supplier will be unregistered person. Now, in that case, point number one, when cement received from an unregistered person, in that case, reverse charge will be applicable and the registered recipient is going to pay tax. And capital goods, if these are received from an unregistered person, then, and the third entry we have to understand this from the chart. Now, see what the provision says, that if you are receiving any input and input services, say raw materials or any input services like labor, if you are receiving any input and input services, then we will permit you only 20%. You should receive from unregistered. It means minimum 80% you should receive from registered supplier. This is the criteria. Now see what the provision says, that input and input services should have been purchased from registered supplier this much out of 100%. Minimum 80%. Sir, what if actually we purchased only 60% instead of 80%? Now, if you have purchased 60% from registered person, then how much you have purchased from unregistered person? That is 40%. Now, among this 40%, how much is allowed? This 20 is allowed. And what about this 20? Now this 20 tax will be paid under reverse charge. Now this is all about this entry under 9.4. Now coming towards 9.5 and 5.5. Now what it says 9.5 and 5.5. It talks about e-commerce operator. So government has notified this 5 services under 9.5 and 5.5 for which the tax should be paid by the e-commerce operator. Yes, we have discussed earlier the meaning of e-commerce operator in the definitions video. You can refer the meaning of e-commerce operator there. Now coming, what entries are notified by the government? Number one, services provided by way of accommodation. Best example Oyo. Best example Oyo. Now, say one supplier is being registered on Oyo and is providing accommodation services through that Oyo. So in that case, not the supplier, not the recipient, that e-commerce operator Oyo is going to pay tax. Now, when this Oyo is going to pay tax, if the supplier is an unregistered person, in this case only up till now. Yes. Now next entry, transportation of passenger. Best example Ola, Uber, like these things, Rapido, like these things. Now in this case, whether registered or unregistered, the supplier, whether registered or unregistered, in both cases the e-commerce operator, when providing services by way of transportation of passenger, will have to pay tax under reverse charge, except in case of omnibus. Except in case of omnibus. Hi sir, omnibus case is now differently covered. Yes, just like that, restaurant service, Zomato, Swiggy. Yes, these two things also, when the supplier is registered or unregistered person, in that case also the reverse charge will be applicable, and Zomato, Swiggy, the e-commerce operator, will have to pay tax under the reverse charge. Now coming towards next one, housekeeping. Housekeeping means like application to find a plumber, carpenter, yes, a servant, like these things. Yes, so housekeeping services provided through any e-commerce operator, the supplier, if unregistered person, then the provision of 9.5 will be applicable. Now sir, we have been clarified here and here, supplier I should be unregistered person, but here supplier either registered or unregistered person, nothing matters. 9.5 will be applicable in both the cases, whether the supplier registered or unregistered. But in this case of accommodation and housekeeping, the supplier should be unregistered person, only then the 9.5 provisions will be applicable. Now coming towards the last entry, which is also an amendment, supply by way of services by way of transportation of passenger by an omnibus. I told you omnibus is differently covered. Omnibus, except where the person supplying such services is a company. So if say, I will give you the best example, Redbus. This is the e-commerce operator. Yes, say an individual, supplying this service of transportation of passenger through omnibus from Redbus, then 9.5 will be there. Redbus will have to pay tax. Yes, 9.5 will be there. Now if instead of an individual, a company is supplying such service through Redbus, e-commerce operator, in that case 9.5 will not be applicable, and the company under forward charge will have to pay the tax. Yes. Now this is all about the eco, and the last topic we are going to deal here, person liable to pay tax GST for the above e-commerce operator services. When the e-commerce operator is located in the taxable territory, the e-commerce operator itself will have to pay tax. Now what if the e-commerce operator is not located in the taxable territory? Then the representative person of that e-commerce operator have to pay tax. What if it is not located and no representative is there? In that case, the e-commerce operator will have to appoint a person in India who is going to pay tax on behalf of e-commerce operator. Now this is all about the chapter charge. Now next, section number 10, composition scheme. Yes, composition scheme, section number 10. So first of all, let me introduce what do you mean by the composition scheme. See, there are many small taxpayers and many small business persons who are paying tax or doing business. So to encourage a small business person or small taxpayers, a composition scheme has been reduced to charge a very lower rate of tax as compared to the normal scheme and provide less procedural documentary work to such small business person or small taxpayers to encourage their business and to encourage them to do more and more business. So that's why this scheme has came into effect. Now, continuing with the provisional part of this scheme, composition scheme section number 10. Now, there are two types of composition scheme, for goods and for services. Now, first of all, we are going to understand the composition scheme for goods. Now, section number 10.1, applicability. In case of composition scheme for goods, check the applicability first. Who can apply for the composition scheme? The person, the registered person whose aggregate turnover, the registered person whose aggregate turnover in the preceding financial year, the registered person whose aggregate turnover in the preceding financial year is not exceeding 1.5 crore rupees. It means the aggregate turnover of the preceding financial year was 1.5 crore or less. That registered person can apply for the composition scheme. This 1.5 crore limit becomes 75 lakhs in case of some special category of states. Which are those? Meghalaya, Arunachal Pradesh, Nagaland, Uttarakhand, Mizoram, Manipur, Tripura, Sikkim. You have to learn this. Yes, you have to learn this. Now, how can you remember this in a short way? See the first letters MANU. Manu. Manu has booked ticket for Sikkim on MMT. Manu went to Sikkim from MMT. Yes, this is the short way to learn this. Now, continuing with the portion. Sir, here's the word aggregate turnover. What do you mean by the word aggregate turnover? Yes, see here, aggregate turnover. It is a pan-based turnover, a turnover on single pan basis all over India. First of all, there are all types of taxable supplies. There are all types of taxable supplies either made by own or on behalf of others. Plus, all type of exempt supplies. Where we are talking about exempt supplies, it includes nil rate, wholly exempt and non-taxable. Yes. After that, export supplies plus interstate supplies plus value of supplies made by registered person from 1st of April to the of the financial year to the date of registration the composition scheme. See what happens in this case. We are making judgment of aggregate turnover on the basis of previous financial years. Yes, last preceding financial year we are making the decision of aggregate turnover on the basis of that year. Now here, when you are opting for a composition scheme and when you want to register in composition scheme in the current year also, from the date you apply for the scheme up to that date, from 1st of April of that current year, that turnover is also added to the turnover of the preceding financial year. So this is that thing only. The turnover from 1st April of the financial year up to the date he becomes liable for registration, that period also is going to be counted. The turnover of that period is also going to be added in the preceding financial year aggregate turnover. So these things are to be added in the aggregate turnover. See, this definition of aggregate turnover I am telling you from the perspective of the whole act, not for composition. It is from the point of view of the whole act. What things are not needed in composition, we can remove it afterwards. Next, what things we should exclude from the definition of aggregate turnover? From the definition of aggregate turnover, we should exclude inward supplies in RCM. Reverse charge mechanism. Yes, because that's not your turnover. That is the turnover of the person from whom you have received the supply. You are paying the tax on their supply in under reverse charge, but it's not your turnover. It's them turnover. Yes, it's their turnover and your turnover should not be included. Yes, in your turnover RCM should not be included because it is the turnover of the supplier for which you are paying tax under reverse charge. Also, taxes and GST should not be included. Yes, if anything is given like 1 lakh turnover inclusive of taxes, So from them, you have to separate the tax amount and the non-tax portion of turnover. So here we are going to consider only that portion of turnover which is exclusive of taxes. And again, the last term, services of extending deposit loan advances insofar as the consideration is represented by way of interest or discount. This thing I am going to explain you later. Yes. So this is the definition of pen-based aggregate turnover. So that aggregate turnover, if less than the prescribed limits, then the person can apply for composition scheme. Along with section 10(1), the person applying for a composition scheme should also keep in mind the second proviso to section 10(1). The second proviso to section number 10(1) talks about permitted marginal supply of service. See, in this modern time, no person is there who will not supply service along with goods. Now, as of in this modern time, supply of service is complementary with supply of goods. Either it may be 1% of the whole supply. The supply of service is 1% of the whole supply. You will supply service also along with supply of goods. Every nature of business, you will do this. Now, when we are talking about composition of goods, there should be a supply of goods. But then also we are allowing you some marginal supply of service. Yes, you can supply service, but up to a specified limit. See the limit. The limit is higher of 10% of the turnover in state or 5 lakhs. Higher of 10% in the turnover in the state and 5 lakhs. Turnover in the state, in the definition of aggregate turnover, you are calculating in the pan basis all over India. But if you limit it to the territories of a particular state, it will become the state turnover. So 10% of that state turnover the preceding financial year or 5 lakhs, whichever is higher. Say for example, the preceding financial year state turnover was 70 lakhs. 10% of this will be 7 lakhs. Whichever is higher, 7 lakhs will be higher. So the permitted amount of limit of services is 7 lakhs. If your services along with supply of goods are within this limit, then okay. Otherwise, you will not be eligible in section number 10(1) for the composition scheme. Now, while calculating the marginal supply of service, we should note two things in mind. We should keep two things in mind. First of all, restaurant services. As though it is a type of service, but under composition, it comes under goods. So that's why while calculating marginal supply of service, we have to reduce this service. We have to ignore this service. First one that. And second thing, read this service. Service of extending deposit loans advances insofar as the consideration is represented by way of interest or discount. The same thing as we were reading below in the definition of aggregate turnover. That same thing. Now here it is telling that while calculating the marginal supply of service, while calculating the aggregate turnover, while calculating the state turnover, and while calculating the service allowed, you should ignore this type of service. Yes, you should ignore this type of service while calculating these four things. So this is all about a composition scheme for goods. Now, coming towards composition scheme for services. Section 10(2)(a) applicability. Section 10(2)(a) composition scheme for supply of service is applicable only in the case when the registered person is not eligible to opt the scheme under section 10(1). Yes, in this 10(1) is not eligible to opt. First condition, and second is aggregate turnover in the preceding financial year has not exceeded 50 lakhs. These are the two conditions in case of services. Now, as of in case of goods under section 10(1), there was a limit of marginal supply of service. Say goods plus service. There was a limit on service. Now here when you are supplying service plus goods, is there any limit on goods? There is no limit on goods. There is no limit on goods. Now the rates, you can have a look on the rates. If for the case of example of goods, manufacturer 1% means half percent. Restaurant 5% means 2.5%. Others 1% means half percent of CGST or SGST. And in case of services, the rates are 6%, that is 3% and 3% CGST, SGST. So these are the rates under composition scheme. So these are the rates under composition scheme. Now, coming forward, section 10(3). What section 10.3 says? It says that agreed that you have seen that preceding financial year turnover is not more than the prescribed limit, that is of 1.5 crore, 75 lakhs or 50 lakhs as the case may be. But you have to also take care of that in the current financial year when your composition scheme is going on, in that period also your aggregate turnover should not cross the prescribed limit. So you have to check of the preceding financial year also and the current financial year also of which you have opted the composition scheme. So both the turnover you have to check. That is section 10.3. 10.4 other condition. Composition dealer cannot collect a tax. Composition dealer cannot collect tax on outward supplies. Composition dealer is not eligible to claim ITC. No ITC will be given. And composition dealer cannot issue tax invoice. No tax invoice. What he can issue? Only bill of supply. And if any provisions are been misleaded, fraud or any other cases, say you have crossed the limit, then also you are paying tax under composition scheme, and if the proper officer caught that thing, penalty provisions will be attracted. Yes, that is section 10.5. So this is all about the eligibility and the sections. Now, what things you should take care of before opting for composition scheme? First of all, non-taxable supplies should not be done. You should not be a supplier of non-taxable goods. Yes, no interstate outward supplies of goods or services. No interstate outward supplies. Sir, interstate inward supplies can be done. Yes. You can have inward supply, but no outward supply of interstate nature will be considered for composition scheme. Not eligible. Now, third one, person supplying any services through ECO who is required to collect tax at source under section 52. Now, the person who is required to make registration under section 52 only for the purpose of TCS, that eco, and the supplier who is supplying through that eco cannot opt for composition scheme. He is not eligible. After that, CTP and RTP are not eligible for composition scheme. And lastly, manufacturer of notified goods in case of goods and manufacturer or supplier of notified goods and services. Now here, what are the notified goods? Ice cream, pan masala, tobacco, aerated waters, flash bricks, flash aggregate, fly ash blocks, bricks of fossil meals, etc. etc. This notified goods manufacturer cannot opt for composition scheme in case of goods. And when we are talking about services, manufacturer as well as the supplier also of this notified goods cannot opt for composition scheme. Now this is all about you should take care before opting composition scheme. Now what should be taken care of after opting composition scheme? After opting composition scheme, you have to comply with these conditions. Number one, the 9394 tax shall be paid separately, not under the composition scheme. Sir, 9394, these are the reverse charge scheme. Yes, under reverse charge scheme, if any taxes is being paid by the recipient other than the composition scheme tax, then this tax amount should be differently calculated and paid, and composition scheme tax amount should be differently calculated and paid. Neither he can become a CTP or NRTP. Yes, he shall mention the words on the invoice, not invoice, bill of supply. He cannot issue tax invoice but can issue bill of supply, and on the heading of that bill of supply he should mention that I am a composition taxable person and not eligible to collect tax on supplies. Not eligible to collect tax on supplies. And also on his signboard or notice board, he should mention that he is a composition taxable person. Yes, this is all about who is eligible or not. Now, opting for composition levy. Now, there are two cases. Case number one, unregistered. Case number two, registered. Now, for example, an unregistered person today became registered. Today he became liable for registration. Today he crossed the threshold limit. Yes, today, just now, he crossed the threshold limit. Now, he will apply for the composition or the regular. When he put the application for registration, at that time only he should intimate the proper officer whether he is going to opt for composition scheme or not. If at the time of registration itself he opts for composition scheme, then the composition scheme will be effective from the date of registration itself. Yes, from the date of registration itself. Whenever the registration process may be, whenever he get the registration from that day, he can enjoy the composition scheme. But what if he is already registered and he want to shift from normal scheme to composition scheme? If this is the case, then whenever he may apply for the composition scheme, the effective date will be the 1st April of the next financial year. Say this is the month of August and now I am applying for composition scheme. Then my composition scheme will be effective from the next financial year 1st April. Got the point? So this is all about the intimation. Now withdrawal. Say you when the scheme will be withdrawn, the scheme will be withdrawn in case number 1. If you contravene any provisions of the act, yes, then it will be withdrawn from the date of intimation by that taxpayer voluntarily. Voluntarily it may be withdrawn that you don't want to continue under composition scheme. You can voluntarily apply for withdrawal of that scheme. In that case, the effective date will be the date of application, and the proper officer may forcefully tell you to withdraw. Yes. So in that case, the date determined by the tax authorities will be the date of withdrawal from that composition scheme. So this is all about a revision of composition scheme section number 10. We have completed it. So time of supply. So time of supply under GST. First of all, let me tell you why this topic is there, time of supply in the GST. Say, for example, there are no 100% of the transaction in which you receive the money as soon as you make the supply. Say, for example, I make a supply of goods of rupees 1 lakh. I am not going to receive it right now if this is a credit supply. Yes, credit sales. If it is a credit sales, I am not going to receive the money right now. I will receive the consideration, say, after 1 month, after 2 months, like this. Like this, yes. So, what the taxpayer will tell, though the supply is made today, but I will file this return related with this supply 2 months after when the payment will be received, or I will pay the tax 2 months after when the payment will be received. If this happens, there are number of transactions like this. So what will happen with this tax mechanism? What will happen with the revenue of the government? So for this, the government inserted the revenue. The government inserted this topic of time of supply under GST to fix the month of which this supply is, so that accordingly the person making the supply can pay the tax in the return of that month. So basically, time of supply fix the time, the month of the supply made. So continuing with the topic, time of supply. This topic comprises of section number 12, 13 and 14. Section number 14 is dealt at the final level. It's not in this level, intermediate level. In this level, we are going to study section number 12 and 13. So basically, section number 12 talks about time of supply in case of goods. And section number 13 talks about time of supply in case of services. So yes, let's start with the first one, time of supply in case of goods. Now here we are going to learn the two section 12.2 and 13 sorry 12.2 and 12.3. 12.2 and 12.3. Now 12.2 talks about time of supply in case of goods in case of forward charge. In case of forward charge, it means in case of forward charge we have to apply the section number 12.2, and in case of reverse charge we have to apply section number 12.3. Now 12.2, what 12.2 talks about: in case of forward charge, time of supply of goods will be earliest of the following. Earliest of the following. Earliest of date of issue of invoice, last date of issue of invoice, and date on which supplier receives the payment. From this, the first one, date of issue of invoice by the supplier. It means the date putted by the supplier while issuing the invoice. Yes, the date of invoice, of which date this invoice is. It is very simple. The date given by the supplier while issuing the invoice, that will be the date of issue of invoice. Next, last date of issue of invoice. Sir, what can be the last date of issue of invoice? Now here comes section number 31 in Act. 31. 31 talks about time limit for issue of invoice. Yes, under the Act, time limit for issue of invoice. Now, 31.1 talks about goods. 31.2 talks about services. Now, we are dealing with the section number 31.1 first. Now, see here. Section number 31.1, time limit for issue of invoice in case of supply of goods. Number 1, where there is involving a moment of goods, where there the supply involves the moment of goods, what will be the last date of issue of invoice? The last date of issue of invoice will be before or at the time of removal of such goods for supply. Means when I am making a supply and removing the goods for supply. So at the time of removal of such goods or before such time, I can issue invoice, and this will be the last date when I should issue the invoice. When I should issue the invoice. In other cases, when the delivery of goods are making available there to the recipient, this will be your last date to issue of invoice. If your invoice should be issued on this date or before this date. Again, next point, continuous supply of goods. What do you mean by continuous supply of goods? I give the example of a milkman. Daily, the milkman in the morning or the evening comes to the house. He gives you the milk every day, and he takes the payment monthly at the end of the month. After providing all the goods all over the month, he will issue a statement, periodical statement each and every month, and according to the statement you are going to make a payment every month. So in such cases, what will be the time of supply? No, what will be the last date of issue of invoice? The last date of issue invoice such cases will be before at the time of issuance of periodical statement or receipt of periodical payment, whichever is earlier. Whichever is earlier. Either you have paid first or either you have received the periodical statement first. Whichever you have received first, that will be the last date that you have issued the invoice. In case of goods sent on taken on approval basis, it means sale or approval basis. Say for example, this happens in the normal transaction of the goods, business transaction. You can take the goods, if you like it then pay for it, otherwise return this goods. Sale on approval basis. Now what can happen in such cases? So when you sell a goods on approval basis, the person will approve and say that I like the goods and I am going to keep the goods. It means the supply has done. The supply is done. Now when the supply is done, that will be the last date of issue invoice. Yes, when the approval is being received by the supplier. Yes, but what if the person is not giving the approval? If the person is not giving the approval, how much we should wait to fix the time of supply, to fix the last date of issue of invoice? How much we should wait? The GST authority says that the supplier can wait the whole life, but we are going to wait only for the period of 6 months. See, only for a period of 6 months. From the date you have made the supplies, you have sent the goods on approval basis, from that day to the 6 months will wait. After the day lapse from the 6 month, say from the 6 month have completed, the next day from the 6 month, that will be your last day you should have invoice issued by the supplier. Got the point? So these are the time limit for the issue of invoice by the supplier. Means the last date of issue of invoice by the supplier. And if the invoice is not issued within this time limit, then the last date will be fixed and it will be here, the last date of issue of invoice. Next comes the date of payment, the date on which the payment is received by the supplier. Among this, whichever will be the earlier will be the time of supply in case of goods, in case of forward charge. Now, coming towards notification number 66 by 2017. What this notification says? This notification says that in case of advance payments received, in case of advance payment received where supply is about to make, where the supply is pending, in that case apply notification number 66 and 2017, and TOS will be the earliest of date of issue of invoice and last date of issue of invoice. Now here no date of payment will be taken in decision making of time of supply, only the last date of issue invoice and the date of issue of invoice. According to this two, you are going to make the decision what will be the TOS in case of advance payment received where notification number 66 by 2017 has been applied. Yes. So we have done with these two things, the normal provisions and the notification. Now there is one clarification and amendment in this attempt. Yes, this is a fresh amendment, that while applying notification number 66 by 2017, you should not consider supplies made by a registered person by way of specified actionable claims. In that case, you should not consider notification number 66 by 2017. You should make the decision of TOS with this supply by using the normal provisions. Yes. So this is all about the forward charge section number 12.2. Now we are going towards section number 12.3, the reverse charge. In case of reverse charge, in case of reverse charge of supply of goods, the TOS will be earliest of date of receipt of goods, date of payment, and 31st day from the date of issue of invoice by the supplier. 31st day from the date of issue of invoice by the supplier. Among these three, whichever will be the earliest will be your TOS in case of reverse charge of supply of goods. Now, this is all about the TOS of goods of section number 12.2 and 12.13. Now going towards section number 13.2 and 13.3. Again, starting with 13.2. Forward charge. In the cases of forward charge in case of supply of services. Now, if the section is 13, it is of services. Now, in that case, TOS will be what? Again, two cases. Check that invoice is issued within the time period or invoice not issued within the time period. Now, here the two words are common, within the time period and within the time period. So, what is the time period? For this, we are again going towards section number 31. Now this is what time period is. Section number 31.2. Time period in case of supply of service. When the invoice should be issued. The last date of issue of invoice. Number 1. Before or after the provision of service, but within 30 days from the date of supply of service, and 45 days in case of insurance, banking, financial institution including NBFC. Say from the date you have provided the services, from that day within 30 days or 45 days as the case may be, or before provision of such service, you should issue invoice. If the invoice is issued before provision of service or within 30 days or 45 days of provision of service, it will be termed as invoice issued within time. Yes, here the term is invoice issued within time. See here, invoice issued within time. This is the time. This is the time period of issue of invoice. Before the service or after 30 days or 45 days, within that days from the provision of service. If issued within this time period, then we'll term it as invoice issued within time. But what if the invoice is not issued within this time period? This will be termed as invoice issued not within time period. Invoice issued not within the time period. Now, in a case of continuous supply of service, in case of continuous supply of service, invoice should be issued. Case number 1, if in under the contract the due date of payment is given, the due date is given, so that due date, so an invoice should be issued before the due date of payment given as per the contract. If there is no due date given in the contract, then the due date of payment is not known, then before when the supplier service receives the payment. Check when the payment is issued. Before that, the invoice should be issued. If issued before that, it will be termed as invoice issued within time. If issued after that, it will be termed as invoice issued after the time. Yes. And the last one, sir, we are not knowing the due date of payment. We have not received the payment. So what we should do? In that case, your last date will be the date of completion of the milestone event which is linked with the price, linked with the payment. The event that is linked with the payment, that event happens, so the happening of that event will be your last date of issue of invoice. Now if your invoice is issued within such time period, it will be called as invoice issued within time period. If invoice is issued within time period, then apply this clause, otherwise apply this clause. So check whether your invoice is within time or not. Say, we'll talk first the case number 1. Invoice is issued within time. If invoice issued within time, then your TOS will be earliest of the following: date of issue of invoice by the supplier or date of receipt of payment. If invoice is not issued within time, then your TOS will be earliest of date of provision of service or date of receipt of payment, whichever is earlier. So this is what section number 13.2, forward charge in, so TOS in case of supplier services under forward charge. Now coming towards reverse charge, section number 13.3, reverse charge. Earliest of the following will be the TOS, date of payment or 61st day from the date of issue of invoice by the supplier. 31st day in case of goods, and now here 61st day in case of services. This is the difference, number 1. And there was also date of receipt of goods. Here that is not given. Here only two things: earliest of date of payment and 61st day from the date of issue of invoice by the supplier. In case of reverse charge, section number 13.3, in case of supply of service. Now when we are discussing about the word payment, receipt of payment, again receipt of payment can be derived as earlier of date on which the payment is recorded in the books of amount accounts, or date of payment is credited debited to the entity's bank account. Earliest of these things. Check when the payment is recorded or the payment is debited or credited to the bank account. Among these two, whichever will be the earlier, that will be called as date of payment. Date of payment. Wherever the date of payment term has came, date of payment, date of payment, date of payment, date of payment. Date of payment means this thing, earlier of these two things. Now this is what section number 12 to 13, 12 to 12.3, 13 to 13.3 talks about. Now we are going to study 12.4 and 13.4. Now see, 12.4 and 13.4. 12.4 and 13.4 talks about the vouchers. Say for example, case number 1. If I gave you a voucher and the voucher clearly tells that with this voucher you are going to, on redemption of this voucher, you are going to get a one veg cheeseburger on the Burger King store. Yes. So what is this case of identifiable? Is the voucher identifiable, that what you are going to get? Yes. Identifiable? Yes. So what will be the TOS in that case? In that case, the TOS will be the date of issue of the voucher. See, I gave you the voucher today itself, and the voucher is saying that you are going to get a vegetable cheeseburger at the Burger King store, and you are going to redeem it in the next week. You're next going to the store to the next week, and you are going to have the burger, eat the burger. So that is the date of redemption next week. But what is the date you have been given the voucher? Today, date of issue of that voucher. If the voucher is identifiable, that TOS in that case will be the date of issue of the voucher. Date of issue of the voucher. Now other cases, if not identifiable on the voucher, say for example I gave you a voucher and I have told that on the Burger King store you are going to have anything which is under 100 rupees, anything which is going to be under 100 rupees, this thing you are going to have. So the voucher is identifiable? No, the voucher is not identifiable. Means other cases, In that case, TOS will be date of redemption of the voucher. It means the next week when you are going to visit the store and when you are going to redeem the voucher and have the goods, that will be your TOS. That will be your TOS. Now this is section 12.4 and 13.4. Going towards section number 12.5, 13.5 residual cases. It means when you are not able to determine TOS according to the above provisions, according to the earlier provisions given above. When you are not going to determine TOS as per the other provisions, you are going to come here for the determination of the TOS. Now, what is this? Case number 1. Check that whether periodical returns is required to be filed. In case of a taxpayer, if periodical returns are required to be filed, so in that case TOS will be the due date of such filing such return. Due date of filing of such return. In case no return is required to file and you are not able to determine TOS in other provisions, then what is the last provision, residuary provision? Date of payment of tax. The date on which the tax will be paid, that will be your TOS. Now coming towards the next provision, 12.6 and 13.6. Now see, this talks about TOS in case of addition in value. Addition in value by way of interest, late fee, penalty, etc. Say for example, today I made a supply of goods of rupees 1 lakh. So I made supply today, but I am going to receive payment after 2 months. After 2 months also I am not receiving the payment. So what I am going to charge? I am going to charge interest, late fee or penalty. When I made the supply of this 1 lakh goods, the supply TOS, time of supply of these goods of rupees 1 lakh has been generated. TOS has been generated. Yes, for this 1 lakh, TOS has been generated earlier. But after 2 months, when you are having an additional amount by way of interest, late fee or penalty, for that amount, no TOS has been generated. Say for example, on this 1 lakh rupees, you are receiving 10,000 as late fee or penalty or interest. On this 1 lakh you are receiving 10,000 extra. So what is the total value of supply? The total value of supply is 1 lakh 10,000. Among this 1 lakh 10,000, on the 1 lakh TOS is generated. Yes, but what about this 10,000? Also 10,000 is also value of supply, a part of value of supply. Tax is going to be calculated on this amount. Yes, so TOS need to be generated on this amount. So what will be the TOS? TOS will be the provisions according to section 12.6 and 13.6. So the TOS will be the date on which this addition in the value is received. On which this addition is value and received. So when this 10,000 amount will be received as interest, late fee or penalty, the date of receipt of such amount will be the TOS. Will be the TOS. So this is all about time of supply. So what are the section involved in this chapter? Section 12.2, 12.3, 13.3, 13.2 and again 12.4, 13.4, 12.5, 13.5, 12.6, 13.6 and again two more sections are there, 13.1 and 13.2. This all the sections are covered in this chapter of time of supply, value of supply. Yes, value of supply. First of all, I will tell you one thing. Value of supply under GST means that value on which you apply the GST tax rates. And applying the GST tax rates on this value, you get the GST tax amount. Yes. So basically, value of supply is that base on which you apply the GST tax rates. This value of supply is covered under section 15 of the CGST Act. So let's start with the problem with the provisions of section 15. So the section 15 is divided as say section 15.1, 15.2, 15.3, 15.4 and 15.5. But for our examination purpose, we have to study only up to section number 15.3. Now, let's start with the topic value of supply. As I told you, this is the value on which you apply the tax rate and you get the tax amount. Now, how to calculate this value? The story starts with section number 15.1. Transaction value. Yes. Sir, what do you mean by transaction value? Transaction value is the value on the value of transaction. See the word transaction value. It is the value of the transaction means the value on which you have transacted the supply. Say for example, I'm telling you that I have sold say a goods of rupees 1 lakh. So what is transaction value? This 1 lakh rupees. This 1 lakh rupees, what I am going to get for this goods or services. So the value we get for the supply of the goods or services is called as transaction value. These two things we should keep in mind while calculating the transaction value, that the transaction value in the transaction value supplier and recipient should not be related person. It means the supplier and the recipient, if related person, that cannot be termed as transaction value. Yes, and then cannot be considered as a value of supply under section 15.1. Yes. So the first thing we have to keep in mind is the recipient and supplier should not be a related person. Now the second thing we should keep in mind, that the price should be the sole consideration of the supply. The consideration you should not received as a kind, as an act, or free of cost without consideration. No. The price should be the sole consideration of the supply. If these two things are present, then we can call it as a transaction value. So the transaction value should be the first step towards calculation of value of supply. Now coming towards section number 15 to inclusions. There are many things other than transaction value which are not covered under the transaction value that are covered separately by section 15.2 as inclusions. Say the first one, 15.2a. 15.2a says about any taxes, duties, sales, fees, charges levied under any law other than the GST law. In short, any taxes you have paid for these goods and services other than GST, other than GST, other than GST, any taxes that will be included in the transaction value for the calculation of value of supply. Say many times in the question there is given that, say for example, the goods are sold at a value of rupees 1 lakh inclusive of taxes or exclusive of taxes, or at the end of the question in the notes they will give you all the above amounts are inclusive of taxes or exclusive of taxes. But according to section 15.2a, we do not consider any taxes in the GST law. So what we have to do when we read this statement, inclusive of taxes or exclusive of taxes? If exclusive of taxes is given, then we have to not worry a little bit anymore. But what if inclusive of taxes is given? If inclusive of taxes is given, then we have to separate the tax amount and the transaction value. And we have to exclude this tax amount and only keep this transaction value. Say, for example, it is given in the question that we have supplied the goods for 1,10,000 and it is written that it is inclusive of GST. It means tax on that value is included in the given amount. So what we have to do? Say for example, this 1,10,000 amount and the GST rate is GST is 10%. So for this, we have to separate the tax amount of GST and the transaction value amount from this 1,10,000, and we have to keep that transaction value amount and remove the amount of GST while calculating value of supply. For this, we apply a formula also. Say value divided by 100 plus tax rate into 100. Applying this formula, you will get the amount exclusive of taxes that we consider as a transaction value while calculating value of supply. Now, you can also apply this formula in the given example. 1,10,000 divided by, sorry, 1,10,000 divided by 100 plus tax rate what, 10 into 100. Now calculating this, you will get the value which is exclusive of taxes, and that value you are going to put as transaction value while calculating value of supply. So this is all about 15.2a. Now going towards 15.2b. 15.2b, any payment which has been incurred by the recipient for which supplier was liable to pay. For example, supplier is liable to pay an amount to Mr. A to Mr. A. But he is going to receive an amount from the recipient. Then what the supplier will instruct the recipient? Instead of giving me, you give that amount to Mr. A. Ultimately, I have to give Mr. A. So one thing you do, you give it to Mr. A. Now, this transaction is supplier is liable to pay to Mr. A, but that has been incurred by the recipient. That value also you are going to add in the transaction value while calculating value of supplier. Now, next, 15.2c, incidental expenses. What do you mean by incidental expenses? The best example I give of a gift shop. Say you have visited to a gift shop and you have purchased a gift of rupees 500. Then what you will say to the shopkeeper? Please uh, do it a proper gift packing to this gift. So what the shopkeeper will say? Sir, 500 for the gift and more 30 rupees for this gift paper and packing. So how much you are going to pay to the shopkeeper? 530. From this 530, sir, 500 is the gift value and 30 is the packing charges. So that 30 rupees is the incidental expenses charged extra by the supplier on the recommendation of the recipient. So this is called as incidental expenses. So this incidental expenses also we are going to add in the transaction value for calculating value of supply. Next, 15.2d. 15.2d talks about interest, late fee, penalty. These are the amount that we are not knowing at the time of supply. Say for example, I have given a person goods on credit and I have told him to pay within a month. But after a month is over, is not ready to pay. He's telling me that I need one more month time period. So what I will do as a supplier, okay, you need one more month time period. No problem. You give me the interest. Yes. So that is an extra amount over and above the transaction value, and that is also added. That is also added in the transaction value while calculating value of supply. And the last one, 15.2e talks about subsidies. Subsidies, which one? Which are directly linked with the price. This is the main highlighting portion of 15.2e. Directly linked with the price. And next thing, provided excluding subsidies provided by the government. It means this is saying that subsidy is directly linked with the price and provided by any other person than the government. It will be included in the transaction value. Subsidies provided by the government will not be included in a transaction value. Again, I am saying that subsidies given by any other person which is directly linked with the price, that subsidy is going to be added in the transaction value. Got the point? That subsidy, not given by government. That given by government you are not going to include. But given by other and which is directly linked the price, you are going to include. Now there is a term directly linked the price, directly linked with the price. This is the main term we have to understand in this subsection. Say, for example, within this last year, there was a good chance of purchasing electric two-wheelers, yes, battery bikes, e-bikes, etc., etc. Many discounts were given on that bike by the government. Say, for example, the bike is of rupees 1 lakh. Government says that we will give you 30,000 subsidies. Yes. Now this subsidy is directly in the price. Directly in the price, not a lump sum subsidy that if you purchase a 1 lakh uh, e-bike will give you this much amount. No, they are going to link with the price that if the vehicle is of rupees 1 lakh, 30,000 will be the subsidy. This is called as directly in the price. Again, I will repeat, if this subsidy is given by the government, you don't have to include it in the transaction value. If any other person is giving this subsidy, then this amount which is directly in the price as a subsidy given by other person will be included in the transaction value while calculating value of supply. I think you got the point. Now the last portion, exclusion. 15.3, exclusion. Now in this exclusion there is two things, 15.3a, 15.3b. Now these two amounts we are going to subtract from the value of supply, exclude from the value of supply. 15.3a or 15.3b, both the things talks about only one thing, that is discount. That is discount. Now 15.3a talks about discount before or at the time of supply. Means when you are supplying the goods or services, before that you give the discount, or at that time you give the discount, and that discount amount is shown in your invoice. It is duly recorded that you are getting a discount, and after discount you are paying this much of amount. So it is included in your invoice, recorded in your invoice, and the discount is before or at the time of supply. This such a type of discount you can exclude from the value of supply under section 15.3a without any type of restrictions or conditions. Now talking about 15.3b, after the supply, these are the discounts that you get after the supply. After the supply, discounts can be excluded from the value of supply if you satisfy two conditions. Condition number one, agreement entered into before or the time of supply, which we call it as agreed before. Condition number one, that you have agreed this discount before the time or at the time of supply. If you have agreed this discount before or at the time of supply, we will consider that the condition number one has been fulfilled. And the condition number two, that the ITC portion on the discount amount, on such discount amount, the ITC portion has been reversed by the recipient. See, the first one condition is agreed before, and the second condition is ITC on this discount portion should be reversed by the recipient. If these two conditions are satisfied, then and only you can exclude the after supply discounts from the value of supply. Now this is all about the value of supply, section number 15, 1, 2 and 3. And all this applying together, you will get the taxable value of supply on which you are going to apply the GST rate. Now, as I have presented the whole section number 15 in a formula way, you are not going to solve this like this in the exam. You also know this thing. Yes, you are going to properly form a table in a format, and in a table you are going to write the things. Say transaction value will be the list value of the goods, this much amount, and after that additions 15 to A, B, C, D, E, and less 15 3 A, B, whatever may be the case. And for each and every entry you are going to give in the table, you are going to give what? Proper description of every amount that you have taken or not taken in the notes. Either write the notes in the table itself, or you can write the notes in the below portion after the table and give the reference note number 1 2 3 like this. So in this way you are going to solve the questions of value of supply in this format. Now coming towards some clarifications. See, coming towards some clarifications on discounts. Number one, staggered discounts. Staggered discounts. So staggered discounts are that discounts which says buy more, save more. Like this season, in the monsoon season, discount offer. You visited any shop and seen an offer there that buy two you will save 50, buy four you will get a discount of 60%. Yes, so when you buy more you will get more discount. Now this discount comes under section 15.3a or 15.3b. Analyze it. Now when you visit a shop, the discount is in front of your eyes. It is saying you that will give you discount, and that are saying you before supply. And when you go at the billing counter, in the invoice itself they record that discount. They record that discount in the invoice itself and tell that you have to pay this much amount only. So this is the case of section 15.3a. It means it means recorded in the invoice, and discount is getting before or at the time of supply. So according to that provision, staggered discount are allowed or permissible to be excluded from the value of supply. Yes, you can reduce this staggered discount also at the time of calculation of value of supply. Now the next, periodic or year end discounts, volume discounts. Say for example, you tell any recipient or as a supplier that if you paid for this goods within a month, I will give you 5% discount. So what is this? This is a type of periodic or year-end discount. Periodic and year-end discount. Now analyze whether it is coming in section 15A, 15.3a or 15.3b. 15.3a talks about supply discount before supply and B talks about discount after supply. So in which this case goes. Now analyze periodic or year-end discount or volume discount. You have agreed before that if you pay the amount within a month, I will give you discount. But in the invoice you today you are not going to show the discount. Why? Because if you pay the amount within 1 month, then I am going to give you the discount. Now the first condition has been satisfied. Agreement is entered into before. This is a case of section 15.3b. And 15.3b has two conditions. First one, agreed before. Second one, ITC is reversed by the recipient. If both the conditions are satisfied, then this periodic year-end discount or volume discount can be reduced from the value of supply. Can be reduced from the value of supply. Can be excluded while calculating the value of supply. Yes. So this was a clarification related with 15.3a and this was related with 15.3b. Now, last one, secondary discounts. What are secondary discount? Say for example, as a supplier, you have supplied some goods to a recipient and in installments, and he is going to make the payment in lump sum of all the installment. Now, when you calculate the value, it is being say around an amount of rupees 1 lakh 100 rupees. 1 lakh and 100 rupees like this. 1 lakh and 100 rupees like this amount. So at the time of payment, what the recipient will do, this obviously some of us do in our regular life also. So when we go to make a payment, what we'll say, sir, please forget that above 100 rupees. Sir, please forget that about 10 rupees. Round off the amount to 1 lakh instead of 1 lakh 100. Yes, this is a type of secondary discount. Analyze whether secondary discount portion will be allowed as an exclusion from the transaction value. Now, if we analyze it, say whether the discount is agreed before, it is given at the time of payment, means after the supply. Yes, but agreed before, no. Either the supplier is also not knowing that the above amount will be reduced. No, the supplier is not knowing. It means it's not agreed before. If not agreed before, the very first condition of section 15.3b has not been satisfied. If not satisfied, then the discount we are getting after the supply will not be allowed as an exclusion from the value of supply. So this secondary discount cannot be reduced from the value of supply. See, it shall not be excluded from the value of supply because these are not known at the time of supply, not agreed before. And the last one is clarification on no claim bonus. What do you mean by no claim bonus? No claim bonus is given by many of the insurance companies for the payment of the current year insurance premium. They analyze this that the premium payer, the person who is paying premium this year has not made any claim in the past years. If you had not made any claim of the premium paid of the past years, in this current year premium, they give you discount by the name no claim bonus. Now analyze, this discount comes under before supply or after supply. Say when you pay the premium, the discount is already shown in the invoice. So it is a case of before supply discount. Now in the case of before supply discount, there should be the discount before supply. Yes, we are getting the no claim bonus before supply. Yes, and also this no claim bonus discount is duly recorded in the invoice. Yes, so it is a case of section 15.3a. And this discount by way of no claim bonus can be reduced from the transaction value while calculating value of supply. So under section 15.3a, no claim bonus is permissible as deduction value under section 15.3a. Now this is all about value of supply. Also, I have also guided you how we should solve the questions of value of supply in a proper tabular format, putting the title on the table, a proper notes, and every description of all your entries according to that section which is relevant. So all this is about value of supply. Now from this formula you can easily learn the section and the subsection with the provision. What do you mean by this value of supply and this and this and then that. So here we'll end the topic of value of supply. A short revision is done of this topic, value of supply, place of supply. First of all, I will tell you about the place of supply. This topic, place of supply, is the only topic which exclusively is covered under the IGST Act. Here you are not going to find any CGST Act sections. You are going to find only the IGST Act sections. So coming towards the topic place of supply. In this place of supply topic, there are 4 sections involved. Section number 10, 11, 12 and 13 of the IGST Act, not CGST Act, IGST Act. This is the only chapter among all the chapters of your syllabus which is covered under the IGST Act. Other are covered with the CGST Act. This is only covered with the IGST Act. Heading towards sections. So as I told you, in the place of supply, there are 4 sections: 10, 11, 13 and 14. Sorry, 10, 11, 12 and 13. Yes, these are the 4 sections. Among this, at this intermediate level, you are given only section number 10 and only section number 12. Only these 2 sections are covered at your intermediate level. So let's start with the section number 10. Now, section number 10, what it says? It says place of supply of goods. So section number 10 is talking about goods, not services. It is talking about goods. So place of supply of goods other than import and export. They are also not talking about the import and export. They are only talking about what the transactions are within the territory. So place of supply of goods. Let's talk about this section. Section number 10(1)(a), where supply involves movement of goods. Supply involves movement of goods. In that case, place of supply will be the location where the movement of goods terminates for delivery. Say for example, you have ordered a thing from Delhi. Yes, the supplier is at Delhi. Now the supplier is going to courier it and send it to you in Bangalore. And how this goods will come? First, the goods will travel to Mumbai, after that to Hyderabad, and then to Bangalore. So in this case, what is happening? Multiple states are involved. Now you have to fix the place of supply of which place the supply is. So accordingly, you can distribute the tax amount to that particular state. Now in this, if the goods are coming to you, you are not going to pick the delivery. The goods are coming to you. There is a moment of goods only when the goods are coming to you. You are not going to have the delivery. Yes, in that case, POS will be the location where the moment of goods terminates for delivery. The location where finally the goods terminates for delivery. Now, number second, 10(1)(b). 10(1)(b). 10(1)(b) talks about bill to ship to, where the goods are delivered in the direction of the third person. Say, I am the person Mr. A. Yes, I am the person Mr. A. And there is Mr. B. I have paid Mr. B for the purchase of a particular goods. For the purchase of a particular goods. I have paid to Mr. B. Yes. Now, Mr. B is going to write my name in the invoice. Whose name will be there in the invoice? Mr. A. Now I have directed Mr. B that please send his goods to Mr. C, the warehouse keeper. The warehouse keeper to another location. It may happen that Mr. A, Mr. B and Mr. C are at different locations. So in that case, this is the case of bill to but ship to Mr. C. This is the case of bill to Mr. A but ship to Mr. C. In that case, you are going to fix the place of supply as the principal place of supply business of a third person, that is Mr. A. Mr. A's place of business, whose name is there on the invoice. Their place of business will be the POS. Now, 1C, no movement of goods. Here the goods are not going to come to you. You have to go to their goods, the place, and have the delivery from that place. So in that case, location of goods at the time of delivery, that will be your POS. POS will be the location of goods at the time of delivery. Now this is an amendment. This is an amendment. Now, what is that? Goods purchased over the counter in one state and transported to another state by the buyer, who is an unregistered person. Now, for example, you are a tourist and you visited any place as a tourism, as a part of tourism. Now, it is the case whenever any person visits any place for tourism purpose, he will purchase something from that place. Yes. Now that is the over the counter purchase. Now you are purchasing the goods from there over the counter and you are transporting the goods through your conveyance, and now you have brought the goods to your place. And if you are unregistered person and you have purchased over the counter where you have transported the goods from one state to another state, in that case POS will be, if on the invoice given by the supplier, if there is address of the recipient, then search location of the address of the recipient. If there is no address of the recipient, then location of the supplier will be the POS in such cases. Now next, 10(1)(d), the goods were assembled or installed. For example, you can take the example of an air conditioner. You ordered an air conditioner, the air conditioner came to your place. Now assembly or installation will be at the site itself. Yes, at the site itself. So what is the PS in such cases of goods? Such goods, it will be the place where goods are assembled or installed. Where the goods are assembled or installed. Yes, the last one, where are the goods are shipped, where the goods are supplied on board of a conveyance like vessel, aircraft, train, motor vehicle, etc. Now what happens in such cases? Say you are traveling from a conveyance, say train. In between, when you are traveling the daytime, some person comes in the train, he will shout chai chai chai, biscuit biscuit biscuit, packets, you may have the chips. He will distribute all over the train for consideration some goods. We are talking about such types of goods. Say in the aeroplane itself, if you are you want to buy a coffee, you will order a coffee to the air hostess, and the air hostess will charge an amount for such coffee or tea. Yes, that type of goods we are talking about, that you can have on a conveyance. So in that case, what will be the place of supply? The place where such goods are taken on board. See from where these goods can be loaded on the conveyance throughout the routes of the journey of that conveyance. See from where these goods have been loaded on that conveyance, that will be your place of supply, the goods taken on board of that conveyance. This is how we completed section number 10 right now. Now coming towards section number 12. Section number 12 have many subsections in it. It has 14 subsections. How much? 14 subsections. Yes, all sections are required to be remembered. Yes, so when we are talking about the TOS and the POS, means place of supply and time of supply, these are the topics on which theoretical questions have been asked as a case study. Any case study they will form and ask you, and you have to answer it in a theoretical way, just as you write the paper of a law according to the provisions of the section this of the act, this and that. So that's why it is very important to remember the section so that you can properly answer a question. Now we'll try to remember it creating some stories. Yes. Now coming towards number 1, section 12.2. Section 12.2, this is a general residuary section. Residuary section means if you are not able to fix the place of supply using section number 12.3 to 12.14, then come to 12.2. Now if you are not able to fix PS in these sections, you can apply the general provisions of 12.2. And if you see this here in the given sections, there are two parts. One, if supplied to unregistered person. Second, if supplied to registered person. So first we are going to discuss all things about unregistered person. When under 12.2, if anything is being supplied as a service to unregistered person, then check that the record, in the record of that supplier, the address of the recipient is there. If address exists in the records, then location of that recipient. Otherwise, location of the supplier. Otherwise, location of the supplier. Now, coming towards 12.5. 12.5. Service in relation to training and performance appraisal. Yes, any training is given, you are performing a thing to any other place. Yes, like these things. So training performance appraisal is provided to unregistered person. So POS will be the location where the performance has been actually performed, where these services are actually performed. Now, 12.7. Any organization of culture, artistic, sporting, scientific, education, entertainment, etc., etc. All term will be under one term, that is events. So I will term it as organization of event. Section 12.7, organization of event. Now, organization of event, yes, check that event is being organized in India itself. If it is in India, then PS will be the place where the event is held. If event is held outside India, then POS will be location of recipient. See, if the event is held inside India, then location of that event. If held outside India, then location of recipient. Event may be any type of event that is specified here. Yes. Section number 12.8, transportation of goods. Transportation of goods by courier, mail, etc. etc. So what will be the POS if supplied to unregistered person? The location where the goods are handed over for transportation. Yes, the goods were handed over for transportation, that will be your POS. Now, next 12.9, transportation of passenger if supplied to unregistered person. In that case, the POS will be the place where passenger embarks for a continuous journey. It means from the place where the person starts his continuous journey. To know the meaning of the term continuous journey, you may refer to the definitions video. Yes. So the where the person embarks starts his continuous journey, that will be your POS. In case of transportation of passenger services, insurance services, section 12.13, if supplied to unregistered person, if records show the address of the recipient, LOR, otherwise LOS, Now, sir, we have to learn the subsections. Yes. Now, before learning the subsections, we'll see the registered person part. If any of these above services are provided to registered person, in that case, POS will be the location of such registered person. The POS will be the location of such registered person. Yes. This is all about the sections. Sir, we have to learn this. Yes. First of all, see the sections. What are there? 12.2, 12.5, 12.7, 12.8, 12.9 and 12.13. Sir, I have created a story. Yes, a story that may be illogical, but it can help you to revise this, to remember this subsections. Now, when a child is there, yes, newborn baby, and up to 2 years, general provisions are applicable. Nobody is going to scold you. They will say that as other children do, let him do like that. Yes, general provisions. Nobody is going to shout at that child who is, say, up to 2 years. General provisions. As soon as that child becomes of 5 years, now he is 5 years old. When he is a 5 years old, now they are going to give you training and performance appraisal. Now your parents are going to give training to that child. Yes. Now he is 7 years old. Now, when he is 7 years old, he will learn what the meaning of events. He will learn what is cultural, artistic, sports, education, entertainment. He will learn the events. He will learn what are the events. Now, when he is of 8 years old, his father gifted him a bicycle to go to the school. When he is going, yes, bicycle is what? Goods. Yes, bicycle goods going to the school. Now, when he became 9 years old, along with goods on that bicycle, he is also transporting passengers. Passenger transport at the age of 9 years. And when he became 13 years old, his father did his insurance. So this is the story to you can learn the sections. Sorry. Yes, again, the remaining sections 4, 6, 10, 12 and 13, 11 and 14. First of all, we'll learn these sections, okay? 4, 6, 10 or 12. See, this is a sequence of even number. Yes. See, 4, 2 is covered here. 4, 6, again 10. Sir, where is it? 8 is covered here. Yes. 10 and 12. So this is how you can learn it. See, capture the image of this chart in your mind so that you can easily revise these subsections. Now, section number 12.4. In case of any services which are performed like restaurant catering service, personal grooming, fitness, beauty treatment, etc. In these cases, POS will be the place where they are actually performed. 12.6. Services provided by way of admission to an event. Say you pay entry ticket to go in the premises. Say, for example, cinema halls, water park, amusement park. You pay entry ticket to enter into that premises. So that this is all about services provided by way of admission to a particular event or a place. So in that case, POS will be the place where the event is held. Say for example, circus may be held at different location. For that you have to pay the admission fees. Yes, admission entry ticket fees. Yes. So in that case, POS will be the place where the event is actually held. Or if it is a fixed place, or say like amusement park, water park, like this. So where the park is located, where such amusement park, water park is located, that will be your POS. So this is all about the section number 12.6. Now coming towards 12.10. 12.10, service on board of a convenience. So when you are traveling in a train in an AC, yes, AC compartment. So in that compartment you receive say blankets and all. Yes, for not you are the owner of that blanket for a temporary period of time, and whenever you need to raise the AC temperature or down the temperature, you ask the attendant to do so. The attendant is going to charge you the any amount? No, 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 no. This is the services provided on board. Services provided on board by the company. Now, when you are getting any services on board, so in that case, what will be the POS? In that case, the POS will be the first scheduled point of departure. First scheduled point of departure of that conveyance for the journey, from where the conveyance has a scheduled point of departure. Now, 12. Banking and other financial services. In that case, check that in the record address exists, then location of recipient, otherwise location of the supplier. Now, this is how above sections are completed. Now 12.3. 12.3 talks about service in relation to immovable property. Now on immovable property, either you are providing interior decoration services, or you are providing construction services, renovation services, repair services, or say you are providing any accommodation services as a hotel, etc., like this, or any construction services, anything it may be related with immovable property. POS shall be the place where immovable property is located. Such boat, vessel, immovable property is located. So what if the property is located outside India? If the property is located outside India, then POS will be LOR, as of as like what we have discussed about the event part. Yes, event part, just like the same. If immovable property is located in India, the place of such immovable property, otherwise out of India the property is located, then LOR will be your POS. Now, section number 12.11. This talks about telecommunication services. Yes, telecommunication services, data transfer, broadcasting, etc., First one, service by way of fixed telecommunication line. Fixed telecommunication line, sir, it means dish TV, landline, broadband, which are having a fixed telecommunication line. So in that case, POS will be the location where such line is installed. Such telecommunication line is installed, dish or antenna is installed, like this, where it is installed. Now, in case of postpaid SIM card services, in that case, if address of that recipient is in record, then LOR, otherwise LOS. Sir, there can be prepaid also. Yes, prepaid services. When we are discussing about prepaid services, there can be three cases. Yes, case number one, you are going to a shop which is having a proper permanent address, permanent location, like this. You visit the shop, you will purchase your say SIM card from there, or you will recharge your SIM card from there, prepaid SIM card. Either this is case number one. If this is the case, you are going to a proper seller or distributor. So a store, say Airtel, you are going to the Airtel store. It is a proper reseller or distributor with a permanent address and permanent shop. In that case, POS will be the address of that reseller or distributor in the records of the supplier. Yes. Other cases, sir, case number two. In case number two, what will happen? In case number two, say for example, you are buying your SIM card from a person who is sitting under an umbrella without any fixed store. Just he is having a table, chair, and the umbrella. Like these locations are there from where you can buy the SIM card or recharge. In that case, where the payment is made, that will be your PS. Or what if you purchase your SIM card online, or you are making your recharge online? That is very common. In that case, if in the a record address of that recipient is there, LOR, otherwise LOS will be your place of supply. And lastly, advertisement I'm going to uh, discuss later after this explanation. Yes, now what this explanation talks about, it talks about three things. The sections from 12.2 to 12.13, what we have discussed right now, we have revised right now. Among this there are three surveys: event, lease, circuit, and immovable property. Event, lease, circuit, and immovable property. In these three cases, there may be a situation in which multiple states are involved. Say when you are constructing a road from expressway from Bangalore to say Delhi, how many states will be involved? MP, Maharashtra, Telangana, Hyderabad, Karnataka itself. How many states are involved? Multiple states are involved in that expressway. If multiple states are involved and GST is paid to a person, a supplier, proper supplier, he recovered the GST and paid to the government. So how the government is going to distribute this GST as an SGST if it is involved? If SGST involved, so in that case distribution should be done. But when you are telling about the immovable property, construction of immovable property means the property where the property is located. POS will be the location where property is located. Now this expressway is running from multiple states. So all states will be POS. But all states will be POS. How we are going to distribute the amount of GST? Yes. First of all, check if any agreement is there between the states. If any agreement, as per the agreement. Not, then some proportionate basis. If you are not getting that, then reasonable prescribed means. Reasonable prescribed means are prescribed by the act itself. Say, for example, when we are talking about accommodation services in any hotel, inn, guest house, clubhouse, etc., etc. In that case, if the hotel or property is located in more than one state, say when we are talking about Radisson Blu, Hotel Taj, ITC, multiple cities it is located. Yes, but the payment is made to only one owner of that multiple branches. Yes, so I have stayed say 2 nights in Mumbai, 2 nights in Ahmedabad, 3 nights in Delhi, like this. So that's why multiple immovable property has involved multiple states. Now how to distribute the GST portion among the states? So it may be on the basis of number of nights stayed in such properties. In each property, how many nights you have stayed. According to that, you can make the proportion and you can distribute the GST amount. Now, if the property is being constructed, you can also fix on the basis of area of that immovable property. Say if you are talking about road, expressway, how you will fix? You will fix on the basis of kilometer area in each state. How many of kilometers areas in Gujarat, how many kilometer areas in Rajasthan, how many kilometer areas in Delhi, like this you can fix it on the basis of area of immovable property. Now last one about the boat and the vessel. If it is the case of boat and the vessel, in that case you can see how much time a boat or a vessel has spent in the territorial waters of a particular state. According to that time spent, you may bifurcate the GST amount in the states. Now talking about the lease circuit, yes, point. There are points. Say, for example, when you are asking an Airtel fiber in your area, the proper person will come and he will see that whether any point is available or there, whether any point is available or not in that place. If the point is available, then only that person is going to give you that Airtel Extreme Fiber Wi-Fi connection there. Otherwise, not. So these are the points. Now you have to see in each state, in each area, and each state how many points are there, and according to that points you may distribute the amount of GST. So this is all about the prescribed manners. Yes, how much, how it can be prescribed like this. Now talking about the advertisement, the last place of supply, subsection 12, 14. Now in this we are going to discuss only the place of supply in case an advertisement agency, hearing again I am telling the words, advertisement agency is providing advertisement services to government. Here we are going to discuss only that thing. When an advertisement agency provide advertisement services to government. Yes, that things. So if there are multiple sources of advertisement, you can do advertisement on electricity bill, you can do advertisement on railway tickets, you can do advertisement on television, through SMS, on trains. Multiple options are there. So according to that sources of advertisement, we are going to bifurcate how we should distribute the amount of GST among the states. Now when it is advertisement in newspaper, it is through newspaper advertisement. Say there is one scheme of Beti Padhao Beti Bachao by the government, or Swachhata Abhiyan. So newspaper advertisement are given by the government. So what happens in that case? In that case, how you are going to attribute the service value to each state and union territory on the basis of publishing an advertisement in all editions of a newspaper or publication which are published in each state or union territory. Through the publication in which in each state or union territory, how many editions are being published. Say I published 1 crore editions for say Maharashtra, 2 crore for Gujarat. So on the basis of how many editions you have published. Next, if you are distributing any leaflets, pamphlets, printed t-shirts, etc., goods you are distributing like this, calendar you are distributing, diaries you are distributing, in that case, how many number of t-shirts, how many numbers of pamphlets, how many numbers of diaries, etc., you have distributed in a particular state or union territory. According to that, you are going to attribute to each state and union territory the GST amount. Now, advertisement on hoarding. Yes, hoarding. Say advertisement on hoarding. Now you are going to see how many hoardings are present in a state or union territory, and among that, on how many hoardings you are going to display your advertisement. So according to the hoardings that have been displayed on the according to the hoardings which are displaying your advertisements, that hoardings you are going to collect. Maharashtra 100 hoardings, Rajasthan 200 hoardings, Karnataka 300 holdings, and according to that you are going to bifurcate the amount of GST, yes, to the states and the union territories. Now trains. Now train runs, it may happen that it is running from multiple states. And if running from multiple states, it can happen that multiple states are involved. Yes. Now, when an advertisement is being displayed on a train, on the box of that train, yes. So what will happen? It will be displayed on each and every railway station in each and every state. So how can you fix the place of supply or distribution of GST amount to each state and union territory? In that case, you are going to distribute on the basis of the railway track in each state. How many kilometers of railway track in Maharashtra, how many kilometers of this railway track which railway is going on in Hyderabad, in Karnataka, like this. On this basis, the railway track length basis, you are going to bifurcate the amount of tax in between the states and the union territories. Now in these things we are discussing how to distribute the tax amount among the states, like this. Yes, again, on the back of a utility bill, electricity bill, gas bill, oil bill, water bill, in that case, you are going to see the address where the bill is going. Yes, according to that address, we are going to distribute the amount. On railway tickets, you are going to distribute the amount of tax on the basis of number of railway stations in a particular state or union territory. Yes, on the basis how many of railway stations are there in Maharashtra, how many railway stations in Karnataka. On that basis, you are going to distribute the tax amount. Radio, advertisement on radio. So radio station, how many radio stations are there in a particular state on union territory? According to that, you are going to distribute. Now, advertisement through SMS, advertisement through television, advertisement through internet. Three things: SMS, television, internet. Now how you are going to bifurcate? Say for example, you are given a work to the Airtel company, you have to SMS this government scheme to your all SIM card holders. So what will be the bifurcation proportionate? Now in this case, you are going to bifurcate the tax amount on the proportion of the telecommunication subscribers. Yes, the word telecommunication subscriber. How many subscriber are there for Airtel? How many subscriber are there for Jio in a particular state? According to that, that you are going to bifurcate the amount. Now, when talking about television, the viewership, how many of the population is going to view that channel? Yes, how many of the population have subscribed this telecommunication provider, and on internet also on the basis of internet subscriber, and all these details are being given by TRAI. Yes, Telecommunication Regulatory Authority of India. All the data, all the statistics the TRAI has with it, and you can access the TRAI website. It can give you the proper detail of how many subscriber of each and everything is there per state wise. Now, advertisement in cinema halls. If there is any advertisement in cinema halls, so you have to see how many screens are there in a state, not hall. In a cinema hall, if there are 4 screens, and in a state there are 1,000 cinemas, so you are going to bifurcate on the basis of total of cinema screens, not cinema halls, screens, multiplex screens. So this is all about the place of supply. And in your module you are having example on each and every case of this advertisement, how you are going to bifurcate. When you'll read the example only one time, you will get a proper clarity of all the bifurcations, how it is being done. So this is all about the place of supply chapter. We are going to revise the topic exemption. Now, when talking about the word exemption, first of all, let us have the meaning of the word exemption. Now, what do you mean by exemption? In exemption, there is a negative list created here in the GST. In that list of supply of goods or supply of services, if this service comes under this list or goods comes under the list, the goods and services will be out of the purview of GST tax. Yes. So exemption is basically a list in which the supplies of goods and services which are listed in it are out of the boundaries of GST for a temporary time of period, for a temporary period of time. In future, after, and issuing any notification, the government may tax that goods or services also. But up till now, for today itself, they are away from this purview of tax. Yes, they are supply, it is a supply, they are taxable also, but for a particular period of time we are not applying any taxes on this type of goods or services. Now let us have a look. When we are talking about exemption, it starts with section number 11. Now in the section number 11 there are 3 parts: 11.1, 11.2, 11.3. Now what 11.1 talks about? 11.1 talks about general exemption. Yes, the government by notification may exempt generally any types of goods or service either wholly or partly. Yes, any service in general exemption, this exemption notification will apply to the public at large. Yes, everyone. Yes, and 11.2 talks about exemption by special order. The government may, if it feels necessary in case of public interest, may issue any special order for the exemption of such particular goods or services for a specific person. So this exemption of special order will not be applicable to everyone at the public at large. No. And if the government feels that it should issue any circulars or clarification regarding these two notifications or special order or general exemption, so within 1 year of the issue of the notification, the government can provide the clarification on that particular notification. So coming towards the chapter, goods exempt from tax. See, this is the list of goods which are exempt from tax. unbranded atta, maida, besan. Yes, I'm not talking about fortune atta. It's a branded one, so it will be taxable. It will not be exempt. But unbranded atta, yes, normally you are giving atta, wheat flour in a particular packing with no brand name. In that case, it will be unbranded atta, and GST will not be leviable. Unpacked food grains, fresh vegetables, fresh milk, egg, Indian national flag, plastic bangles. So all these things are out of the purview of GST because of exemption. So if exempt, no tax will be leviable on this products. Now, this is all about goods. Now coming towards the main portion, services exempt from tax. Now, if you'll see, there are a number of services which are exempt from tax. And each services is having a particular entry number. Yes. So no requirement of learning the entry number, just require to learn the content of the entry properly. Now, for that purpose, what we have created and the module itself have created particular sectors which is related with each and every entry. Now, talking about the first sector, services will be distributed in different sectors and we are going to revise this sector wise. So when we are talking about religious and charitable, all religious charitable activities of services will related with these activities will come under this sector only. So we are studying this at one place, forming a particular sectors. So first sector, service related to charitable and religious activities. Now, first of all, we have to see this. Any entity registered under section 12AA and 12B AB of the Income Tax Act 1961, Income Tax Act, providing any services by way of charitable activities will be exempt. So that entity is registered under the Income Tax Act and providing charitable activities. Yes, doing charitable activities. That charitable activity entries the entity and its supply will be exempt. Sir, what are the charitable activities? Let's see the charitable activities. See, number one, advancement of educational programs, skill development relating to abandoned, orphaned, homeless children. Yes, any orphanage, any organization running orphanage which is registered under the Income Tax Act as an entity. Yes, and doing this type of charitable activity of running an orphanage, exempt. Physically, mentally abused, traumatized person, giving training to like such person, giving training to prisoners, giving training to the persons over the age of 65 years residing in the rural areas, giving training to this people by any entity which is registered in the Income Tax Act, it will be termed as charitable activity. And if charitable activity, it will be exempt from tax. Yes. Now, public health by way of care and counseling of terminally ill person or with severe physical mental disability, person affected with HIV/AIDS, person addicted to dependence forming substance like drugs and alcohol. Yes, you are giving any care or counseling to such person, any organization, any entity, or creating public awareness by way of announcing and promoting ads and like these things, creating public awareness, these things, charitable activities. Arranging yoga and meditation camps. Yes, best example, Ramdev Baba arranging yoga camps by charitable trust. Management of educational institution by charitable trust. Any NGO arranging education for any type of students, educational institutions. Hostel accommodation provided by the trust. Advancement of religion, spirituality or yoga. Yes. Preservation of environment. Hospitals managed by the charitable trust. So these all are termed as charitable activities. And if done by any entity registered under the Income Tax Act in the prescribed sections, it will be exempt. Now coming towards religious activities. Number one, conduct of religious ceremony. Best example, the priest, Pandit. Yes, Pandit forming, the priest is doing religious ceremony, say for example, marriage ceremony or housewarming party, house ceremony, any yajna, any type of say puja is there. Yes, so any type of religious ceremony done or conducted, no GST will be leviable on that. It is exempt from tax. And the another one provided by the religious sectors is the renting of their premises. They can give their premises on rent. Yes, what rents they will receive when giving rooms, they can rent the rooms in the religious trust. Yes, and shops they can rent the shops. As you visit in any say temple, outside their shops are there. If any shops is in the premises of that particular religious places, so the shop rent. And the premises for kalyana mandapam or any other purpose, the community hall of that premises. So it should be taken care of that the rent of the room should be less than 1000 rupees per day. The shop rent should be less than 10,000 rupees per month. The premises and the hall rent should be less than 10,000 rupees per day. If it is so, then only it will be exempt. Otherwise, it will be taxable. Yes, and any services by way of pilgrimage. Two pilgrimage are covered: Mansarovar Yatra, Kailash Mansarovar Yatra, and Hajj pilgrimage. This two pilgrimage provided by the government, any person supporting to the government for providing this pilgrimage will also be exempt. So this is all about the first sector, religious and charitable activities. Now second, agriculture related services. When talking about agriculture related services, the important word is the agricultural produce. What do you mean by agricultural produce? See in front of you. Agricultural produce means any produce out of cultivation of plant or rearing all life forms of animal except rearing of horses. Say you are doing, you are having any produce out of cultivation of that plants or out of using any animals, say milk of a cow or wool from the sheep. It is rearing all life forms of animal except rearing of horses. Why are you doing this? For food, fiber, fuel, raw material, or other similar products. Yes, on which either no further processing is done or such processing is done as is usually done by a cultivator or producer. Such a production or cultivation of plant or rearing all life forms of animal on which no further processing is done, or if done, it does not alter the essential characteristics of that produce. We are doing any further processing on that particular produce only to make it marketable in the primary market, and that too not in the retail market, only in the primary market. We are doing further processing to make it marketable in the primary market, which do not alter the essential characteristics of that product. See, for example, potato, when some further processing is done, it become french fries. Now it has altered the essential characteristics of that agricultural produce. Yes, so this final product will not be an agricultural produce. Again, milk, fresh milk is agricultural produce, but when further processing is done and this produce is called as pasteurized milk, then further processing done, essential characteristics are altered. So that's why now this will not be an agricultural produce. Like this paddy and rice. Rice is not an agricultural produce, but the agricultural produce from which rice is made after further processing, paddy, is an agricultural produce. So this is the definition of agricultural produce. Now let's see the agriculture related services. Now see the services related with agriculture produce first. Agricultural operation services or any process. See, agriculture operational services or any process. I will just give an example. Say for example, threshing, cutting, pruning, testing, etc., etc., plant protection, like these things, when done on a farmland, yes, and which do not alter the essential characteristics of that product, only make it marketable for primary market. In that case, this process and agricultural operations done on the farmland will be exempt. Yes. Supply farm labor, the laborers working on the farm, yes, their services exempt. Renting of that agricultural land, yes, or agro machineries. Loading, unloading, packing, storage, warehousing of agricultural produce. Yes. Any services by way of loading, unloading, packing, warehousing, storing of that agricultural produce related with that will be exempt. Agriculture extension services, services by APMC committees. APMC or any board, agricultural board, providing any services that will be exempt along with the services of the commission agent of that APMC market. Yes, everybody know what is APMC, where the farmer comes and finally sell their produce, the primary market. Service by way of intermediate production process as a job work. Say if you are doing any intermediate production process on the agricultural produce, that is not altering the essential characteristics. It is to just make it marketable. So in that case, the intermediate process, production process done will also be exempt. Service by way of storage, warehousing of cereals, pulses, fruits and vegetables exempt. Service by a warehousing of minor forest produce. And the last one important, loading, unloading, packing, storage, warehousing of rice. Because rice is not an agricultural produce. So the things related with the rice are specifically differently mentioned here by way of loading, unloading, packing, storage, warehousing of rice. That will be exempt. So this is all about the agriculture related services. Now coming towards the passenger transport services. Now, see the source of transportation: road, railways, airways, waterways. Coming towards the first one, road. Now, what are the mode of conveyance when transportation is done by road? Bus or others. In that bus, also two types: stage carriage, contract carriage. Stage carriage is of the government bus, contract carriage is the private buses. Yes, if it is a stage carriage and it is an AC one, then it is taxable. Also, contract carriage, if it is an AC, then also taxable. Yes, contract carriage also taxable if AC, and stage carriage is also taxable in case of air condition. But in case of non-AC, stage carriage is exempt. But when we are talking about contract carriage, in case of non-AC, check whether the bus is hired one for the purpose of personal use, tourism like this, or there is a point-to-point transport. Point-to-point transport means transportation of passenger. You have booked the ticket and you have booked the ticket of a bus. Now you are going to have the journey, and when at the destination, the bus is going to drop you at the predetermined points. That is called as point-to-point transport. If point-to-point transport is there, then this will be exempt. But if you have hired a non-AC contract carriage bus, then it will be 100% taxable, subject to one exemption. When it is hired for the purpose of transportation of employees to and from workplace. Yes. And where the contract carriage is non-AC one, hire, it is taxable, but there is one exception when this is hired only for the purpose of transportation of the employees from to and from work. This is the number one clarification. Yes. Now, number two, others. In case of others, meter rickshaw, auto rickshaw, meter cab, these are exempt. But talking about other cabs like Ola, Uber, private taxis, it will be taxable. It will be taxable. Only this is exempt. Now, one more clarification regarding this. Though this is exempt, but if, say, I am taking example of this auto. This auto is normally providing his transportation services, which is exempt. Yes, exempt. But now, today, this auto registered on Ola or Rapido. This auto registered itself on Ola or Rapido. Now, as soon as this auto registered on Ola or Uber or Rapido, these are e-commerce operator. Yes, e-commerce operator. If this auto is registered on any e-commerce operator, the exempt supply now will become taxable and paid tax under the reverse charge. Yes, under section 9(5), e-commerce operator will pay the tax. This is the second clarification. So remember, as by default these services are exempt, but if supplied through eco, this exempt services will become taxable and tax will be paid by the eco under reverse charge. Now, rail. When talking about railways, AC coaches in the first class are taxable, other are exempt. When talking about metro, monorail, tramway, these are exempt. Yes, looking forward to the waterways. Waterways vessel. When vessel is for tourism purpose, taxable, other purpose exempt. Inland waterways exempt. Yes, no need of explanation here. We are just revising it. Yes, you can see the chart and just revise it. Now, air. Now, this needs an explanation. Now, when we are talking about air, we have to remember some locations. Yes, we have to remember some locations like this: Meghalaya, Assam, Mizoram, Manipur, Nagaland, Arunachal Pradesh, Sikkim, Tripura, and Bagdogra. Bagdogra is in West Bengal. Yes, location is West Bengal. Now, when we are talking about this location, any aircraft which is say having a takeoff from this place, or which is arriving on this places, which is having a departure from these places or arriving to such places. Yes, departing and arriving both, and from anywhere in the India, from anywhere in India, say from Delhi to Assam you have to go, or from Assam to Delhi you have to go. In both cases, if any aircraft is departing and arriving at such location, the economy fare of that particular aircraft will be exempt. Yes, the economy fare of that particular aircraft will be exempt from tax. And in case of other location, it will be taxable. Yes. Now, sir, we have to learn this location. Yes, you can learn it. That location: M-A-M-A, Mama, N-A-G, Nag, M-A-N-I, Money, Nag Money. Sit, S-I-T, sit. Sit means it is there at Bagdogra. We can pronounce it as Mama Nagmani sit at Bagdogra. Yes, M-A-M-A, Mama Nagmani, S-I-T, sit at Bagdogra. So you can learn like this. Last clarification related with this. Yes, last clarification: RCS, Regional Connectivity Schemes, Airport. See, to increase the connectivity of airplanes in between the cities, what government did, government has given a proposal that whosoever is going to establish airport under this scheme, RCS, Regional Connectivity Scheme, whosoever, which city, whichever with the city, who is going to establish airport under this RCS scheme, we are going to exempt the tax portion on the flights which are going to arrive and depart from such location up to 3 years, and also fill the viability gap. What means viability gap? Because see, in small locations it may happen that the whole flight is not booked, some seats are vacant, so the aircraft will have loss in carrying on the passenger from that location. So that loss, in case of that loss, viability gap fund is being created by the government, and the losses of that company will be taken care of by the government. So this is all about the passenger transport services, legal services. Yes, talking about legal services and entertainment services. So let us first take the entertainment service. Now, entertainment service divided into two types. Yes, and the two types. First one, artist, performance by the artist. When the artist perform services by way of performance in any folk or classical art form, any music, dance or theatre, where the consideration charge is less than equal to 1,50,000, then it will be exempt. But this provision does not apply in case of brand ambassador. Yes. So in case of brand ambassador, though they have performed services like this, but they have received a single rupee for that performance, it will be taxable. No benefit of limit also to the brand ambassador. Yes. There is no exemption given for a single rupee to the brand ambassador. Others cases will have the exemption limit up to rupees 1,50,000. Now, right to admission too. Yes, paying a ticket, admission ticket. Yes, admission ticket. Now, in case we are paying admission ticket for this places, you can see the places: circus, dance, award function, concert, or planetarium. Yes, where the consideration is less than equal to 500 rupees per person. If the consideration is less than equal to 500 rupees per person, then the things will be exempt, otherwise taxable. But when we are visiting these locations of protected monuments and a museum, national parks, wildlife sanctuary, tiger reserve or zoo, here there is no limit of amount, like 500 it is here. There is no limit of amount in these two cases. So any amount of ticket per person they charge, it will be wholly exempt. Now coming towards legal services. Now coming towards legal services. In case of legal services, you can remember we have discussed this thing in the river charge also. Yes, river charge, section number 9.3. River charge in case of supply of service. In that case, it was like any legal services provided by an advocate, former advocate or senior advocate to a business entity located in taxable territory, the same will be under reverse charge. Now discussing about what exemptions have been given here. Say when any services provided by a firm of advocate or individual advocate, either a firm of advocate or individual advocate. In these two cases, as an advocate, they provide any service to another advocate or firm of advocate. One advocate providing services to another advocate, it will be exempt. When this service and the service of arbiter tribunal and senior advocate services provided to government, then it will be exempt. When these are provided to business entity, now here the reverse charge comes into act. We have learned this, that any legal services provided by advocate to business entity located in taxable territory, it comes under reverse charge. Now see, though it is reverse charge, but if the aggregate turnover of the business entity is less than what is required to make them liable for registration in section number 22 and 24. If in section 22-24 the business entity is not liable for registration up till now, then this type of business entity, the services will be exempt. But if that business entity is liable for registration or already registered person, then it will be taxable under reverse charge. Like this exemption is there for legal services. You can see in the chart itself. Now, next, goods transport services. Now, when talking about transportation by road, either courier or GTA, either courier or goods transport agency, both will be taxable. Both will be taxable, and GTA also taxable in case it was provided to notified person. That also we have seen in the reverse charge chapter. Yes, you may see the video of reverse charge chapter to revise the same. Yes, in the reverse charge it was like that. Reverse charge GTA provides services by transportation of road to a notified person. So what is the definition of notified person? We have discussed earlier there. So it is provided to notified person, then only taxable, otherwise exempt. Otherwise exempt. Yes, otherwise exempt. Now, when transportation is done of goods through inland waterways, it will be exempt. And if done to any other ways, railways, vessel, airways, other ways, it will be 100% taxable. So keep this in mind. Now, coming towards some exception to this rule. Now, as we have seen that through rail, vessel, and GTA, goods are taxable. But in case of this Dr. Mona, in case of this Dr. Mona, if transported through rail, vessel, or GTA, it will be exempt. If this rail, vessel, or GTA transportation services are provided for Dr. Mona, this the goods of Dr. Mona, then it will be exempt. Sir, what is Dr. Mona? D for defense, R for relief material, M for milk, salt, food grains, etc. etc. O for organic manure, N for newspaper magazines, and A for agricultural produce. So this is all about the exemption part of Dr. Mona. Yes, this is all about goods transport services. Now there was a good clarification on this. Imagine that have you seen any mining area in your life, or say in movies also? I think 99% of you have seen the movies mining area scene. Yes, seen in mining area in the movies. In that mining area, it is like that. There is a say, for example, a land. They explode the land and they dig it like this, and they form a mining area. They dig it and form a mining area. Now, the mining area pit is there. From there, minerals are extracted, and that too transported up to the top, going vehicle like this round and round and round up to the top, and at the top that is shifted from that conveyance to another conveyance. Yes, and then transported further. So here we are not talking about transportation of that vehicle. Have you ever seen in a movie or any real life location of mining sites, there are different type of vehicles which are specifically used for the transportation of minerals or mined products in the mining. Yes, like tippers, dumpers, loaders, trucks, which are used to carry the extract from the mining pit to the upper portion of that particular area, from where it will be further transported. Now, we are not talking about here of transportation of that goods. What we are talking about, say, if any person has taken this vehicles on rent, then the rent charges paid for that vehicles, we are talking about this rent charges, whether this rent charges will be exempt or what. So clarification is there. This rent charges will not be eligible for exemption. These are not exempt. This rent charges are not exempt. So this is the thing. Yes. Again, some things here regarding the rent itself. Vehicle, you are giving your vehicle on hire. To whom? To whom you are giving? To a state transport undertaking, a motor vehicle meant to carry more than 12 passengers, or to a local authority, an electrically operated vehicle meant to carry more than 12 passengers, to a GTA for transportation of goods, and to an education institution for the transportation of student, faculty, and staff. So if you are giving your vehicle on hire for this purpose to such person, then only it will be exempt, otherwise taxable. This is another clarification on the same thing. Yes, we are just putting the points in front of us and we are just revising it. Yes, no explanation is there. We are just revising it as fast as possible. Now, next, healthcare services. See, when we are talking about healthcare services, there is a word healthcare. Sir, please tell us the meaning of healthcare first. Healthcare means you are doing DTC for double iPad. You are doing DTC for double iPad. Sir, DTC? diagnosis, treatment and care. For what? Why you are doing the diagnosis? Why you are doing the treatment? Yes, why are you doing the care? For illness, injury, pregnancy, abnormality and deformity. Double iPad. So if we are doing DTC for double iPad, yes, DTC for double iPad in any recognized system of medicine in India. If we are doing DTC for double iPad using any recognized system of medicine in India, what are the recognized systems of medicines in India? Allopathy, yoga, naturopathy, Ayurveda, homeopathy, Siddha, Unani, or any being notified by the government, including service of transportation of patient to and from a clinical establishment, but it excludes hair transplant, cosmetic or plastic surgery. So this term will be called as healthcare service. Healthcare. Yes, this is called as healthcare. DTC double iPad through recognized system of medicine in India, including transportation of the patient to and from a clinical establishment, but exclude hair transplant, cosmetic and plastic surgery. So this is all about healthcare. Now, when we are discussing for this healthcare, there is a term, hair transplant, cosmetic, plastic surgery. See, in this definition, this is excluded, but we can consider it, if such things are being done to reconstruct or restore any anatomy or functions of a body affected due to any defects, development, abnormality, injury, etc. So for example, if any person had a head injury and the doctor is performing the head surgeries, so after performing surgery it may happen that he can do hair transplant. Yes, it may happen. Yes, so in that case we can consider this service as a healthcare. But if any hair transplant, cosmetic, plastic surgery done for the purpose of say any showcase, yes, any purpose of any looks, for the purpose of any look like Michael Jackson, like any person doing hair transplant to have hairs on the head, yes, only for the purpose of looks, in that case it will not be covered under the healthcare service. But if done to cure any injury, to perform any injury, cure any injury, to perform, to restore, reconstruct any anatomy functions of a body, in that case, it will be termed as healthcare. And in the case of IVF, yes, everybody know the meaning IVF, it will be termed as healthcare. So, sir, what? Healthcare what? So, any healthcare service provided by clinical establishment, authorized medical practitioner, paramedics will be exempt. The meaning of healthcare we have seen here. Now, any clinical establishment, any authorized medical practitioner, any paramedics who is providing such healthcare services, the services will be altogether exempt. Yes, what is clinical establishment, sir? Hospitals, clinic, nursing home, etc. Authorized medical practitioner, the person who has been practicing as a doctor or as a medical practitioner because of any say certificate given him by the recognized system of medicines. Paramedics, these are health trainers, yes, healthcare trainers like nurses and physiotherapists, etc. Paramedics. After that, service provided by way of transportation in ambulance. Yes, ambulance service are also exempt. And any services by veterinary doctors. Yes, veterinary clinic, the doctors of the animals, services also exempt. Now, this is all about healthcare service. Now, we'll have some clarifications, services related to this. Now, when a person is admitted in the hospital, there is also a charge other than, say, for example, healthcare or treatment. There is a charge of room rent. Room charges are applicable. Yes, special ward, general ward, room charges are there. So in this case of room charges, if the room charges of the rooms except ICU, CCU, ICCU and NICU, you know the word ICU, so you can see it and have the meaning of ICU. It is a critical situation. So if there is ICU, CCU, ICCU and ICU, then the room rent of 5,000 rupees limit will not be applicable. But any room other than this given to the patient and the rent charge is more than 5,000 rupees per day, then exemption will not be given. It will be chargeable to tax. This is the thing. Now, any services provided by any senior doctor, senior consultant, technician, lab technician to that particular clinical establishment, so it will also be exempt. Yes. And the last one we have to discuss is about the food supply. Here, the food supplied. Any food supplied to the admitted patient. Hear it clearly. Any food supplied to the admitted patient on the direction of the doctor. Yes, on the advice of that doctor, nutrition. And that food is being serviced from such a canteen, which is the canteen of the hospital itself. The canteen is not outsourced to any other person. It is of the canteen is of the hospital itself. The hospital is running the canteen. In that case only that food supplied will also be exempt with healthcare service. It will come under the composite supply of healthcare service, and along with the composite supply of healthcare service, it will be exempt as the principal supply is altogether exempt. But if the food is supplied to non-admitted patient or the attendant of that patient or any canteen which is outsourced by the hospital, not run by the hospital, in that case it will be taxable. Yes, it will be differently taxable. So rent of any shops also is taxable. When you visit any hospital, you see that there is a medical in say on that entry itself of that hospital. Yes, that medical is paying any rent to the hospital. So the rent income is also, that transaction is also taxable under GST. Now this is all about the health care. Now the next is construction service provided by specified bodies. Now see any services like construction. So when we are talking about construction service, you can see that any pure labor contracts, service by way of pure labor contracts provided to government by any person under the Housing for All Urban Mission or Pradhan Mantri Awas Yojana. Under this yojana or mission, if any person providing any type of construction services as a pure labor contract to the government, it will be exempt. Or any electricity distribution utilities being supplied by way of construction or establishing any electric point at the same farmland of a particular farmer, like this. And after that, pure labor contracts, when a person is having a pure labor contracts from any other person for the purpose of construction of his own residential property as a single residential unit. Okay, in that case it is exempt. This you can read by yourself. Now coming towards the next service, educational services. Now educational services. Now sir, when we are talking about the educational services, there is a term, educational institution. Now see here, education services covers two things in it. Service supplied by educational institution, service supplied to educational institution. So there is a common word, educational institution. So let us know the meaning. Let us have the meaning of that term first. Education institution means any institution providing service by way of, yes, who is providing service by way of preschool education or higher secondary school education. Yes, it means schools. Education as a part of curriculum of obtaining qualification recognized by law, means example colleges. Yes, they are providing you any qualification recognized by law. And third one, education as a part of approved vocational courses, education courses, approved vocational education courses, means certified course, certificate course, like this, approved vocational courses. So these are the educational institution if they provide these three types of educational services. If these three types of education services are provided by any institution, it will be termed as educational institution under the GST. Now, looking towards the education services, any services supplied by educational institution. See, when educational institution providing any types of service to its student, faculty and staff. Any service by education institution to the student, faculty and staff. We are not talking about supply of goods. We are talking about supply of service. So any services provided by the education institution to its student, faculty and staff will be exempt. Not supply of goods, supply of service. And any services by way of conduct of entrance examination against consideration in the form of entrance fee. Yes, any educational institution conducting any exam on behalf of any other person for an entrance fee or examination fee, that will be exempt. See, you have given your premises to an another institute for the conduct of examination. You are receiving anything for any consideration for that, that will be exempt. Yes, so this is all about service supplied by. This is all about service supplied by. Now we are going towards service supplied to education institution. Now any other person is going to supply education institution some services. We are going to talk about this. Yes. So see here, when we are talking about this thing, any services supplied to education institution by way of transportation of student, faculty, staff, catering services, any midday meal services sponsored by the government, security services, cleaning services, housekeeping services, which are being performed at that educational institution itself. In that case, if such services are provided to first educational institution, which educational institution? First education institution providing preschool education or higher secondary education. If any services provided in this first box to the first educational institution, then only it will be exempt. Say I am providing the transportation service to the second number of education institution, taxable. But the same is provided to the first education institution, it will be exempt. So remember this. Next, supply of online education journal or periodical. This should be supplied to the second educational institution. See, not first, not third, second. And the last one, service relating to admission to or conduct of examination by such institution. This service is provided to all institutions. This service provided to all institutions, it will be exempt, otherwise taxable. So this is all about the exemption part of educational. Now see, the main thing in it is that we have to bifurcate which institution is an educational institution. If we are knowing the proper meaning of a particular institution, which is education institution, then only you can apply this exemption. If this is not covered under the definition of educational institution, then it will not be exempt. So, sir, first thing is that we should determine which institution is the educational institution. Yes. Now, here are some examples. See, this example are in detail explained in the module itself. Yes, we can have from there also. Yes, but now as it is a rapid revision route, we are going to just revise it, just telling you directly the conclusion that the private ITIs and government ITIs supply food in mess and canteen, supply food in Anganwadis and schools, and any entrance fee for conduct of entrance examination for issuance of migration certificate, conduct of entrance exam by the board, say state board or CBSE board, like this, all this will be exempt. I am also exempt. Indian Institute of Management, yes, this is also exempt because I am comes under the definition of educational institution. Yes, that's why it is exempt. And what is not exempt is this: unrecognized educational institutions. So we can have an example of private coaching classes. In these private coaching classes are unrecognized educational institutions. So they are not exempt because they are not education institution itself defined under GST. So in that case, this will be taxable. Now, any fees charged from prospective employers in relation to campus recruitments. In case of campus recruitments, if the college is charging any type of amount from that employers, so that amount will also be taxable under GST. Now, this is all about the educational institution part. Now, next thing, renting of residential dwellings. Now, when talking about the renting of residential dwellings, sir, we had a discussion on this also under the reverse charge, section number 12.3. Then when any person rent any residential dwelling to a registered person, reverse charge will be applicable and the registered person is going to pay tax. Now here, first of all, we'll talk about unregistered person. If any residential dwelling is given on rent to an unregistered person, now you have to check the purpose of that. If the purpose of that is for residential use, then it will be exempt. If that unregistered person is having a commercial use of the residential dwelling, then it will be taxable. But if it is having a residential use, then it will be exempt. Now, this is all about unregistered one. Now we can talk about the registered person. Sir, what about registered person? Sir, we know that for registered person, it is reverse charge mechanism. It is RCM, that is reverse charge mechanism. But this reverse charge can also be exempt if you satisfy two conditions. We are talking about registered person, it is a reverse charge, but this reverse charge can also be exempt if we are going to fulfill two conditions, basic conditions. What are the two conditions? You are going to use, the registered person is going to use for his own residence the premises. The residential dwelling is going to use for his own residence. And the payment also of that rent is from his own account, not from the business account. It should be paid from his own account. If these two conditions are being satisfied, then under RCM also this will be exempt, otherwise not. otherwise not. Now, this is all about the residential dwelling renting. Now coming towards government, there are two services provided to government also, and service received supplied by government also. Supply means outward, received means inward. So see the list. The government list is very huge. Yes, we are going to revise it. Now, service supplied by the government. Now see here, you will see this. There is a very important word in this services, specified services. Now have a look on this. Service by the Department of Post and the Ministry of Indian Railways. Service in relation to an aircraft vessel inside or outside the presence of a port or airport. Transportation of goods or passengers. Any other service provided to business entity. Sir, all these terms we have already discussed in the reverse charge. Yes, see the list is this. When provided to business entity, any services excluding this three, it comes under reverse charge. Now we are going to analyze which are exempt and which are taxable. Now, first one, any services by municipality or panchayats, this will be exempt. Any services by government, excluding the specified one. Excluding the specified one. Yes, we have seen this A, B, C, D, E. These four services are specified service. So any services provided by the government other than the specified one will be exempt. It means that the specified services are taxable. Now, among the specified service, we are going to talk about the D. What is D? D is services provided to a business entity. Any services provided to a business entity. This we are going to discuss. Now see here. When government provide any services to a business entity whose aggregate turnover has not crossed the basic threshold limits, or we can say that business entity is not liable to get registered under section 22. If not liable to get registered, then this reverse charge which has been given to the business entity, this reverse charge will get exempt. This is the thing. But what if the entity is registered under the section 22 of the act? Then this reverse charge will be taxable and the business entity is going to pay the tax. This we are discussing only for point D. Now, any services provided from government to government means, say for example, central government providing any services to state government, or state government providing any services to local authorities, like this. So it will be exempt except this specified service A, B and C. Business entity we have already dealt with. Yes. Now A, B and C. So sir, if central government providing state government any services by way of Department of Post, it will be taxable. Of course, it will be taxable. Because these services A, B, C are excluded from this part of exemption. Now, next. Now, old age home. Yes. Old age home. Old age home services provided by the government. These services will be exempt only if the consideration charge per member is 25,000 rupees per month. Yes, the consideration charge is 25,000 rupees per month. Else, this will be taxable. Any services provided by government to its public sector undertaking PSU. Yes, public sector undertaking. Any service provided by government to its PSU, it will also be exempt. Or service of government by way of issuance of passport, visa, driving license, birth certificate, death certificate, etc., etc. This will also be exempt. Yes. And another important is this part of this Department of Post. Sir, this is Department of Post Services is already in the specified services. We have seen this that Department of Post Services are taxable, not exempt. But some services of Department of Post are exempt. Yes, what are that? Any services by way of postcard, inland letter, book post, ordinary post, where the envelope is weighing less than 10 grams. Where the envelope is weighing less than 10 grams. In such cases, it will be exempt. Now, this is all about the things. Yes, important things this were given. Now, provided to government. Provided to government. See, any services provided to government. Yes, any services. But if services are provided and it is a type of composite supply. Yes, service plus goods. So the goods should not form part of more than 25% of the total supply. Say if the supply is 100%, then out of this, at least 75% should be supply of service and 25% is supply of goods. Not more than 25% should be the supply of goods. Yes, this one is the thing. This one is the thing when talking about services provided to the government. After that, services provided by fair price shops. This term is very familiar in the case of ration card. Yes, in the case of ration card, the shop where you utilize the ration card and have ration at a very have the grocery at very reasonable and very low prices, that shops are called as fair price shops. That shops are giving these services to the government, that we can allow your ration card here and will provide the subsidized rate to the public. So this is called as fair price shops. So this is also exempt. And coming towards last one, directly the amendment part. Any services provided to the government authority by way of water supply, public health, sanitation, conservancy, solid waste management, slum improvement and upgradation. Now, for the best example, I will give you the Swachhata Abhiyan vehicles coming in front of your home. गाड़ी वाला आया घर से कचरा निकाल. Yes, coming in front of your home, he will take the dustbin waste with them and go for the waste management. Now, this services is not compulsory that it will be provided by the government. It is provided by the government, but it can be outsourced to other entity also. Yes, so government has outsourced to the other entity. Now, the other entity is providing the solid waste management service to the government, or say slum redevelopment service to the government, or public health service to the government. In that case it will be exempt, because government cannot do all these things alone. They need some private person also whom they can outsource these services, and their services are exempt when they are providing help to the government in fulfilling this types of services. So this is all about the government. Now the important portion up till now, this government portion has been ended. Now this exemption are not so much important, but not so much important. Now we are going to directly discuss each and everything with their title name. Now banking and financial services. See, when we are talking about banking financial services, this statement we have observed many times. Services by way of extending deposit, loans or advances to any person insofar as the consideration is received in terms of interest or discount. Yes. So the interest or discount is the consideration for what you have performed your supply. So in this cases, it will be exempt. The interest will be exempt, but interest of credit card will not be exempt. And when we are talking about sale purchase of foreign currencies, say you are selling or purchasing foreign currency. So when it is done amongst the banks, amongst the dealers, or among bank and dealer, then only it is exempt. Yes, any charges charged, then only it will be exempt. Any currency exchange is done between the customer and the dealer, it will not be exempt. What is exempt is among us bank, among us the dealers, or one dealer or one bank. These are exchanging the currencies, then it will be exempt. So only this was important in these things. Now coming towards leasing services, business facilitator, we have already discussed this thing in the reverse charge. Sports event, organizing sports events like organizing Olympics, organizing say T20, organizing World Cups, like these things are all exempt if organized by a sports organization. Skill development service, yes, nowadays government is promoting more skill development services. So any person who is helping the government to fulfill this task of skill development, that services will be exempt. Yes. After that, leasing services, any services provided by way of leasing where the leasing period is more than 30 years, it will be exempt. Yes, it will be exempt. And what will be exempt? Only the upfront payment will be exempt in case of lease. Yes, in case of lease, the upfront payment will be exempt only. Now talking about insurance, life insurance, general insurance, you can see that in this you are going to have on the number of yojanas. Yes, see, Army, Naval Force, Yojana, Group Insurance, National Pension System, and say for example, Varishta Pension Bima Yojana, Pradhan Mantri Jeevan Jyoti Bima Yojana. You are going to have the yojanas in this. So all this yojana you have to read once. I cannot explain yojanas, what are they and like these things. So it will be exempt. Now coming here, any services provided to recognized sports body. Yes, any sports body by way of a player, referee, umpire, coach, and team manager. The services of this person to a recognized sports body will be exempt. But services by person like selectors, commentators, curators, technical experts, these are not exempt. These are taxable. What is exempt? In only the provision of service by this person. Public library is exempt. Yes, no way of explaining these things. Now coming towards housing societies. Now there are many societies which perform their duties. Yes, and the very common term in this case of the societies that the person who are the members of these societies pay some maintenance charges yearly or monthly to towards the maintenance of such societies. Yes, now we are talking about that charges, monthly maintenance charges, whether that will be exempt or taxable. Now first of all, see that this unregistered RWA has exceeded the threshold limit of that aggregate turnover. In short, now it is liable for registration under section 22. Now it is liable for registration under section 22. Now if this housing society is liable for registration under section 22, yes. Now check whether the per member monthly maintenance charges is more than 7,500. Check it. If it is more than 7,500, then it will be taxable. You have to check whether both the conditions are fulfilled. First condition, that it has crossed the threshold limit. Second, 7,500 exceeding is the members monthly charges. If these two are satisfied, then it will be taxable. If not satisfied, any one of this condition is not satisfied, then it will be exempt. If any one of this condition is not satisfied, then it will be exempt. These are the two conditions. Both should be satisfied. Now this is all about the things and the other exemptions. Other exemptions are not too much relevant with the examination point of view. The exemption which are important from the examination point of view, that we have covered very quickly, and where possible we have also we have went in a detailed explanation of some things. Now in this some things we are going to highlight only. Say provision of service by Right to Information Act. RTI Act, Right to Information Act. This is exempt. Public conveyances provision of service by way of public conveyances. This is also exempt. Yes. Say any services provided by way of providing any news, collecting any news by journalists, press, trust of India, like this. Any journalist services, any press services, these are also exempt, like this. So these are the basic services which are not so much important. You may have a reading of all the services. Yes, and the things we have discussed up till right now are more than enough for this revision of that exemption chapter. So this is how we have completed a revision of this chapter, exemption chapters. Yes, the main important exemptions we have covered here. Yes, not the other exemptions we have covered in this video. Other exemption you can read by your own if you want to read it. If you don't want to read it, then also not so important. Yes, so here we have completed chapter. We are going to revise the topic input tax credit. Yes, input tax credit. Now, the term ITC, input tax credit. First of all, simply, all of you have done your GST regular batches. Now, we are revising in it. ITC In the word ITC, there is the two words I and T. IT means input tax. Input tax means the tax that have been paid on the inward supplies. And credit means you are taking the credit of this input tax when you are making outward supply and paying the output tax. So credit is very simple. It is just output tax minus input tax. This is called as credit. Only this thing is the credit. Here, what you are doing, you are taking the credit of that input tax, and this process is called as input tax credit. Now, section covered under this, it starts from section number 16. Before that, before this section, we have done section number 7, supply, 8, composite and mixed supply, 9, charge, 10, composition scheme, 11, exemption, 12 and 13, time of supply, 15, value of supply. Now, this is section 16 of the CGST Act. Now, in this ITC, we are going to cover section 16, 17, 18. Now, 16, 17, we are going to go as much as detail we can revise these two sections. But section number 18, we are not going to talk as much as much deep as we are going in 16 and 17. So, let us start with section number 16. Now, see in section number 16, there are 4 parts, 16, 1, 2, 3 and 4. Now, coming towards 16.1, it talks about the eligibility. Eligibility, who is eligible to take credit? The registered person and the person who is supplying in the course or furtherance of business. And when the amount is credited in the electronic credit ledger. See, these 3 are the eligibility criteria. If these 3 things are present, then only you can take the credit. Yes, this is the first step. When you are a registered person and you are supplied in the course of furtherance of business and your amount is being credited to the electronic credit ledger, only then you can have ITC. Now again, what are the conditions you have to fulfill? Section 16.2. 16.2 clause A. You should be in possession of a proper tax paying document. Sir, what do you mean by tax paying document? Say any tax invoice, bill of supply, debit note, credit note, like these things. You should have possession of these documents to claim your ITC. Yes, if you want your ITC, you should have a possession of these documents. Second, 16.2 AA, you should file returns properly. Say the supplier from whom you have taken inward supply, that supplier should file the GSTR1 or IFF if opted for QRMP scheme. Everybody know in returns there is QRMP scheme also and there is IFF. Everybody is present with that having your full course of GST. So you know that there is IFF, this word in the returns chapter under the QRMP scheme. So if you are following the QRMP scheme, then please furnish IFF. If not following it, then furnish the GSTR1. So in short, I will tell you that return should be furnished. Yes, return should be furnished. After that, sir, you should have received the goods and services actually. You should have received the goods and services actually except bill to ship to. Except bill to ship to. And after that, payment of tax should be paid to the government. The amount of tax should be actually paid to the government. See the conditions I am repeating again. First, you should be in the possession of tax-paying documents. Second, GSTR1 or IFF should be filed. Yes. And next, you should be in physical receipt of the goods and services. And after that, you should pay the tax actually to the government. The government should have received this tax actually. Then only they can give you the credit. Yes. This is the thing. In this provision, there is a clarification. If the goods are received in lots, say installments, then the ITC will be given in the last installment. And when you have not made any payment to the supplier who has paid the tax recovering from you, so in that case, we have to wait for 180 days. If the payment is not made to the supplier who has paid the tax, then your ITC portion will be reversed and 18% interest will be levied on that ITC portion. and this two things will be added to your output tax liability. And now the credit that you have taken without paying any amount to the supplier, that will be reversed, and when you will pay the amount to the supplier, then only you are be eligible to take this credit again. This is all about the thing. And this provisions of 180 days does not apply to RCM supplies, Schedule 1 and value of supply section 15(2)(b). In this cases, it does not apply. So this is all about the conditions. Now going towards depreciation. See, for example, you have purchased a car. In that car, the amount is rupees 10 lakh, car is of 10 lakh, plus 1 lakh is the GST amount. It means the car is of 11 lakhs. Now, in this 11 lakhs, there is tax component also. And if you claim depreciation on the tax component also, then no ITC. If you take depreciation on 11 lakhs total amount, in 11 lakhs there is 1 lakh tax component also. It means you have taken depreciation on the tax component also. If you have taken depreciation on the tax component, then no ITC. But if you have taken depreciation on 10 lakhs only, then you will get the ITC. So it is important that depreciation should not be charged on the tax component. And the last one, section 16 for the time limit, last date up till which you can have the ITC. You can take the ITC. A registered person shall not be entitled to take ITC after 30th day of the November following the end of the financial year, or furnishing of relevant annual return, whichever is earlier. Say either you have furnished the annual return, or if you have not furnished the annual return, then 30th November of the end of the financial year, yes, next of the end of the financial year will be your last date of claiming the ITC on a particular invoice. See, this dates 30th November and the annual return furnishing date, whichever is earlier, will be your last date. So this is all about section number 16. Now coming towards the block credit, section number 17.5. Now these are the block credits. It means though you have satisfied the condition, though you are eligible as per section 16.1 and 16.2, then also we will not allow you to take credits of these things. Yes, forcefully, yes, forcefully. Will not allow you to take credit of those things which are covered under section 17.5 block credits. The credits under these things are blocked. But some exception also are given in the block credits. So we are going to see it clause by clause. The first clause A, motor vehicles. In case of motor vehicles, what happens? Sir, either the motor vehicle will be used to carry goods or passenger. If it is used to carry goods, so while purchasing such motor vehicles, if you have paid any input tax, that ITC will be available. Yes, you will get the ITC. But now in case of passenger, analyze what is the seating capacity of the vehicle. It is less than equal to 13% including the driver, or more than 13%. If it is more than 13%, then ITC will be given. But if it is less than 13% and the vehicle is put to normal use, then no ITC. No ITC. But what if the vehicle is used for making further taxable supply? You are using that vehicle to make further taxable supply by way of further supply of such motor vehicle, or transportation of passenger, or imparting training or driving of such motor vehicle. Like this. Further supply of such motor vehicle, transportation of passenger, imparting training or driving of such motor vehicle. You are using it like this. If you are using it like this, then only then only this ITC will be eligible. You will get the ITC. If you are making further taxable supply by these ways of that vehicle whose seating capacity is less than equal to 13 seats. So this is the case of motor vehicles. Now coming towards vessel and aircraft. Clause AA. Clause AA, vessel, aircraft. Now see, what is the purpose of vessel and aircraft purchase? Transportation of goods. ITC will be given. ITC will be given. But if it is used for transportation of passenger, then again the same thing repeats. If it is put to normal use, then no ITC. If it is put for the use of making further taxable supplies by way of further supply of such vessel, aircraft, transportation of passenger, imparting training and flying and navigating such vessel or aircraft. In this cases, only ITC will be available if you have purchased the vehicle, vessel or aircraft. In that case, using for these purposes for making further taxable supplies, then only ITC will be given. Otherwise, ITC will be blocked. Now, some notified services on such motor vehicle, vessel or aircraft. What are the services? General insurance, servicing, repair, maintenance, leasing, renting, etc. etc. See, in clause A and double A, we are talking when we're talking about when you are purchasing that vehicle, vessel or aircraft. While purchasing, you had paid the tax. In that case, we are looking forward to the clause A and double A. What if any other expenses related with that vehicle you have incurred and paid tax on that services? Say you have bought an insurance, you have purchased an insurance for your motor vehicle and you have paid tax on the premium part. Yes, or you have paid some amount while repair and maintenance of that motor vehicle and you have paid tax on that repairs and maintenance services. We are talking about that type of notified services in clause AB. Very simple. If you have credit, if you have got the credit in the cases of motor vehicle and vessel aircraft, see, in this case you got the credit, in this case you got the credit, in this case you got the credit, in this case, where you have got the credit in that clause, you will get the credit of this services also. You will get the ITC or you have paid on this services, you will get that credit also. But where the credit is blocked in clause A and double A, your this services credit will also be blocked. Very simple. If you have got credit there, you will get credit here. If your credit is blocked there, your credit will again be blocked here. And also you will get the credit if you are doing this expenses at the manufacturer level. Yes, at the manufacturer level itself. Now, coming towards clause B, following supplies of goods or services or both. Now, if you see here, there are many types of services like supply of foods and beverages, outdoor catering, beauty treatment, health service, cosmetic plastic surgery, leasing, renting of vehicles, and life insurance, health insurance, membership of a club, health fitness center, travel benefit given to the employees on vacation, or say home travel leave concession, like these things. Now, when these services are given to employees, one, two, three. When these services are given to employees and it is an compulsory by law, obligatory by law. It is compulsory by law that you have to provide your employees these services. Then ITC will be given. It will not be blocked. But if it is not obligatory, in that case, no ITC will be given. In that case, no ITC will be given. We are talking about these three boxes. Now, exclusively talking about this first box, where you are giving such services to any other person other than employees. Now in that case, observe whether you are making an outward supply of the same category. Means I have taken the foods and beverages and supplying the foods and beverages. I have taken it and supplying it. If you are doing the same, then ITC will be given. If you are further making the same outward supply, same nature, okay, same, if you are making same outward supply, then only we are going to give you ITC. What if I have taken that food and beverages and consumed? No ITC. If I have taken food and beverages and supplied to the employees? No ITC. Unless and until in the case of employees, it is obligatory by the law. Yes. So this is all about clause B. Now, talking about clause C and D. Clause C and D. Now, here two words are important. One, construction and immovable property. In C, there is works contract, and D, there is contract, construction by their own account. Either you are going to give the construction contract to some another person, or you are going to construct that immovable property by your own. So, if you have given to the works contract, clause C. If you are constructing by your own, then clause D. Now, talking about both the clauses C and D, there are two common words: construction of immovable property. Now, first of all, sir, construction. Construction means any type of construction service, includes reconstruction, renovation, addition, alteration, repairs also, up to the extent they are capitalized. Concentrate on the important word capitalization. If these expenses are capitalized, then only it will be termed as construction. Otherwise, it will not be termed as construction. If not termed as construction, then can it be represented in clause C and D? It will come under C and D? No, because there is only one word, construction. If the expense done on that immovable property is within the meaning of construction, then only clause C and D will be applicable, otherwise not. If not applicable, then very happy ITC will be given, because clause C and D talks about block credits. Yes. Now, sir, the expense is within the meaning of construction. Now, what is the meaning of immovable property? Immovable property means other than plant and machinery, any immovable property. It means plant and machinery is not covered under the definition of immovable property. Hence, no clause C and D will be applicable on immovable property, plant and machinery. Yes, only plant and machinery, because other than plant and machinery is given. Now, if no clause is applicable, it means plant and machinery, ITC will not be blocked if it is under the meaning of plant and machinery. So, sir, what is the meaning of plant and machinery? Means any apparatus, equipment, machinery fixed on the earth by a foundation or structural support. You are fixing this machinery only for the purpose of producing such goods which you can make outward supply. Which you can make outward supply. So you can make outward supply that goods and services you are producing. Yes. So that plant and machinery will be covered under the definition plant and machinery. But plant and machinery is not covered under the definition of immovable property. Hence the credit will not be blocked. You will get the credit. But the following are not under the definition of plant and machinery. Land and building, other civil structure, telecommunication towers, pipelines outside the factory premises. Hence their credit is blocked. Hence their credit is blocked. And other immovable property, their credit is also blocked. Unless and until there is a term subcontracting. When you have input services, from any other person for construction of immovable property, and you are doing a subcontracting, then ITC is available. Otherwise, ITC is blocked at each and every level. ITC is blocked at each and every level. Yes, coming forward. Section number 10. Yes, we have seen this in composition scheme also. That a composition dealer, the composition dealer is not eligible for ITC. No ITC in this case also. Yes, goods or services are both received by NRTP. NRTP, non-resident taxable person. Goods or services received, no ITC will be given other than imported goods. This thing I have discussed in registration chapter also. Goods or services, yes, here I will highlight one word, corporate social responsibility. While performing the corporate social responsibility, if you have paid any tax on the inward supplies, you will not get the credit of this inward input tax, which you have paid for fulfilling the corporate social responsibility. No ITC. Now, personal consumption, no ITC. Goods stolen, lost, destroyed, written off, gift or free sample distributed, no ITC. Yes, and tax paid according to the provision of section 74, 129, 130, no ITC will be given. Now, coming towards the last section, section number 18. Section number 18, availment and reversal. See, I will tell you this thing in a very short description. See, what happens, for example, now I am unregistered person. Today, my turnover limit is crossed. As per section 22, my turnover limit is crossed. As soon as my turnover limit will be crossed, I have to do registration. Yes, it means I have to switch from unregistered to registered. Remember this word. I have to switch from unregistered to registered. Or example number 2. Up till now, I am composition taxpayer. But somehow today my turnover of 1.5 crore has been exceeded. The limit has been exceeded. As soon as I exceeded the limit, now my composition scheme will automatically turn to regular scheme. Switching from composition to regular. Now in this two example, when I was unregistered person, I was a composition dealer. At that time, I was not eligible to take ITC. But now, as I become a registered person and came to regular tax scheme, I have to pay tax right now. And now I am eligible for ITC from today onwards. But what about the past? I am having many stock in my godown, warehouse. A lot of stock in my godown and warehouse, which I am going to supply Afterwards, after switching, when I will supply this stock after switching, the outward supply will automatically become taxable. But I have not utilized any ITC on this stock. So what can I do? In such case of switching, when you are not eligible for credit and automatically after some event you are eligible for credit, you become eligible for credit, in that cases you can have the credit of the stock which is in your godown, either the input raw materials or the semi-finished goods or finished goods, whatever there in the godown as a stock. The invoices you have of the last 1 year from today itself, when you become for liable for registration, from today to the last 1 year, preceding 1 year, you will count the invoices which fall in this time gap of preceding 1 year. You can take the ITC on that invoices. Yes, see, within 1 year, the invoices falling within 1 year, you can take the ITC of such invoices. See here, within 1 year, you can take the ITC. Yes, and this is all we can call it as availment of credit. And vice versa, if the reverse happen, from regular scheme you shift to composition, from registered person you became unregistered, from taxable goods your goods became exempt goods. Reverse, in that case, reversal of credit. Now you are going to claim your credit, that the balance which is in the input tax credit, now pay the balance back to me, because now I'm not be eligible to take the credits. So this is all about availment and reversal of credit. So this is how we completed a revision of the most important portion of the ITC input tax credit. So this is done. We are going to revise the topic payment of tax. So let's go. Shall start the topic payment of tax. While revising payment of tax, we should have a proper understanding of one thing, that in GST there is a system of electronic ledgers. Yes, there is a system of electronic ledgers, and in GST this electronic ledgers are of two types. Type number one. Type number one, the one set is prepared by the taxpayer. Yes, and another set is prepared through the information furnished while filing the returns. Yes, so as I told you, one set is prepared by the taxpayer and the another set is prepared updated on the basis of returns furnished. On the basis of return furnished, the another set is being prepared. So the first set is being prepared by the taxpayer, includes electronic cash ledger and electronic credit ledger, and the second set, which is prepared on the basis of returns furnished, includes electronic liability register. Yes, so these are the electronic ledgers under the GST. Now, coming towards the first one, electronic cash ledger. Section number 49, electronic cash ledger. Beginning the discussion of this topic, electronic cash ledger, I want to tell you an example that you can relate with this cash ledger. Have you heard about, say, Phone Pay wallet or Paytm wallet? Yes. What happens in Paytm wallet or Phone Pay wallet, etc., like examples like this? When you put 1,000 rupees in that, and from that wallet, if you expend like 10 rupees, 20 rupees, 500, 200, like this, so which entries your bank account is being showing? Your bank account will show you the entry of only one, that is 1,000 rupees. That is 1,000 rupees transferred from your bank account to this wallet. And again, when you are transacting from this wallet, 10 rupees, 20 rupees, 100 rupees, 200 rupees, 500 rupees, these entries will not be reflected in your bank account or the statement. These entries will be reflected in the wallet statement. Yes, in the wallet statement. So this is a type of cash ledger, is a type of GST wallet. Yes, it works like this only. You put the money from your bank account into this cash ledger, and any payments of tax, interest, late fee, penalty, etc., etc., whatever you make will be debited from this account. Will be debited from this account. Yes. So this is a type of, say, GST wallet. We can relate it with this example. Now, continuing the topic, what things we can do in electronic cash ledger? In electronic cash ledger, we can deposit amount and make the payments related with the tax. See, we can deposit amount and make the payments. Sir, what are the sources through which we can deposit amount in the electronic cash ledger? In the electronic cash ledger, we can deposit amount by way of internet banking, UPI, IMPS, credit card, debit card, NEFT or RTGS, and over the counter payment. Over the counter payment means what? Going to the bank and giving cash, check, or demand draft. Yes, this is called over the counter payment. When we are making any type of deposit through the above five sources, say one, two, three, four, five sources, there is no limit of numerical limit of amount. Yes, no limit. Any amount you may deposit using these sources. 1 lakh, 2 lakh, 10 lakhs, how much it may be. But there is a limit when we are depositing money through the sixth source, over the counter payment through check, cash, or demand draft. If we are using this source, so in that case, there will be a limit of only 10,000 rupees per tax periods. Yes, per tax periods, there will be a limit of 10,000 rupees. Yes, this will be the limit. Now, in some cases, this 10,000 rupees limit of over the counter payment does not apply. Yes, when if the over the counter payment has been made by government department, if this payment is made by the government department or person notified by the commissioner or proper officer or any other officer authorized to recover outstanding dues, including attachment proceedings or sale of movable immovable properties, or to collect the amount by way of cash, check, DD during any investigation, enforcement activity, or any ad hoc deposit. Say in the cases when this amount is being deposited in the cash ledger by the government department or any person authorized by the commissioner or any proper officer, if the proper officer is recovering this amount from the taxpayer by way of selling their movable immovable properties, or say many dues are pending and now the taxpayer after investigation or assessment is forced to pay the amount and now is ready to pay the amount, so at that time this 10,000 limit of over the counter payment will not be applicable in this cases. In other cases it will be applicable. Now, payment by challan. There is a word challan. Yes, related with the real life example. Say, for example, you are driving your two wheeler with three seats. Yes, with three seats. You are sitting three people on a single two wheeler and you are driving. And there came the traffic police. What the police will do? Will stop you and what he will say? Please pay the challan. He will generate the challan. Yes. And again, second example, if you are traveling without ticket in a train and if the TT comes, what the TT will say? Yes, you have to pay the penalty as per challan. Yes, he'll threat you. I will generate the challan. Generate the challan. This is challan. This is challan. Challan is a process in the government system through which you make the payment to the government. It is a receipt in return of that payment you are making to the government. Yes. So just like that, when you pay tax, interest, any amount to the government in GST or say income tax also, there is generated a challan. Yes. So let's talk about the challan. So the challan is being generated electronically on the common portal. First one, on the common portal, when you generate the challan, there comes the common portal identification number, which is of 14 digits and validity period 15 days. Again, when you go to the bank and deposit the amount or through any online mode, you deposit the amount to the cash ledger, there is generated a CIN, that is Challan Identification Number. It is of 17 digits, out of which 14 digits are of CPIN, extra 3 digits are of the bank code. This is how it is of 17 digits. After that comes the BRN, bank reference number, the reference number of the bank which makes the payment to the government account. Yes, from your account to the government account in the cash ledger. So bank reference number, which bank, which branch or which point of bank has made the payment or the details. And lastly, there comes the EFPB, electronic focal point branch. It means, see, where when we are when we were studying about what are the sources of putting the depositing the amount in the electronic cash ledger, so there was authorized bank. Yes, there was authorized bank. Now in that authorized bank, it means some bank or some branches has been authorized under GST to collect the payment from the taxpayer. Yes, so that banks are given a EFPB number. Yes, EFPB number. That branches are given or the banks are given EFPB number, and then they become the authorized bank. Now this is the thing. Now see, as I told you that the challan is generated on the common portal electronically. So the challan is generated in form PMT06. In PMT06 generate the challan, and as soon as the challan is generated, you can make the payment, yes, or create the mandate in your say online modes, UPI, IMPS, NEFT, RTGS, etc. etc. So do the payment. When you will pay, what will happen? The amount will be successfully credited to the government account, and as soon as it will be credited, the CIN number will be generated. And now what will happen after the generation of CIN number? First of all, you receive the CIN number, so life is going good, no problem, CIN number received. Second, CIN number not received, not generated by the bank. If not generated, not received by the bank, not received by the taxpayer, and not generated by the bank, then what you can do? Fill the form GST PMT07 with all the proofs of the payment made, reference number, everything, everything. So they will correct it and generate the CIN. And thirdly, what can happen? What can happen? The bank has generated the CIN. CIN is generated, but bank has not communicated the CIN to the taxpayer. Then also no problem, because in the RBI e-scroll that will be corrected, that will be seen, and your cash ledger will be accordingly updated by the amount you have deposited. So this can happen. Now there is a date, which date we should consider. Say today we have made payment, and after 3 days it has been reflected in the government's account. Yes, so date of debit from the your account, bank account, or date of credit of the government account, which date we should consider? So in this GST provisions we should consider the date of credit into the government's account, the treasury of the government. Yes, so this we should consider. Yes, this is all about the provision of depositing money in the electronic cash ledger. Now, how can you make payment using the cash ledgers? We are seeing that there are two heads, major head, minor head. See this, I will relate this example with your practical examples in your life. See, whenever you fill a form, there is a, say for example, a topic, say qualification, and in that heading you will have a list. You will click on the list, a drop down list will come. Among the drop down list you will select something, and as soon as you select, a new drop down list will come. Now select this. What are this? The first drop down list is the major head, and the another one after selecting the major head comes the minor heads. Major head, and in form of the payment of GST, what you will do? Go on the portal. When you make the payment, you have to select number one, IGST. The drop down list will come: IGST, CGST, SGST, DGST, says like this. And when the drop down list will come, you select only one. Say you selected IGST. When you select the IGST, another drop down list will come. In IGST, what do you have to pay? You have to pay tax, interest, penalty, fee, others, what? So accordingly, you have to select that thing. So these are the minor head and the major head under the payment of tax using the electronic cash ledger. Now, as it's a human, and human may make the error. Yes. So what error you have made? You have to pay IGST tax. But what you have done? You have selected IGST but paid interest. One error. Number two, you have to pay IGST tax, but what you have done? You have selected CGST and paid the tax. Error number two. Made the error. So what your portal will say? Your IGST tax is pending. Your IGST tax is pending. In both the errors, it will say, it will give a pop-up. Your IGST tax is pending. So what you can do? There is any solution to correct it? Yes. Now fill the GST PMT09 and instruct the authorities, the proper officer, that I have wrongly selected CGST instead of IGST, or interest instead of tax. Please adjust the amounts and please accordingly receive the payment. So if you had made any type of error, you have to fill GST PMT09, and through this form you can correct your error, and the proper officer will self automatically adjust the amount and correct it, and the pop-up will be gone. So this is the case of electronic cash ledger. Now credit ledger. What do you mean by electronic credit ledger? Sir, electronic credit ledger will be a whole balance of input tax credit available to the taxpayer. Yes, it will be a ledger which will show you that how much credit balance do you have that you can utilize while making payments. Now, coming towards electronic credit ledger, we should focus on one thing, that electronic credit ledger can be used only to make the payment towards output tax. Very important. Only to pay the output tax, electronic credit ledger can be used. Yes, focus on this point. It can be used only to make payment towards output tax. Number two, second important point, it cannot be utilized for tax payable under reverse charge mechanism. It means electronic credit ledger can be used for making only output tax under the forward charge mechanism, not under the reverse charge mechanism. So under reverse charge, you can use cash ledger, not the credit ledger, to make the payments. And lastly, when we are using credit ledger, yes, we'll see these issues, then make the judgment. Yes. Now, any balance of amount available in the electronic credit ledger can be utilized towards payment of tax under GST. Yes, of course, we have seen it. It can be utilized only for the payment of output tax. Yes. Now, issue number two, any amount available in the electronic credit ledger can be used for making payment which are other than tax. Other than tax, interest, late fee, penalty, other these things. Can we make the payment of these things using credit ledger? No, we cannot make the payment of interest, penalty, fees, or any other amount. We cannot make the payment of these things using credit ledger. So these things can be paid only using the cash ledger. Yes, we can use the cash ledger to pay these things. This were the clarification. Now coming towards electronic liability register. See, as we have seen that this is the second set of electronic ledgers which is being generated, auto-generated, using the information that have been furnished in the returns. Now, the information furnished in the returns now will generate electronic liability register if any liability is being created on the taxpayer. If any liability, for example, I have not paid tax for the last month, then my name will be reflected in the electronic liability register. Now, my name will be there in the electronic liability register. So it will say that Mr. Tushar Tapadia has not paid the tax for the last tax period. So like this, it will be updated. If you are pending to pay current period tax, last period tax, or interest, late fee, penalty, any demand and recovery proceedings, all will be updated in the electronic liability register. Now, we'll see the chronology of what should be the first priority to set off under the electronic liability register. Say after many times of pendings and liability, the taxpayer has paid the amount. Now the taxpayer has paid the amount. So the amount the taxpayer has paid, where to be utilized first? The first, it should be utilized to fulfill the dues for the previous tax periods. For the previous tax periods, first the dues of the previous tax period should be fulfilled. After that, if balance available, current tax period dues. And after that, if balance available, then interest, late fee, penalty, demand, recovery, other amount will be forfeited using the balance. So these are the thing, and this is the mandatory sequence. This sequence is very compulsory. First of all, previous tax period dues, current tax period dues, and the other amount. Yes. So this is all about electronic liability register. Now, when any new liability is being created, say for example, I have not paid tax for the current period, and now my name is going to be registered under the liability register. So that amount, that ledger is debited. Every time when the liability will increase on the taxpayer, the electronic liability register will be debited. Now, when you pay off the liability, you pay off the tax, previous tax, current tax, or any interest, late fee, penalty pending, then your electronic liability register is credited and it will be observed from where you had made the payment. You had made the payment from electronic credit ledger or cash ledger. Accordingly, the ledger will be debited. If you made the payment using the credit ledger will be debited. If you made the payment using the cash ledger will be debited. So this is all about the ledgers. Now I'll see the process of interest on delayed payment of tax under section 50. See, in delayed payment of tax, the rate of interest is maximum 18% and the government has notified the same rate of tax. 18% per annum will be the rate of interest, that has been notified by the government if you made or delayed not made or delayed the payment of tax. Now see how it will be done. Case number 1, you have filed the GSTR 3B late. You have filed the GSTR 3B late. GSTR 3B filed means in GSTR 3B your tax amount will be given to the government. Yes, your tax amount will be paid. So you have filed that return late. So what will be the calculation? How will be the calculation? Sir, we know the amount. We know the rate of interest. What we have to calculate? We have to calculate the time period. Yes, we have to calculate the time period. Now, from when the interest will be start the calculation? Yes, their calculation will be started from the very first day after the due date of GSTR 3B. So the GSTR 3B due date and the next day after it, following day after it, will start the calculation of interest up to the date of payment of tax. Now, seeing here, if we are under section 51, in this case, that we have filed the GSTR 3B, declared tax and paid in GSTR 3B file after the due date. We have done by on our own. Yes, we have recognized that we have made the mistake, we have delayed the amount of tax, and now we realize it and we are on our own, we are making the payment. Though after the due date, but we are making the payment. Then on which portion the interest will be calculated? It will be calculated on the cash portion. Amount you have paid using the electronic cash ledger, on that amount your interest will be calculated, not will be calculated on the amount you have paid using the credit ledger. It may happen that a single amount of 1 lakh rupees, in 1 lakh rupees 40,000 you have paid using credit ledger and 60,000 you have paid using cash ledger. So the amount you have paid using the cash ledger, that is 60,000, on this amount you are going to calculate the interest in this case. But what if we had not paid the tax? Though we have recognized that we are making delay or we have made a mistake, we are ignoring it. Then the procedure of demand and recovery will start. And once the procedure of demand and recovery will start, the interest will be calculated on the total amount. As we had the example, 1 lakh through 1 lakh 40,000 credit ledger, 60,000 cash ledger. Now in the second case, the 18% interest will be applicable on the whole amount of rupees 1 lakh. That is the amount you have paid using the cash ledger and the credit ledger if the demand and recovery proceeding starts. Now another thing, so this is all about the interest portion. We have also discussed the date. Yes, I have told you from which date to which date you have to make the interest calculation. So this is all about the payment of tax chapter. Is tax invoice, credit note and debit note. So coming towards the word tax invoice, when we see the word tax invoice, you may have seen some format of tax invoice in your real life. Or if you have not seen, then there is a format in your module also. The same format I have presented here in front of you. What is the basic format of a tax invoice? This is how the tax invoice looks like. And we are going to discuss the content of a tax invoice. So what contents are there in a tax invoice? We are going to revise it quickly. See, the supplier details. Supplier details means the name, address, GST and number of the supplier. The details of the recipient, same ways, the address, name and the GSTN of the recipient. Then the description of the goods. Yes, what are the goods that you are supplying? How much quantity of the goods I are supplying? What is the rate per unit of that goods? Yes, see here. what are the quantity you are supplying, what are the rate per unit of that goods, particular goods. Here say example Himalaya herbal cream neem edition, and you are supplying 10 kgs, and what is the rate? 1000 is the rate. So this is the thing, and HSN code of the same. Harmonized system of nomenclature. Yes, HSN code, the code given in the GST system to that particular product. See, the HSN code for Himalaya Herbal Cream Neem Edition is 44003, like this. So this code should be there, HSN code, with this all details. And what is the some details about HSN code? If the aggregate turnover is less than equal to 5 crore, then it is compulsory in the case of B2B to issue 4-digit HSN code, and optional for B2C to issue 4-digit HSN code. But if the aggregate turnover is more than 5 crore, in that case, business to business supply either or business to customer supply, both the cases 6-digit SSN code should be generated. Yes, it should be written in the invoice itself. If you are issuing invoice where tax to be paid in reverse charge, you have to mention it, that tax to be paid on reverse charge basis. Yes, again, other details, the date of invoice with its invoice number, which is of say 16 characters, less than equal to, it may be 15, 14, 12, anything, but not more than 16 characters, like this. Then the shipping address and the billing address. In this you can bifurcate the bill to ship to models. Again, the details, taxable value. On this taxable value, how much is the rate you are going to apply, and which tax is to be levied. CGST, SGST, IGST, UTGST says everything. And again here, the amount of tax along with the rates. Yes, and after that, the main thing, signature. Yes, the main thing, signature of the person issuing the invoice. Now this is all about the format of a tax invoice. Yes, this is all the content of a tax invoice. Now coming forward to the word e-invoicing. Now, as tax invoice, they are given the content, but what majority of the people will do, they will have their different formats. We know what should be the content, but the content should be in the format we describe it. Say for me, I have written the customer's address, recipient address and details in the right side of the invoice. Some other person has mentioned in the left side of the invoice. Some other person may mention it at the top of the invoice. Some will mention it at the bottom of the invoice. Like this. Like this, the format will differ. Yes, it will be differ according to the different peoples who are issuing the invoice. The content will be the same, no doubt. You have told us the content, will cover all the content 100%, but the invoice format will be different. So to make that format easier and reconcilable, proper, e-invoicing concept came with a common format to all of the person who is doing e-invoice, issuing e-invoice. Now, e-invoice to be generated on the portal. Yes, so there will be a common format for all. In this format, if they generate, then the format problem will be resolved. Again, there will be paper elimination, cost reduction. Some are the benefits here also, e-invoicing, cost reduction, elimination of the paper, early payments, internal control will be good, and accuracy reconciliation will be better as compared to in manual invoices. Yes. Now, these are the benefit of invoices. Now, who is required to generate invoice? In business to business case, the supplier whose aggregate turnover is more than 5 crore is compulsorily required to generate e-invoice in the given format at the portal. Yes, he is required to generate the invoice. Now, sir, are there any person who are not required to generate invoice if their aggregate turn also increased by 5 crore? Yes, more than 5 crore. So these are the person, though their aggregate turnover crosses 5 crore limit, then also they are not required to generate the invoice. See, who are the person? SEZ, Insurance Banking NBFC Financial Institution, GTA Goods Transport Agency, Passenger Transport Service Provider, exhibition of a cinematographic film multiplex streams, it means movies. Yes, and government department. This person, though their aggregate turnover crosses the limit of 5 crore also, mandatory requirement of generating invoicing is not applicable to these cases. Yes. Otherwise, to everybody, it will be compulsory. Now, what is the procedure? First of all, prepare the invoice and generate it on your ERP system or accounting system. Yes, whatever it will be, or billing system, manual system, whatever the manual system may be, generate your invoice there first. Now, after that, go to the invoice registration portal. After that, go to the registration portal, invoice registration portal. It is a website specifically made for the invoicing process. Yes, invoice registration portal. At this portal, you are going to upload your invoice. As soon as you upload your invoice details, yes, details on this portal, IRN will be generated. So IRN, invoice reference number. Invoice reference number will be generated along with QR code and along with the PDF format of your invoice. Now that invoice details you can share it with the recipient, and this invoice detail will automatically be shared with the GST system and e-way bill system. Yes, as soon as on the IRP you put your details, this detail will automatically will send it to the GST system and the e-way bill system. In the GST system, you can use it while filing your returns. On the e-way bill system, you can use it while making the e-way bills. Yes. So this is the process how the invoicing is helpful to frequent the process. Yes. Sir, can we cancel IRN, invoice registration number? Yes. You can cancel the invoice reference number on IRP, but you cannot amend it. You cannot revise it. You can amend the IRN only on the GST portal, but you can cancel it on the IRP. You cannot make any changes on IRP. You can just cancel it. But if you want to make changes, go to the GST portal. There you can make changes on the IRN generated. Now, next thing, QR code. As we have seen that IRN is generated along with QR code. So QR code, yes, QR code is generated, and it is a fashion of QR code after Google Pay, Phone Pay. Many of you know the QR code, quick response code. In that, this detail should be compulsorily accessed. Yes, when you scan the QR code, you should get these details basically. Yes, basically these details you should get. What are the details? GSTN of the supplier, recipient, invoice number is given by the supplier, date of generation of invoice, invoice value, number of line items, HSN code, unique invoice reference number, date of generation of IRN. All these details should be there in the QR code. Now there was a concept of dynamic QR code, which is compulsory to a person who is having aggregate turnover of more than 500 crore. Yes, 5 crore for e-invoice, 500 crore for dynamic QR code. Now, what is dynamic QR code? I will explain you. Dynamic QR code, in that dynamic QR code, say for example, when you scan a normal QR code, a simple QR code, what happens? When you scan it, it will directly push you to the amount page. You have to manually put your amount. Say you have to pay 1000 rupees, you have to put it 1000, and then you will click on the next, and after that you will come on the pin page. You have to enter the pin and the payment is made. Now, dynamic QR, this was simple QR code. Okay. Now, what is dynamic QR code? In dynamic QR code, say for example, you have visited DMart. At the billing counter, if you say that, sir, I have to pay online. Now, what he will do? He will generate a QR code on that small screen itself. Yes, along with amount written on it. When you scan that QR code, you directly come to the pin page. Yes, you have to directly now enter the pin. You don't have to enter the amount. The amount will be directly automatically entered. Now you have to enter the pin, and automatically when you enter the pin, the amount will be paid off. No need to put that amount. Yes, this is the thing. So dynamic QR code requirement when the aggregate turnover is more than 500 crore. When the dynamic QR code is not applicable, see, these people were exempted earlier from e-invoice also, and they are exempted also in the dynamic QR code requirement. See, GTA, goods transport agency, insurance banking company, passenger transport service, this cinema, yes, multiplex screen cinema. So these are not required to generate dynamic QR code, and these people are not also required to generate the e-invoice. This is all about the dynamic QR code. Now the revised tax invoice. Sir, what do you mean by revised tax invoice? Now, here you can relate with the registration chapter. Now, as soon as you became the liable for registration, within 30 days you should apply for registration. If you applied within 30 days, the effective date of registration will be the date on which you became liable. There may be a time gap between the date you are liable and the date you got the registration certificate. The date you got the registration certificate, on that day only you will know the GSTN number. Up till that, in this time gap, say there is a time gap of 10 days when you are liable and when you receive the certificate. Now in this 10 days, you have issued invoice. Yes, you had issued invoice. Yes. Now you can issue tax invoice in those days. Sir, we are not having the GSTN, and the supplier GSTN is compulsory in the tax invoice itself. So what you can do? This 10 days tax invoice can be revised tax invoice. First issue dummy tax invoice, yes, or say normal tax invoice. Now, as soon as you get the GSTN number, now you can issue revised tax invoice in the 10 days, last 10 days that you have issued without your GSTN number. So this is all about revised tax invoice. Now consolidated tax invoice. Now this is the provision in case say, for example, any recipient does not require invoice, or say the recipient itself is a unregistered person, or the invoice value is very less than 200 rupees. So in that case, instead of giving separate invoices, the supplier can generate an consolidated invoice in which all the recipients are present, like this recipient. Yes, all the recipients will be present in a single invoice. Yes, this is called as consolidated tax invoice. Yes, we are revising the things. Now there are other tax paying documents also. Say bill of supply, receipt voucher, refund voucher, payment voucher, delivery challan, credit note, debit note. When we are talking about all these tax paying documents, you will observe that every tax paying document is having 95% of the same content. Yes, see here, GST and name and address of the supplier is there. Here also it is there. Here also it is there. So 95% you are going to see the same thing. What you have to keep remember in your mind, the meaning of each and every document, when it is issued and to whom. Bill of supply. We all know that. Bill of supply is issued in the case of composition levy. Yes, in that case, he cannot issue tax invoice, but he can issue bill of supply. So, bill of supply is issued in the case of composition. Yes, receipt voucher. When you pay any advance amount for a particular supply of goods or service to a particular supplier, the supplier in return gives you a particular document as a proof that I have received your advance. And that document is none other than a receipt voucher. Yes. And what happen if such advance you have received and something happens that you have to refund that advance, right? You have to give back the advance right now. You are not able to supply the things, or the things were not possible. Yes. So you have to return that advance that you have received in case of receipt voucher. Now to cancel that receipt voucher, again refund voucher is being issued against the advance that you are going to refund. Yes, the advance you have received, in case when the advance was received, you should receipt voucher. Now, when you are going to refund this advance, to cancel this receipt voucher, you are going to issue the refund voucher. That is the refund voucher. Now, again, payment voucher. Payment voucher is issued in case of 9394. Sir, 9394? Reverse charge. Oh, yes, reverse charge. In the case of reverse charge, who is going to pay tax on the supplies made by the supplier? The recipient pays the tax. And when the recipient pays the tax on such supplies, he should issue a payment voucher to the supplier as a proof that I have paid the tax on your supplies. This is a proof that I have paid the tax, payment voucher, and it is given to the supplier by the recipient. So this is all about the payment voucher. Yes, we are revising the things. Now, another document is there, delivery challan. This is called as Rule 55 challan. Delivery challan. Yes. What do you mean by delivery challan? Say, I will give the example, best example, the second example of job work. What happens in job work? Sir, we are sending raw materials to a person, and in return, that person is going to create finished goods and send back to us. Now, when you are sending the raw materials to that person, you have made any type of supplies? No, sir. You have not made any supplies. But the goods are being transported from one place to another, being reason other than supply. You have not made the supply. You are sending the goods to the job work. In return, he is going to give finished goods to you. This is the reason, not a supply. So in that case, delivery challan is being issued. Yes, a supporting document that goods are going for delivery purpose only. They are not going as a supply. So this delivery challan should be issued in triplicate, means 3 copies. It should also be declared in the e-way bill. Yes, this delivery challan should be declared in the e-way bill. Okay, and in cases of liquid gas transportation where the quantity is not known at the time of supply, so at that case delivery challan will be issued. Transportation, yes. Job work, I told you the example, and other cases notified. So delivery challan is being generated with a serial number of 16 characters, less than equal to 16 characters, and this is the 95% similar detail as we have seen above in this. So this is all about the cases of tax paying document. Now there is another one condition, SKD CKD. Sir, what do you mean by SKD CKD? Semi knocked down, completely knocked down. Now, what happened? Say, what happened? Take an example of windmill. Yes. So, if you want to establish a windmill at a particular place, you will install the windmill at your factory itself and transport the installed windmill on a vehicle. It cannot be transported like this. So, what do you have to do? You have to part that windmill and send in parts. Say you are going to send in the first consignment the fan, second consignment the motor, third consignment the base, fourth consignment the stand, and the last consignment the tools required. Like this you are going to send it. When you are going to send the one consignment, now this is called as completely knocked down goods consignment or semi knocked down goods consignment, which are in a knocked down condition, but it is a one product. Yes, it is a one product that is going to be installed at a particular site. In that case, with the first consignment itself, you should issue the tax invoice, and in the subsequent consignments, after that first consignments, delivery challan is required to be issued. In case of CKD, SKD condition goods. Remember this. Now coming towards credit note, debit note. Now what happened? Say for example, you have sent some goods to the place of the recipient. You have made a supply. Now what happened? The supplier sent the goods. Now the recipient received 10 kgs. And on the invoice, it is written 12 kgs. Oh my god, 2 kgs extra. So the invoice is made by valuing 12 kgs and accordingly that amount is charged. So the invoice is overvalued. When the original tax invoice is overvalued, now what to do, sir? These details have been entered on the GST portal also. Now the GST portal details are entered. We cannot amend it easily. So there should be legal validity to change the original tax invoice, to revise the original tax invoice, to amend the original tax invoice. So when you require to amend or revise the original tax invoice, what do you have to revise in the original tax invoice? The value of goods or services. The value of goods or services you have to change. If you want to change the value of goods or services in the original tax invoice, then you have to issue credit note and debit note, because it is a legal method by which the values of the original tax invoice can be revised or changed. It is a legal method. So in our case, the invoice is showing 10 kg, the invoice is showing 12 kg and actually received 10 kg. So now what you are going to do? Reduce the value of invoice. When you want to reduce the value of invoice, you have to issue credit note. Yes, reduce, issue credit note. And vice versa, if you want to add the value of invoice, you have to correct it. Say what you have done, invoice is of 8 kgs and actual delivery of 12 kgs. So you have to increase, add 4 kg more. So in that case, if you want to do addition in the value of invoice, then you have to issue debit note. And if you want to reduce the value of invoice, you have to issue credit note. And this is all about the invoice chapter. And this is how we have completed the successful revision of the invoice chapter. We are going to quickly revise the topic e-way bill. Yes, e-way bill. Now, first of all, talking about the topic e-way bill. Now, the meaning of e-way bill. Why it is generated? The e-way bill is a concept in this GST which is generated to monitor the movement of goods. Yes, to monitor the movement of goods for controlling purposes, where the goods are being moved from one place to another by road or any other conveyance, where they are going, where they are moving, wherever the delivery position is. So e-way bill is generated to basically monitor the movement of goods, and it is generated under form GST EWV01 on the common portal, that is e-way bill portal, or through web, Android application, SMS, or bulk uploading tools or softwares like this. E-way bill is generated. Now, let us see when e-way bill is required to be generated. It is required to be generated when the consignment value exceeds 50,000. When the consignment value exceeds 50,000, whatever may be the reason, either in relation to supply or reason other than supply or inward supply from unregistered person, whatever may be the reason, if the consignment value exceeds 50,000, e-way bill will compulsorily required to be generated. So what is this consignment value? This is a sum of what you have calculated under section 15 value of supply plus taxes under GST, because in section 15 the taxes under GST are not included. So what you have calculated under section 15 plus all the taxes under the GST, and does not include value of exempt supply. Value of exempt supply is out of the calculation of consignment value. When you calculate the consignment value, when it is more than 50,000, then compulsorily e-way bill is required to be generated. There is a case where this value of 50,000, limit of 50,000 does not apply. It means if you had made a single rupee supply moment of goods, in this case, compulsorily e-way bill is required to be generated. So what is the case? In case of handicraft goods, interstate transfer of handicraft goods, in this case there is no bar of that consignment value of 50,000. Even a single rupee moment of interstate transfer of handicraft goods, e-way bill is required to be generated compulsorily. No limit will be given. Yes, no benefit of limit will be given. But there are situations where e-way bill is not required to be generated. Even though the consignment value is more than 50,000, e-way bill is not required to be generated. So what are the cases? What are the cases? There are many cases. I'm going to dictate it orally. Yes, you may read it in detail in the module itself. Now, say for example, transportation of some notified goods. Sir, what are the notified goods? Say liquefied petroleum gas, or say any precious metals, precious materials, or currency. Yes, currency is going in a particular conveyance from RBI to a bank or from one bank to another. If you generate the e-way bill, all details will be on the portal. If any hacker hacks the portal and get the information, now he will form Doom 3, Doom 4 like this. He will rob that vehicle. So that's why these are some notified goods in which the e-way bill is not required to be generated. No information is required to be communicated. Like precious jewelries, not about imitation jewelries, precious jewelries of the goldsmith, etc., etc. And when in any consignment, the consigner itself is the government. The consigner itself is the government. Then what is the requirement of generating e-way bill? Yes, this is the case. Or other cases like empty containers are coming. So no requirement of generating e-way bill. Yes, in that case also e-way bill not required to be generated. Empty cargoes, empty consignment, like these things. Or when it is a schedule 3 supply. Sir, schedule 3 supply, what supply excludes, not covered in the definition of supply. It is not a supply. In that case, no requirement of e-way bill. So these are some of the examples I have given you. Now, see the procedure of e-way bill. First of all, e-way bill part A details are to be furnished. Yes, the consigner or the consignee itself furnish the part A details under form GST EWB01. Now, when the part A is furnished, a slip is generated with a tempered number. Using that tempered number, now the part B is required to be filled. Now the part B is filled when the goods are ready for the moment. When the goods are ready for the moment, you will fill the part B. And as soon as you fill the part B, now e-way bill will be generated. So what is the basic requirement of e-way bill generation? filling of part B details. When you fill the part B details, enter the part B details, e-way bill will be generated then only. Now you will get the unique e-way bill number. This is the process of generation of e-way bill. Now see what is there in part A and part B. Now when we are talking about the part A of the e-way bill, when we are talking about the part A of the e-way bill, in this all the details related with the consignor, consignee and the goods. Who is the supplier, who is the recipient, their GSTIN number, place of delivery, where the goods are going, what are the HSN code of the goods which are in the consignment, yes, and all the value of goods, all the documents like tax invoice, bill of supply, yes, and delivery challan, bill of entry, like these things, all the reason for transportation, all the documents you need to submit in the e-way bill itself in the part A of EWB01. And these details of the part A are furnished by registered person causing movement of goods. Very, very important term. Registered person causing movement of goods. Yes, this is the person who is required to generate part A. Now, who is the person causing movement of goods? See here, who causes movement of goods? If the supplier is registered one, if the supplier is registered and the supplier himself is saying that I will arrange the transportation for the recipient. Supplier is a registered person and the supplier himself is arranging transportation for the recipient, then the supplier is the person causing movement of goods. In case number 1. Now case number 2. What if the registered recipient is telling to the supplier, no, I will arrange the transportation on my own. The transportation now is going to be arranged by the recipient. In this case, who is the person causing movement of goods? The recipient, registered recipient. And in case when the supplier is unregistered but the recipient is registered, in that case person causing movement of goods will be that registered recipient. So remember these 3 cases. Only these 3 people are the person causing movement of goods. Now sir, can this 3 person causing movement of good shift their responsibilities, authorize someone else? Yes, they can, of course. Whom they can authorize? They can authorize the transporter or the e-commerce operator or the courier agencies. Yes, courier agencies, e-commerce operator and the transporter they can authorize to fill the form part A details. Fill the form part A details. Now, this is all about part A. Now, so what is there in part B? In the part B, the details of transportation will be there. All the details of transportation. What is the transportation mode, the vehicle number, the transportation receipt, all the things will be there. Vehicle number, transported document, goods receipt number, railway receipt number, airway bill number, etc. etc. And who is going to furnish the details in part B? The person who is transporting the goods. Now, who is the person transporting the goods? See here. When the goods are transported by a registered person, either the consignor or the consignee, either the supplier or the recipient, whosoever is the registered person who is taking the responsibility to make the transportation arrangements, that person is going to fill part B and generate e-way bill. Now, what if that registered person assigns a transporter? That registered person assigns a transporter and hand over the goods to the transporter for transportation. Now that person is not arranging by themselves. They are authorizing some other person to arrange the transportation, say the transporter. In that case, part B should be filled by the transporter and e-way bill is required to be generated by the transporter. But this is the case, this 2 case is by road. What in case of railway, airways or vessel? In case of railway, airways or vessel, the registered person, whosoever may be, either the consignor or the consignee, whosoever may be, the registered person is required to generate the e-way bill. And in case of railways, no requirement to carry the e-way bill together, only generation is enough. And what if sir, the person are unregistered one. The supplier is also unregistered, recipient is also unregistered. In that case, only the person transporting the goods, the transporter is required to file part B of the details of the e-way bill and required to generate the e-way bill, the transporter. In case both the consignor, consignee are unregistered person. And once the e-way bill is generated, now whosoever generate the e-way bill for whom? For that person for whom the e-way bill is generated is required to approve the e-way bill within 72 hours. If not, approved, then it will be deemed as approved and the e-waybill will be generated accordingly. Now this is the case. There is also concept of consolidated e-waybill when the consignment value is very less and the single conveyance is carrying more than one consignment. So there will be a requirement of consolidated e-waybill in GST EWB 02. Consolidated e-waybill. All the products and the consignee details will be put under one consolidated e-waybill. Only one e-waybill for all the consigns. Now there is a portion of validity period. Before this validity period, once the e-waybill generated, you can cancel the e-waybill within 24 hours. Yes, within 24 hours of its generation. Amendment is not possible of e-waybill, but you can cancel it. Now, validity period. When we are talking about a e-waybill or any consignment in a conveyance other than over-dimensional cargo. When we are talking about any consignment other than over-dimensional cargo or multi-modal shipment. Yes, multi-modal shipment means one leg is transported by ship, say by road and ship. Now here by road is also there and by ship is also there. So in that case, you will get 1 day for 200 kilometers. And for another 200 kilometers or part thereof, you will get again 1 day. Say for example, I am going to transport 220 kilometers. So I will get 2 days. 200 kilometers 1 day and again 20 kilometers 1 day. Yes, it is there. 200 kilometers 1 day or 200 kilometers or part thereof 1 day. But when we are transporting this goods by over-dimensional cargo or multimodal shipment, in that case for 20 kilometers you will get 1 day. And again for next 20 kilometers or part thereof you will get 1 day. So this is the case and this will go on. Now, when the e-waybill is generated, say for example, e-waybill is generated at say 6 a.m. At 6 a.m. in the clock. Yes, at 6 a.m. in the clock. Morning, 6 a.m. So, how much hours are left for that e-waybill? In how much hours you are going to transport that e-waybill? Yes, for the first 200 kilometers. For the first day, when the e-waybill is generated at 6 a.m., you will get the time limit from 6 to 6, 12 hours. And again, how much the time is left for the day to end? More 6 hours, means 18 hours. Now, what if it is 6 p.m.? Then you are going to get only this 6 hours. So the day starts from 0.00 and ends at 0.00. 24 hours like this. Whenever you will require to generate, you may require to generate. You can generate. Now, say if you generated at 1 a.m. Now you are going to get the whole 23 hours. But what if you have generated at 11 p.m. then only 1 hour. So this is the time limit validity period of e-waybill, and this is how we have completed the proper revision of the topic e-waybill. We are going to revise the topic registration. Yes, registration, section number 22 to section number 30 are covered in this chapter. Yes, so this is section number 22. Yes, before going to registration, proceeding with this chapter, I want to tell you one thing. See, this chapter is being divided into two parts. One part talks about the liability to register. Yes, it talks about whether that person is liable to register or not. And the second part tells that if the person is liable to register, then he should follow the procedure to register. These are the two parts. And first part, if you fulfill this first part, then only you can go for the second part. So liable to register, if you are liable to register, then only you can follow the procedure to register. Now, with these two parts, all the sections are divided. So when we are talking about section number 22, 23 and 24, this section covers the portion number 1, liable to register. These sections will decide whether the person is liable for registration or not. And from section number 25 to section number 30, this portion will decide what procedure you should follow for registration. The cancellation procedure, amendment procedure, these are procedural sections. Yes. Now, coming towards the first part, here, section number 22, 23 and 24. As I told you that this sections tells you about whether that person is liable for registration or not. Now here, when we are seeing the section number 22, it tells it liable for registration. 23, not liable for registration. 24, compulsory registration. Now here, let's start with section number 22. Here see, section number 22, it is again bifurcated in two ways: exclusive supply of goods and service and goods mix or only services. When you are talking about only and only supplying the goods, this column will apply. And when you are talking about goods plus service or only service, then the second column will apply. Now, see the thing, this rows are being distributed on state-wise. First of all, Manipur, Mizoram, Tripura, Nagaland. If a person is making supplies in this state, then this aggregate turnover will be applicable. 10 lakhs, 10 lakhs in both the cases. And when the person is supplying in the states, Puducherry, Uttarakhand, Meghalaya, Arunachal Pradesh, Sikkim, Telangana, in that case, in both the columns, 20 lakhs, 20 lakhs, aggregate turnover threshold limit will be applicable. Now, anytime if that person crosses this threshold limits, he will become liable for registration. Yes, as soon as the limits are crossed, that person will become liable for registration. Now see here, you have to learn this. Yes, state-wise. See here, MMT say Nagaland. He went to Nagaland from MMT. Now, second one, Puma ST, P-U-M-A-S-T. And any states, after this states, the remaining one will come under row number 3. Now, in this third row, the limit is 40 lakhs and 20 lakhs. The limit is 40 lakhs and 20 lakhs. 40 lakhs in case you are supplying only and only goods, not a single rupees of service except only one service. Only one service we are going to apply here. Yes, we are going to allow you only one service. This is this one. Person deemed to be exclusive supplier of goods, even if received interest, discount on loans, advances, deposit. This type of service. Again, I want to remind you this thing, then that this service was also excluded in the composition scheme from aggregate turnover, state turnover, allowed services, marginal supply service. If you remember, even if you remember or not. Yes, we have also excluded this service from there. And now also, along with the exclusive supply of goods, we are allowing you this service here also. Even though along with goods you are supplying this service, we will consider that you are supplying goods only, and accordingly 40 lakhs limit will be applicable. Other than this, if any services you are supplying, then this 40 lakh limits will become 20 lakhs. It will become 20 lakhs. Now, this 40 lakhs limit also does not apply in the following cases. Number 1, when the person is the supplier of notified goods. This thing we have discussed earlier in the composition scheme. There also there were notified goods, no? Pan masala, tobacco, ice cream. Yes, remember or not? Only one product is missing here. The whole list is same. As of composition scheme, the whole list is same. Only one product is missing. There is aerated drinking water. That is aerated drinking water. Aerated drinking water is not covered under this list. Other items of composition scheme notified goods are covered under this portion. Now, when the supplier is of notified goods, In that case, 40 lakhs limit will not be applicable. So what, sir? Instead of 40 lakhs, can we get to 20 lakhs? Yes, that limit by default will be applicable in this case of supplies of notified goods. Now, when the person is required to take compulsory registration, in that case, no limit will be applicable. Either 40, 20, 10, no limit will be applicable. From a single rupee itself, the person will be compulsory liable for registration. And if taking voluntary registration, without voluntary registration, there is no sense of limit. There is no sense of limit. The person is having the mood to get registered, you get registered. Then no limit will apply. So this is all about section number 22. Now coming towards section number 23. Section number 23 talks about 4 activities where not liable for registration. Even though the turnover threshold limit is crossed, exceeded, then also these people are not required to get registered under the GST. Yes, if also the threshold limit is crossed. Number 1, person making reverse charge supply. Yes, supplier. Here the supplier, the person who is making reverse charge supply. Yes, the person who is making reverse charge supply, tax is being borne by the person who is the recipient. Then the supplier is not liable for paying tax also. On this supply supplied by the supplier, recipient is going to pay tax. So in this case also, the supplier is not required to get registered. What the supplier will do, after taking registration, all the tax is being paid by the recipient itself. So in case of reverse charge, supplier is not liable for registration, irrespective of whatever the turnover is. Now, person wholly engaged in the supply of goods or services which are not liable to tax or wholly exempt Such goods which are wholly exempt and not liable to tax, what the person will do after taking registration under GST, because the goods are not going to be taxed under GST. If wholly exempt and not liable to tax, what is the sense of taking registration? Next is the agriculturist, the farmer, to extend the supply of produce out of cultivation of land. If he is selling the agricultural produce, in that case, the agriculturalist is not liable for registration. And last one, the commission agent. When you are talking about the agent, you should see the principal. If that principal is doing non-taxable supply, or that principal is not taxable person, then why the agent will be a taxable person? So any agent of non-taxable person is not required to get registered under the GST Act. Now, coming towards section number 24, compulsory registration. Compulsory. From a single rupee of supply, you will be compulsory liable for registration. No threshold limit. Number 1, interstate taxable supplies. Interstate taxable supply. When you made any interstate taxable supply from one state to another, then you will be compulsory liable for registration, except when the goods supplied are handicraft goods. The goods supplied are notified handicraft goods, and you supplied these services. In these two cases, remember it. In these two cases, interstate taxable supply, in these two cases, you are not required to register. You will get the threshold limit. When the threshold limit is crossed, then you are going to get registered. Compulsory registration provision will not apply. In other cases of interstate supply, compulsory registration provision will apply 100%. Input service distributor, yes, again, input service distributor is also required to get registered under the GST Act. After that, CTP, NRTP, both are required to get compulsory registered under the CGST Act, yes. And in case of CTP, only one exception is there, handicraft goods. In case of handicraft goods, threshold will be given to the person supplying such handicraft goods. Next, coming towards this portion, person deducting tax under section 51. Yes, the person who is compulsory liable to deduct tax, TDS provisions, yes, under section 51 is required to compulsory get registered. Any agent of a taxable person, see, in section 23, agent of non-taxable person is not liable for registration. But under section 24, every agent of a taxable person, irrespective of the turnover, is compulsorily liable for registration. Now, e-commerce operator, every e-commerce operator is compulsory liable for registration, who is collecting tax at source under section 52. And any supplier supplying through such e-commerce operator, but Here also threshold limit benefit will be given. When the unregistered supplier has exceeded the threshold limit, then he is going to get registered under the Act compulsory registration. Here to the supplier supplying through eco to their supplier, to this supplier, we are giving the threshold limit benefit. Yes. Next, person required to pay tax under reverse charge. Section 23 talks about not liable for registration in case of supplier in reverse charge. And this talks about recipient is required to get compulsory registered under the Act. Who is going to pay tax under reverse charge? The recipient. After that, this two, section 95 e-commerce operator and OIDAR. Best example I will give for this, Netflix. Yes, Netflix, OIDAR, or online information and database access or retrieval services from a place outside India. That is Netflix. Best example. Now, coming toward the procedure part. Now, this is a very simple procedure to get registration. Now, when you want to apply for registration, go to the common portal. Yes, GST common portal. Fill the form GST REG01. First of all, in this form, you have to fill part A. And what informations are required in part A? Part A require PAN number, mobile number, email address, and state or union territory. Now, this PAN number will be validated online by CBDT database. CBDT, direct taxes. Yes, Central Board of Direct Taxes. From their database, your PAN will be validated. And your mobile number, email will be validated through an OTP. After this validation process, you will get a TRN, temporary reference number. They will send you in SMS or email your temporary reference number. As soon as the temporary reference number is generated, now you can fill part B of that form REG01. Now in this part B, what information are required? What is the constitution of business, your bank account number, jurisdiction, place of business, additional place of business, every requirement, Aadhaar authentication, yes, authorized signature, everything, every details you have to fill right now. Now, after filling part B, acknowledgement will be generated. But remember, in case of CTP, this acknowledgement will be generated when, along with part B, CTP has made a advance deposit of tax. Then only acknowledgement will be generated in case of CTP. And in others cases, no requirement of advance deposit of tax, acknowledgement will be generated as soon as you fill the part B. Now, this all the information now will go to the proper officer, and the proper officer is going to examine all the documents and application. Now, what will happen after the examination? After examination, if all this thing are found in order, means everything is okay. If everything is okay and you have done Aadhaar authentication, please listen it. If you have done Aadhaar authentication and everything is okay, then within 7 working days, you will get the registration certificate. Sir, what if Aadhaar authentication is not done? If Aadhaar authentication is not done, see, it is a very simple process. A link will be generated. Click on the link, put your Aadhaar number, and OTP will be generated on your Aadhaar linked mobile number. Put that OTP, submit it. Aadhaar registry, Aadhaar authentication is done. If you are not doing the simple process also, then no problem. Our proper officer will come to your place. He will come to your place of business. He will properly keep an observation examination of your place of business, properly verify the document, and when he properly verify that place, yes, physical verification of that place of business will be done from that day to 30 days, 30. From that day, within 30 days, your registration certificate will be generated. See, unnecessary. If you are not doing Aadhaar authentication, the time limit of getting registration certificate will be increased. So 7 working days if you have done Aadhaar authentication. If Aadhaar authentication not done, then within 30 days after site verification. Yes. And if everything is good, no problem, site verification also done, that was also okay, then you will get registration certificate in form GST REG06. In form GST REG06, you get registration certificate. Now, sir, this is the thing when the life is going smoothly and very good. What if there are hurdles in the life? See, the proper officer is not happy with your document submission or the application. Now he is going to reply you within 7 days again, or within 30 days, as the case may be. If Aadhaar authentication done, he will reply you within 7 working days, or if Aadhaar authentication not done, then 30 days. Now he is going to seek clarification, information, documents from the applicant. Now they are going to demand you more clarification, more information, more documents to make them satisfied. Now what you will do? Either reply this or not. If you replied and he is satisfied, then again within 7 days you will get the registration certificate under REG 06. But what if you didn't submitted the documents, or you submitted then also is not satisfied? Then your application will be rejected. Yes, your application will be rejected. Now this is the procedure for registration under section 25. Now coming towards the next part, CTP and RTP. When we are talking about CTP, yes, I will directly explain the things. See, for example, from one state to another state, you are going for a participation in an exhibition. In that state, you are not having any place of business. Neither you are going to visit again and again. It may happen that right now you visited here, and next you are going to visit in Maharashtra, in Gujarat. It's not that you are going to every time visit the same state or the same place in that state. Also city may be different. So this is the work of CTP, casual taxable person, who is not having any fixed place of business there, and who occasionally visits that state for the purpose of business. Now this is the same given in your definition. CTP, who occasionally, the first word, who occasionally undertakes transaction involving supply of goods or services in the course of furtherance of business, whether as a principal or agent or any other capacity, in such a state where there is no fixed place of business. No fixed place of business. I told you the same thing. In this exhibition, I have put a stall. There is no fixed place of business, and I am going to occasionally visit there. If this is done within the territory, the person is called as CTP. But if any person from out of the territory comes to India, same as CTP, he will be termed as NRTP. Again, NRTP also visits occasionally, and no fixed place of business is there. Along with that, no fixed place of business, no residence is there in India. So this is the difference between CTP and RTP and the meaning. Now, what is the requirement of CTP? Document required PAN, form REG01 for registration, threshold not applicable, composition he will not get, return GST R1 and 3B, and ITC of all input goods or capital goods he will get. ITC will get, yes. Now talking about NRTP, document required passport, form for registration GST REG09, threshold not applicable, composition he will not get, return GST R5, and ITC only on imported goods, not on other goods. Only on imported goods he will get ITC. Now some common provisions. When you want to become a CTP and RTP, registration is required at least 5 days prior to commencement of business. At least 5 days prior to commencement of business, registration will be required. Advance deposit of tax should be there along with registration. Then registration will be valid for 90 days and further extend for 90 days. An annual return is not required to be filed under the case of CTP and NRTP. Now this is all about CTP and RTP. Coming towards the effective date of registration under section 25. Now see, for example, according to section 22 or 24, today I become liable for registration. Now check whether I have applied for registration within 30 days. As today I became liable for registration. So from today, I should apply for registration within 30 days. If I applied for registration within 30 days, then effective date of registration will be the date I became liable. Yes, the date of liable for registration, when I became liable for registration. Sir, what if I didn't apply within 30 days? I have applied after 30 days. So in that case, your date of registration will be the date of grant of registration certificate. Yes, there are two dates. If you applied within 30 days, then date you became liable. If you don't apply within 30 days, after 30 days you apply, then date of grant of registration certificate. Now, coming towards the ending portion of this chapter, amendment. See, I will revise it. Amendment. There are many types of amendment. Some amendments are important one, or some amendments are not so much important. Amendment means, sir, in the registration certificate, any details I need to amend. Any details I need to amend. So what will happen? Sir, any detail if I require to amend, say for example, I want to change my address, I want to change the constitution of my business, I want to change the additional place of business, or I want to change the name of the business. So anything, if any amendment is there in my registration certificate, either it will a very important amendment or not so important amendment. If it is not so important amendment, it will be covered under the non-core areas. In that non-core areas, that amendment can be carried on by the taxpayer or the registered person itself, and amended registration certificate will be generated automatically. Now, sir, what if important areas are being amended? Core areas are being amended. Now, here the proper officer will come into action. Now he's going to verify the document submitted by you, your application for amendment, everything. And if he is satisfied, then only he will issue your the amendment registration certificate. Otherwise, he will ask for documents, and if he is not satisfied, if you don't reply to his documents, your application for amendment will get cancelled. Now, this is the procedure for amendment under section 28. Now, section number 29, we are coming towards cancellation. Yes. See, what is the process for cancellation of registration? Either the proper officer will cancel the registration, or you on your account can cancel your registration. When the registered person can cancel the registration, and when the PO, proper officer, PO, can cancel the registration. See, first of all, we'll see the reasons when PO can cancel. Yes, PO, proper officer. The proper officer can cancel the registration on his own if the registered person has contravened the prescribed provisions. If you have contravened any of the prescribed provisions, the proper officer can cancel your registration in his own account. Or when when the registered person has not filed returns for such continuous tax periods, you are not filing return, then the proper officer will cancel. Or the registration obtained is by way of fraud, misstatement, suppression of facts. Your registration application was fraud. So in that case, or if voluntary registered person, the person who has taken voluntary registration in the act has not started or commenced his business to 6 months. Now 6 months has been lapsed and he has not started yet his business within the 6 months. So the registration will be cancelled by the PO. Sir, when the registered person can cancel the registration? When the business is discontinued or transferred as a going concern, or on the death of the proprietor transferred. Yes, amalgamation, demerger. The constitution of business is changed. Earlier it was partnership firm. Now the constitution has been changed to a company, like this, or voluntarily. In this cases, the registered person can cancel the registration. Now see the procedure. Now, when the registered person applies himself, yes, on his own account, registered person, then he should apply within 30 days of the occurrence of the event. Yes, of the occurrence of the event, he should apply within 30 days, and within 30 days, will give you the cancellation order. The proper officer will issue the cancellation order. Yes, so this is the procedure. Again, when the PO cancels the registration, now here what will happen? The PO will give you an opportunity by way of show cause notice. Now, before cancellation order, one notice will be generated within 7 days of the occurrence of event. Yes, within 7 days of the occurrence of the event, and within 7 days you have to reply it. You have to reply it, and how you will reply? Either express or implied, in words or action. Either write the explanation why you are not able to properly follow the provisions of the law, why you contravene the provisions of the law, why you are not able to file the continuous tax periods returns. You have to now clarify him, either in words or silently by action. Correct yourself. If you have not filed the returns of continuous tax period and you receive the notice, silently go and file it, either by words or action. Either by words or action, correct yourself or explain yourself. If you did this, then no cancellation will be issued. And if you have not done this and not replied to the notice, then the PO is going to issue the cancellation order for your registration, and the registration will be cancelled. Now, last, Section number 30. Now what, sir? If this registration was cancelled forcefully by the proper officer, I was correct. As a taxpayer, I was correct. Or I have replied to his notice also. Then also he cancelled. Yes, it may happen. In that case, section number 30, revocation of cancellation. Means in this section, you are going to revoke that cancellation order. And ultimately, when the cancellation order will be revoked, you can now revive your registration. Yes, your registration will be revived. Sir, what is the procedure? Now, when the proper officer cancels your registration and he issue the cancellation order, now from that day to 90 days, within 90 days, from that day, within 90 days, apply for revocation of cancellation. From the cancellation order date, within 90 days, apply for revocation. This 90 days can be extended to further 180 days by additional joint commissioner or commissioner. Now, on the commissioner, when application received, now that commissioner is going to call that person and the proper officer and going to listen both. Yes, he will give the opportunity of being heard. And after listening both, he will pass his judgment on the basis of natural justice, principles of natural justice. And accordingly, if everything is correct on the registered person part, on the taxpayer part, then the registration order then the cancellation order will be revoked. He will issue the order to revoke the cancellation order to the proper officer. Now, this is all about the registration chapter. Now, this is all about the registration chapter. Here we have completed the proper revision of this chapter. Now, the next topic of this rapid revision route is accounts and records. This is a very small topic, accounts and records, and also having a less weightage of marks. So let's start with the topic rapid revision route, accounts and records. So accounts and records covers the section number 35. Covers the section number 35. Section 35 says that every registered person shall keep and maintain books of accounts at his principal place of business, additional place of business, or found at any other premises. That accounts and records will be considered of that registered person if found at any place of business. Now, section 35, registered person should maintain the books of accounts. What should be the content of that books of account? He should maintain a true and correct accounts of the following: production or manufacture of goods, inward outward supply of goods or services both, stock of goods, input tax credit availed, output tax credit payable or paid, such other particular as may be prescribed. These are the basic details that we should keep in our accounts and records. Now, again, how should we keep the records? Either it should be manually maintained or maintained in electronic form. First, records maintained manually. How you can going to maintain the manually? Manually, you have the register. You will put the ledgers and accounts, all the things, and every entry, record of every entry you are going to put manually, write manually. This is the manual format. If you are keeping or maintaining the records in manual format, each volume of books of account maintained manually by the registered shall be serially numbered. It should be serially numbered and kept in a proper form. Yes, in a proper format. Yes. Either you can record in electronic form, where 99% of the people in today era are keeping the records in electronic form. Say by way of Tally, Pisker, or any ERP softwares. Yes. Now, books of account include any electronic form of data stored on any electronic device. It may be any device, any electronic form. Records in electronic form should be authenticated by digital signature. Yes, nowadays this is also important that any record you kept in the electronic form, it should be approved or authenticated by digital signature. Proper electronic backup of every record shall be maintained and preserved. Every record's backup should be there. Such records need to be produced on demand in hard copy in electronically readable format. If in any inquiries they demand you any records, you have kept or backup, that should be presented before the authority on demand in any hard copy or electronically. If you gave, it should be in a readable format, just like any image or PDF like this. Details of files, their password, explanation for the codes, and any information required for the access. If your PDF is password protected, the password should also be given. Any code is there, that code should be given to the authority if they require any document. No entry should be erased or overwritten. If records are maintained electronically, no record should be overwritten or erased. If any incorrect entries are there other than those of clerical nature, be scored out under attestation, and thereafter correct entry may be recorded. See, if any entry is wrongly entered in the records and you are going to amend that entry, incorrect entry, you are going to correct that entry, so that too should be done with a proper attestation, and every record of that entry should be there, that earlier this entry was passed like this and we are correcting this entry like this way. So every record should be there. In case electronic records being maintained, a log of every entry edited deleted shall be maintained. In case any records being maintained, if you are maintaining the electronically records of any books of accounts, any accounts and records, there should be a proper evidence of every entry edited or deleted. If you are editing any entry, you have to keep the proper records. If you are deleting any entry, you have to keep the proper records of each and every entry edited or deleted. Books of accounts are required to be produced on demand. Any time if a notice is received that this types of particulars we want to see, that particulars in an electronic form or hard copy should be given to the proper authority on requirement. Now this is all about the books of account, that we should maintain the books of account, what is the requirement of books of account, and how books of account should be maintained. What if we do not maintain the books of account? If we do not maintain the books of account, or a particular registered person fails to account for the goods or services in accordance with the provision section 35, the proper officer shall determine the amount of tax payable on such goods or services or both that are not accounted for, and the provisions of section 73, 74, as the case may be, shall mutatis mutandis apply for the determination of such tax. The process of demand and recovery will apply, and now the proper officer is going to calculate the amount of tax to be paid on such goods and services which are not recorded in the books of accounts. So these are the provisions with the books of accounts and records. Now, there are some additional records to be maintained by some specified person. See, normally the books of accounts should give this particulars, but there are some extra books of accounts or records to be maintained by some specified person. Some extra records by some extraordinary persons, specified person. Number one, registered person. For the case of registered person, the goods or services imported, exported, supplies attracting payment of tax on reverse charge along with reward documents, including invoice, bill of supply, delivery challan, credit note, debit note, receipt voucher, payment voucher, refund voucher. These are all the invoices in the invoice chapter. All the invoices should be kept. Yes, all the invoices should be kept. If you are paying tax under reverse charge, all documents of reverse charge should be there in the record. Separate accounts of advances received, paid, adjustment made thereto. If you have received any advance amount for the supply of goods or services, you should have to make a proper record of that advances. How you received the advance and how you adjusted the advance or you refunded the advance, everything. Particulars of name, complete address of the supplier from whom he has received or to whom he has supplied. The supplier details and the recipient details should be there in the records. And complete particulars of the complete address of the premises where the goods are stored. Where the goods are stored. The warehouse, everywhere the goods are stored, here should be complete address and the proper particular records of that place should be there. All these things should be present for registered person. Now what if is an agent? Extra records to be recorded, to be preserved by a agent. See, if there is an agent particular of authorization received by him from each principal to receive such goods supply of goods or services on behalf of the principal. See, if he is an agent, some authorization has been given by the principal regarding the supply of goods or services or procurement of goods or services. So that authorization received from the principal should be a record for the agent. Particular description of the value quantity of the goods received or supplied on behalf of that principal. What goods, amount of goods, quantity of goods, quality of goods, everything related with the goods, every description should be there. Details of accounts furnished to every principal. Say any account statement given by the agent to the principal, that record should also be present with the agent. Tax paid or receipt supply of goods affected on behalf of every principal. Either the tax paid by the agent on behalf of principal for the supply or procurement of these goods or services, that should also be maintained as a record by the agent. Now, next, service provider. Service provider shall, every registered person supplying services has to additionally maintain the account showing quantitative details of goods used in the provision of service. When you are providing service, it is sure that you are going to make use of any goods. So what goods you are making use while providing this type of services, you have to maintain the record of that goods also that you are using to maintain the supply of service. That record should be with the service provider. Custodian, clearing and forwarding agent. Custodian, clearing or forwarding agent. These terms are used while case of import export. Every person having custody over the goods in the capacity of the carrier or cleaning and forwarding agent for delivery dispatch thereof to a recipient on behalf of any registered person shall maintain true and correct records in respect of such goods handled by him on behalf of such registered person. The custodian, clearing and forwarding agent should maintain the record of the goods on which he is having a custody. He is having a custody. Owner or transporter of a warehouse, godown or transporter. Whether you are a transporter, you are a warehouse keeper, you are a godown keeper, the godown keeper should have a proper record of all the goods and services received coming in the godown, which are kept in the godown or with the transporter, etc. etc. In the warehouse, what is coming in the warehouse, going out of the warehouse, issue and receipt, everything related with the quantity, the damage, etc. etc. All the particulars of the stock present in the warehouse and the godown or with the transporter should be the records which are kept with this particular person. Next, person executing works contract. Now, works contract. Under the works contract, all the particulars of the names, addresses of the person on which behalf the works contract is executed, whose works contract we are handling, the particular of that person, also the description of the value quantity of the goods which are involved while performing this works contract. Yes, details of payment of received by the supplier of the works contract. Yes, how much the payment the works contract contractor has received in the installment. Each installment should be properly described as a records. Name and address of the supplier from whom he received. Also, if the contractor for making this supply works contract has received any type of services from any particular person, that details also should be mentioned as a records. And the manufacturer should maintain each and every record of any procurement, work in progress, finished goods, etc. etc. monthly, of the data and records of the monthly production he should maintain as a record. So this is all about the extra records that should be maintained by specific person. And now the last thing, how much, what should be the period of maintenance or books of record. Every registered person required to keep and maintain books of account or other records in accordance with the provision of section 35 and shall retain them until the expiry of 72 months. Until the expiry of 72 months from the date of finishing of annual return of the particular year. So from the date of furnishing of annual return of that period, from that period to 72 months, you have to compulsory maintain all the records in the books. So this is all about accounts and records. Okay, so we have done a proper revision of the topics account and records. Tax deducted at source and tax collected at source means TDS and TCS. So let's begin this revision video. When we are talking about TDS, we should read the section number 51. Section number 51 says that central government has the power to make it compulsory. Central government has the power to make it compulsory for the following persons. These are the following persons. For the following deductors to deduct tax at source from payment made to the supplier of taxable goods or services. It means one thing is clear. Here the deductor is the recipient. The deductor is the recipient, and the deductor being the recipient of goods have to deduct tax at source from the payment is going to make to the supplier of the goods or services. So let's see who are those deductors which are compulsorily forced by the central government to deduct tax at source. See, section number 51 1A, 1B, 1C and 1D. Section number 51 1A, central government and state government departments. Yes, the departments of central government, state government or their establishments. B, local authorities. C, government agencies. And D, the notified persons. Let's see who are the notified person. Any authority, board or any authority, board or any body set up by an act of parliament or state legislature, which is being set up by the central government or the state government or any other establishment of the government with 51% or more participation by way of equity or control is with the government. See, any type of authority, board or any body which is set by the government, which is of the government, yes, set up by the government, or any government establishment in which government is having more than 51% of the right and the control of the equities, yes, that authority or board. And secondly, society established by the government or local authority or state government. Third one, public sector undertaking means public companies. These are all the three notified person under section 51(1)(d). Now, this 51(1)(a), B, C and D. These are the four deductors who are mandatorily required to deduct tax at source. Yes, and this mandatorily provision is being made by the government. Yes. So let us see, is there any person, category of person who are not liable to deduct tax? Yes. There are only two cases where no liability to deduct tax by this notified person. See the first and second. First, when any supply is from PSU to another PSU, when there is a supply of goods or service from one PSU to the another PSU, or where there is a supplier service among these notified persons. Say from 51(1)(a), any government department is supplying some goods or services to 51(1)(c) government agencies or vice versa. So in such cases, when they are supplying the services between this notified person, no requirement of deduction of tax at source. So here we have seen section 51, compulsorily the meaning and definition of deductor, the cases where no deduction of tax is required. Now, sir, if required to deduct tax, when the deductor should deduct the tax from the payment made to the suppliers. Now here the supplier is the deductee. When the suppliers total value of supply of taxable goods and services exceeds rupees 2,50,000 exclusive of taxes. See, exceeds rupees 2,50,000 exclusive of taxes as per the invoice. Means as per the invoice, if the value of supply excluding taxes under the GST is more than 2,50,000, the provisions of TDS under section 51 will be attracted, and the deductor has to deduct TDS at the rate 1% if CGST is there, or 2% if IGST is there, or 1% if SGST is there. as the tax deducted at source from the payment made to the supplier. So these are the provisions. Yes. Now see some procedural provisions. The tax deducted by the deductor should be deposited to the government account in what will be the time limit within 10 days from the end of the month. It means if any tax deduction at source has been done by the deductor should submit or deposit it in the government's account before 10th day of the next month. Yes, of the succeeding month, next month, before 10th day of the next month. This is the time limit for deposit of that deducted amount to the government's account. Now, another second responsibility of the deductor has to issue compulsorily a TDS certificate to the supplier, the deductee, and this certificate will be issued under GSTR 7A. This TDS certificate will be issued under under GSTR 7A. What will be the details of this certificate? That certificate number, GSTN of the deductor, name of the deductor, GSTN of the deductee, legal name of the deductee, trade name if any, tax period for which tax is deducted and accounted for in GSTR 7, details of the supplies and amount of tax deducted. All these details will be given under the TDS certificate issued by the deductor under GSTR 7A. What if the deductor has not submitted the amount deducted to the government's account within 10 days from the next succeeding month? If so, then penal provisions will be attracted and he will be liable for penal interest under section 50. Now, once the amount of tax deducted is submitted to the government account and the specified required return is being filed, so what will happen? What will happen? The amount of TDS will get reflected on two portals. One, the electronic cash ledger of the deductee. On the deductee's electronic cash ledger, it will be updated and return filed by the deductor. When the deductor will file return under GSTR 7, this information will be reflected in his return and also in the electronic cash ledger of the deductee. Yes, this amount will be reflected on both the sides. And the same thing as the procedure of income tax of there is of the statement of 26AS TDS certificate, like this same provisions will apply here also. Now, if any amount determined under section 73-74 of the act, then also it will be included in the return itself. Now, in case of any excess or inherent deduction, it may happen in any cases, in some cases, that the deductor deducts more tax as per required. Say instead of 2% they deducted 4%. Then if excess tax has been deducted, so the deductee will get a refund of that excess amount, and if that refund is delayed, so there is also a provision for the interest on the delayed refund under the act. Also, the deductor who is going to deduct tax at source under section 51 is required to get compulsory registration under section 24 of the act. He should take a compulsory registration under the act, then only he can have the permission of deducting tax at source under section 51. There is also the provision of registration as per the norm provisions of the act under section 29, from where he can cancel the registration also, and the registration procedure as per section 25 will be applicable to the person we want to register under section 51 here. Now coming towards the TCS portion under section 52. So see here, under section 52, the e-commerce operator, that is ECO is required to get registered and mandatorily is required to collect tax at source from the supplies made through the supplier from ECO. So here the responsibility of e-commerce operator is to compulsorily collect the tax at source on the net value of taxable supplies made through it by the supplier. Here is the word net value of taxable supplies. Sir, what do you mean by net value of taxable supplies? See here, net value of taxable supply means all taxable supply except supplies made under section 95. Yes, except supplies made under section 95, all taxable supplies minus all taxable supplies returned to the supplier. minus the returned portion. It is very simple, very simple. What are the taxable supplies made minus what returned portion from these supplies. That will be your net value of taxable supplies. On this net value of taxable supply, you are going to apply the TCS rate and collect the amount. Here there is no threshold limit as like TDS. Here there is no threshold limit. Now what is the rate of TCS? If interest rate supply 0.5% of CGST and 0.5% of SGST, and in case of interest rate supplies 1% of IGST. These are the TCS rates. Now again, as like under TDS, there was a provision of submitting the deducted tax amount to the government's account before 10th of the next month. Here also, the amounts so collected by ECO by way of TCS should be deposited to the government's account before the 10th day of the succeeding month. Before the 10th day of the succeeding month. And just like under TDS, the registration procedure here the same. The person who is deducting tax who is collecting tax at source under section 52 has to make a compulsory registration as per section 24 of the act. Same provisions apply here, and mandatorily the officer have to approve the registration within 3 working days from the date of application. Now further, the requirement of filing of monthly and annual statement by ECO. Under the TCS provision, what are the filing of monthly and annual statement by ECO? See, an electronic statement under form GSTR 8 should be filed by the ECO. See, the ECO is going to file GSTR 8. In the GSTR 8, he is going to mention all the details of outward supplies made by the supplier through using the ECO, and all the returns supplied which are returned to the supplier through ECO. So all the details of the supply, outward supplies of goods and services, and all the supplies returned through it, all the details will be mentioned under GSTR 8. Yes, and accordingly, the details of tax collected at source submitted by the ECO will be made available at the portal to the supplier, registered supplier, for claiming of amount of tax collected in his electronic cash ledger. Yes. After proper validation, the amount collected and submitted by the e-commerce operator will be available to the registered supplier to review that amount and the validation process, and at the final, his electronic cash ledger will be validated with the amount of tax collected at the end. Now, this is about monthly statement. This is about monthly statement. Also, annually, an annual statement in GSTR 9B is to be required to be filed by the ECO, and the due date is same as of annual return, that is 31st December of the next financial year. Yes. Then again, next, notice to the operator. See, when the e-commerce operator receives a notice, first thing to check is that that notice should be issued by a commissioner or an officer who is not below the rank of a deputy commissioner, and the e-commerce operator has to reply that notice within 15 working days. Yes, the commissioner should get the reply within 15 working days of whatever information the commissioner has furnished from the eco. Yes, and the last one, if the eco fails to furnish the information as required by the notice, penalty of rupees 25,000 will be charged to such e-commerce operator. And here we have completed the revision of the topic tax deducted at source and tax collected at source. we are going to quickly revise the last topic of our rapid revision route, returns. Yes, returns are statements in which you are going to furnish the details of what the transaction are, what the supplies are you have made in the particular tax period. Now coming toward the point, in this many sections are there, but the major sections are 37, 38, 39, 44 and 45. Yes, this section we are going to revise it. Coming towards the first one, section number 37, GSTR1. Now in GSTR1, we are going to furnish the details of all the outward supply made by a registered person. Yes, every registered person including the CTP is required to furnish the outward supply details in GSTR1. And the due date for the same is, if you follow the monthly scheme, it will be 11th day of the succeeding month. As soon as the month is over, the next month 11th day, up to that day you can submit the GSTR1. And when you are following the QRMP scheme, yes, when you are following the QRMP scheme, in this QRMP scheme, the date is 13th day of the month succeeding the quarter. When the quarter will end, after that day, after that quarter end, the next month, 13th day of the next month succeeding such a quarter, say April, May, June, then date will be 13th July. So this will be the due date in case of GSTR 1. In case of GSTR 1. Now, coming towards section number 38, GSTR 2 and 2B. In GSTR 2 and 2B, you will get the details of the inward supply and the ITC. And these are not type of furnished returns. These are auto-generated statement on the basis of details of GSTR 1. Yes, these are automatic generated statement. Read-only statement. Just the recipient is going to read this. Oh, this inward supplies we have made in the particular tax period, and this is the ITC details. Coming towards section number 39, GSTR 3B, most important return of the taxpayer tax period. GSTR 3B, along with this GSTR 3B, you are going to submit the payment of tax also. In GSTR 3B, you are going to furnish the return, and every registered person, including the CTP, is required to file GSTR 3B. So what are the due dates? If you are following the monthly scheme, then 20th of the month. As soon as the month is over, next month 20th. Say when the April month we are talking about, its due date will be 20th May. Up till that day, you are required to file the GSTR 3B. And when you are following the QRMP scheme, the month succeeding to the quarter, when the quarter will end, the succeeding month, 22nd day or 24th day, as the case may be, irrespective of that state in which it is applicable. Some states are giving the due date as 22 and some states at 24. You can see the states in your module itself. So these are the things: due date 22nd or 24th of the month succeeding the quarter. Now, GSTR 9, section number 44. This is an annual return and the due date is 31st December of the next financial year. But annual return is not required to be filed by CTP, NRTP, on the input service distributor and the person who are deducting tax or collecting tax under section 51 and 52. Now, last return, GSTR 10, section number 45. In GSTR 10, it is called as the final return. It means full and final settlement of the taxpayer with the department. Now, this return is to be filed, required to be filed when there is an order of cancellation of registration. In that case, the due date will be within 3 months of the later of the date of cancellation or the order of cancellation, date of order of cancellation, whichever will be later from that day up to 3 months, you should file GSTR 10 final return. Sir, nil return required to be filed? Yes, nil return required to be filed. And one benefit for the nil return, that you can file the nil return through SMS also. Yes. Now, when we are talking about GSTR 3B and GSTR 1, there are some exceptions. These people are not required to be filed GSTR 1 and 3B. Yes, they are not required to file GSTR 1 and 3B, but they have their own returns. For example, first one, composition scheme. In case of composition scheme, what are their returns? They are not required to file GSTR 1 and 3B, but they are required to file GST CMP 08 and GSTR 4. GST CMP 08, composition taxable person. Yes, in the composition scheme, GST CMP 08 is required to be filed every quarter. Yes, every quarter you are required to file GST CMP 08 and the due date is the 18th month of the month succeeding the quarter. As soon as the quarter will end, the next month 18th day. Up till that, you should file the GST CMP 08, and GST R4 will be the annual return for like GST composition taxpayer. Sir, what will be the due date? 30th April of the end of the financial year. When the financial year ended, after that 30 April. Yes, after that 30th April. So this is the case of composition. Now NRTP. In case of NRTP, GST R5. And the due dates in front of you. You can see the due date itself. No requirement of remembering it. Yes. When talking about TDS and TCS person required to deduct tax at source, or person required to collect tax at source. Now these returns I have already discussed in the TDS TCS chapter. You can refer that video for its due dates. Yes, coming towards QRMP, quarterly return monthly payment. The name itself says that you have to file return quarterly, but payment should be done monthly. Now, this benefit is available in case of GSTR 1 and 3B to the small taxpayer who are having an annual aggregate turnover in the preceding financial year of 5 crore. Yes, 5 crore turnover. If there is the turnover, pen-based turnover, then you can file the GSTR 1 and 3B opting for QRMP scheme, where the return will be quarterly, but payment should be done monthly. Now, in this case, there is one thing, invoice furnishing facility. Now, sir, what is this invoice furnishing facility? Now, in the case of invoice furnishing facility, say it may happen. Say for example, the supplier opted for QRMP scheme, but the recipient has not opted. But the recipient to our GSTR to be should be generated monthly so that he can have the credit because he is filing the return monthly. But what if the supplier is filing quarterly? Now there will be a mismatch. When the supplier is not generated GSTR1, how the 2B will be generated and how the recipient is going to have the credit? So for that problem, one solution we have one solution, that is IFF, invoice furnishing facility. We have IFF. Now, though you are filing the return monthly, no, though you are filing the return quarterly, you have to furnish IFF monthly. Just give us the details of your invoice. On this details, we'll generate the 2B and the recipient can have the credit. Yes, if he is filing the return monthly. Though you are filing the return quarterly, you have to furnish the invoice monthly. And we are going to generate the 2P accordingly on the basis of that invoice. Now there is a due date also. You have to generate the invoice. You have to furnish the IFF from the first day to the 13th day of the succeeding month of the quarter. And this you have to do only for the first 2 months of the quarter. So when we are talking about April, May and June, you have to do this for April and May. For April, the due date will be from 1st May to 13th May. And for May, the due date will be from 1st June to 13th June. And for the month of June, the GSTR return is going to be furnished in the July month itself. Yes. So for the first 2 months, this requirement of IFF is there. You have to file IFF for the first 2 months and the due dates is in front of you. So what if we will not file the return? Then fee will be applicable. Late fee will be applicable. And sir, what will be the late fee? It will be 100 rupees per day or 5,000, whichever is lower. Yes. Now, coming towards the method for QRMP scheme, either fixed sum method or self-assessment method. First of all, self-assessment method is very easy. Self-assessment means you assess your tax yourself for the first 2 months. Yes, and pay the tax accordingly. Because it is filing the return quarterly, but payment should be done monthly. But first month, second month, and for the third month, quarter will be there. Yes, your return will go quarterly. So the third month, your return will go. But what about the first month and the second month? You have to approximately calculate the tax and pay it. So you can use the self-assessment method also or fixed sum method also. If you use the self-assessment method, so in that case, you have to assess your tax yourself and pay the tax accordingly. And whatever will be the balance, you can pay in the quarterly return itself. Now, so fixed sum method. If the last month, just the last month, you are opted for monthly scheme and you paid the tax last month. So what you are going to do for the first 2 months, take the amount of the tax that you have paid in the last month. Yes. Or what if we were following the quarterly region? Yes, scheme. We are following the quarterly scheme. If we are following the quarterly scheme, then 35% of the tax paid in such a quarter, 35% of the tax paid in such quarter, you are going to calculate the amount according to applying this 35% of the amount you paid in the last quarter, and accordingly you are going to apply that amount for the first 2 months of the quarter. So this will be the fixed sum method and self-assessment method. Now the last topic, GST practitioner. Now the businessman is very busy with his business, and he does not know about GST so much. Sir, what is the return and what details are to be furnished? So they appoint a GST practitioner who is going to look out after each and every compliance under the GST. He is going to furnish the details of the returns on behalf of that businessman, that registered person. So registered person is going to appoint a particular person who is going to fulfill all the requirements of the GST, and that person is none other than GSTP, means GST practitioner. Now for GST practitioner, this condition should be satisfied. Number one, either he is a retired officer of any commercial tax department or any state or central government and CBIC, and he is having an experience of more than or equal to 2 years, or he was a sales tax practitioner or tax return preparer in some another tax acts, say CBDT or earlier indirect tax laws. He was the sales tax practitioner or tax return preparer and having an experience of more than 5 years in that particular act, registered in that particular act. Now, according to qualifications, see, if we are talking about qualifications, who are eligible for GSTP? First one, graduate person or postgraduate person, either in law, either in commerce, either in banking, either in say business administration, like this. Yes, they can they can apply for GSTP if they have got their degree from any Indian university. Yes. Next, who is the person eligible for GSTP? Any person who has completed the final examination and received the degree from Indian Institute of Chartered Accountant, ICAI, Institute of Chartered Accountant of India, yes, or ICSI, Institute of Company Secretary of India, or Institute of Cost Accountants of India. You have received your degree from this institution, then you can apply for GSTP. Yes. Now, what are the works of GSTP? He can furnish the return. He can apply for registration on behalf of that person. He can apply for cancellation for amendment on the basis of that registered person. He can apply for composition scheme. He can take withdrawal of composition scheme on behalf of that person if authorized by that person. He can file or furnish the returns on behalf of that person if authorized by that person. Yes, he can put a claim for refund on behalf of that person if authorized by that person. He can generate e-way bill on behalf of that person. Yes, he can generate the challan also. He can put money, credit money in the electronic cash ledger also on behalf of that person, like this, on the authorization given by that person. This is the work of GSTP. And how is the process of GSTP enrollment? First of all, check that you are eligible. Once you are eligible, fill the form. Once the form is filled up, now you have to apply for the examination. You have to give the examination of GSTP. Once you clear the examination, then you will be GST practitioner. You will get an enrollment number, and you will get a certificate of GST practitioner. Then you can do the work of GSTP. And this is how we have completed our rapid revision route, the last topic. So how was the journey in this rapid revision route? You have enjoyed or not? Please do comment and tell us that you have enjoyed the rapid revision route, and subscribe the channel so that we can notify you for further videos. Yes, more videos are coming before your examination, like how to solve the paper, what things you should put in mind before solving any question, how should you present the paper. We are going to solve together many questions related with your paper. So these things you will get notified if you subscribe the channel. Yes, so meet you in the next video. Up till that, bye bye to all of you.
To get this GST Bromestra, download the app, link in the description.